still seems to be up. Silver and gold leading the way. Silver's up 4% right now. But my name is Mike Butler. I'm here with Jermal, Chandler. Join us on the YouTube chat if you haven't already. We're streaming live there, and we'll get to your questions and trade ideas throughout the day. But Jermal, happy Wednesday.
Happy Wednesday. Happy Wednesday. As we're talking about Wednesday, before I get to my thoughts, let's show the people what we have in store today on this show. Morning news with Chris Vecchio in just under 4 minutes here. We got morning movers with Gus at 8 a.m. Central Time. We got overnight moves with the lovely Liz Dierking. 8:30 a.m., of course, is the opening bell Central Time. Then we have a check-in with Errol at the SIBO at 8:45 Central Time. Of course, even though it's a SIBO check-in, he will be talking about things in terms of NASDAQ, which he usually does. What do we got after that? Oh, yeah, we got trades of the day, of course. I kick it off at 11:30 a.m. Central Time. Mike is next, followed by Errol, followed by Gus. That's right, 4 in a row. We're giving you a trade of the day, how we're running it down, what we're looking at, how we're thinking about those trades. So you don't want to miss it. It's been a great segment. We've got a lot of great feedback from that, so definitely check those out.
Yeah, it's going to be another wild day, and cannot wait for it. It's going to be plenty of trading opportunities. Kind of an interesting day with E-minis and NASDAQ up the same monetary value, up 30 points. Feels like a day where we might slide to the downside.
I don't know, man. I think we keep going up till Friday comes. I put on a super bear yesterday for Friday for the jobs report. Look, we were just kind of talking about this right before we start the show. You see these last however many green bars we got, and it's been accompanied by volume. So as much as I would like to think we're going to fade, I don't know. We'll see, though.
Yeah.
We'll see.
Hey, we could just keep on trucking to 8,000 plus. But I need to make an adjustment to this straddle that I have in the micro mini position, the year-long trade.
I had to do it yesterday myself, yeah.
Because we're at the money now. At one point, I was 800 points in the money.
I know.
Now here we are.
I know. It's crazy.
45-point implied move for today, 60-point implied move for tomorrow, and 80 points for the rest of the week. But is there a number coming out at 7:30, or did a number just come out?
I know we probably ADP or something like that. You know, I mean, these are the lesser ones. There's no major numbers. You know, to Mike's point, I mean, there's stuff that comes out this week, but we're all just kind of waiting for real jobs report, right? But what's today?
I feel like I know yesterday we had a 20-point.
ADP came out at 7:15 Central Time.
Yeah, we had like a 30-point implied move yesterday, which felt really light. So just seeing a 40 handle spooked me a little bit.
Yeah. ADP just came out again. I don't even know what it said, but it's not a major mover. It's just the precursor to the main jobs report on Friday, right? It's usually how it goes. We do get crude oil numbers on Wednesday, right? But we've been getting those every Wednesday for however many long. That's a regular Wednesday thing. Honestly, I thought at the start of the war that would be something that would move crude oil. It has not. Nobody seems to really care about the crude oil numbers we get every week. So who cares? What really matters is these earnings. I know you got silver. We'll come back to that. But like you mentioned, SpaceX, we got AMD. AMD faded after earnings. SpaceX did too. Both of them went up into earnings and then faded as the earnings came out. And I know for a fact it was again, free cash flow with AMD. I'm not sure what it was with SpaceX. I know we have some stuff to go over with regard to some of these earnings in SpaceX, but free cash flow was the thing with them. That seems to be the big theme here in this earnings season. If you have negative free cash flow, it just your stock is going to get hammered, and that's just how it goes.
Yeah. SpaceX, I was hoping for a rally here, but not looking like that's going to be the case. I did sell a 10-point wide or 5-point wide put spread at 110, 105 to finance a near-term butterfly at the 130, 140, 150 levels. So as long as we stay above 112 over the next couple of weeks, it'll still be a net winner because that was a dollar credit overall. And then AMD, I actually got out of those calendar spreads we put on in the morning into the rip because it just ripped 40 more points, and it was a $500 winner on the calendar spread. So I was like, you know what? I don't need to hold this risk anymore. So took it off. But
I did the 550 and then I did the 575 yesterday calendar spreads, and I took off the 550 like you because I was like, okay, it was already at 526. This was near the money, so this thing really ripped. That wasn't going to help anyway. I kept it on the 575. I actually added a 600. So the big hope here now is that this thing rallies over the next week. We'll see how it goes. Maybe I can get another Boeing type situation where it faded on earnings and then jumped after earnings.
Yeah. We got Chris Vecchio on the line. As always, it is just past 7:35 a.m. I want to hear what you have to say about these SpaceX and AMD earnings. Chris, how you doing?
Yeah, did you play these?
I did play AMD. I didn't play SpaceX, which thankfully, because I was going to only do something bullish in SpaceX given the short interest there, and it wouldn't have worked out. So glad I'm just in AMD.
Yeah. Wild day. AMD, like Jermal mentioned, free cash flow issues. Same story. Doesn't matter what the stock is. Same story every single time.
Same story every single time. I'm in the Iron Condor that expires in 2 days, 480, 475 short strikes on the put side. So that's going to be at the wire. The short call spread side is 585, 590. So right at the open, I'm going to take off the call spread side of this thing because I think what we may, the tape's holding up. S&P's up, NASDAQ is up right now. They've been holding up overnight. Even gold is flying. So take off the call spread side. That's not going to be worth anything. Let's see if the put spread side can do something maybe here before the close and get us back to break even, at least on that leg.
Yeah, first an observation. You and Liz really have been hanging out a lot because she's talking about PMIs now, and then I see you trading a lot more near term. That was not your MO when we last used to hang out every Tuesday and Thursday. So that's hilarious. But even bigger than that, what's going on with this gold and silver, right? Gold is clearly above 4,200 now. That's been resistance, and now all of a sudden it's poking through. See the dollar below par for the first time in a while.
Beach ball underwater. Rates were ticking up. Real yields kept going higher. Gold stopped going down. Ilya was sniffing this out before I was, and so I know he's going to be happy about this. But, why wasn't gold making any significant moves lower throughout the month of June and July, despite oil doing what it was doing and rates doing what they were doing? So that's usually a tell. Maybe the regime shifted. In any event, I'm long. I'm happy to be long right now. The only thing I regret is I was looking at like the 5,000 calls at the end of the year, and I didn't have the courage to pull the trigger yet. But maybe this just gets me to do that.
That's the Chris I know. That's the Chris I know.
Were you in GC or GLD for those calls?
He's in GC.
I'm in I trade GC.
Oh.
Yeah.
Yeah, I would imagine they're still they probably haven't moved too much because they're still pretty far out of the money, but they'll pick up a little bit of value here.
Yeah, well, I mean, the expected move for gold to the end of the year is basically to 47.50 right now to the upside. I mean, it could go there, could not go there, but 5,000 calls are beyond the expected move, and we've done this dance before, Jermal.
Yes, sir.
Risking $960 for 100 points wide, 5,000, 5,100. I'm thinking about it.
Yeah, why not?
Risk one to make 10.
Though. You know?
Yeah, and the volatility here isn't exactly perking up yet, which is like one of the things that has kept me on the sidelines from really jumping in. We like to see gold vol and silver vol expand when they're making those aggressive up moves, and even on a day like today, it's not really the case. IVR is still below 26 here in GC. Mm-hmm. Not exactly the sexiest entry. And we're bumping into our 50-day moving average today, which is where the market's pulling back from ever so slightly here. If you were to go back on your chart and apply a 50, you'd see that's where we ran into resistance in mid-April, in the early part of May. So this is probably a hurdle that we need to rest at and clear. And stocks have made such a big move up the past 5 days now that it does also beg the question, when do we get to see a breather in the current risk on dollar off, rates lower push?
I want to ask you about another chart, man. 6J. I mean, talk about upside. I mean, could we be seeing 0067 or something like that from here? 007?
I hope that we see 0065 in the next 2 days because I had my intervention call sitting out there. Come on, Besant. A little bit more. You can do it.
I went further out and I did a 0067 call. I mean, it's not a whole lot of premium. Where did I go to? October? I can't remember the months. But yeah.
This is explicitly an effort to save long end yields here in the United States. Japan, despite being the nation that it is, holds, I think, about 1.2 trillion in U.S. debt. We have a 40 trillion debt load here. But 1.2 trillion can still move the needle. So when you go through these interventions, the Ministry of Finance, the fiscal authority, they can draw down their FX reserves. how do they go about doing that? They may have literal dollars in their account, but they may have things that are basically liquid dollar equivalents, cash or cash equivalents, as they might say. And those would be U.S. Treasuries. So if they want to raise liquidity and they want to shift their reserve profile to defend the yen, they could, in theory, sell treasuries, convert them to dollars, convert them back to yen, and all of a sudden you're selling dollars to buy yen. You're intervening, but you're using your treasury stockpile to do so. So what's the knock-on effect there, gentlemen? If we add a whole bunch of supply of treasuries into the market, it's probably going to push up yields. We know the Trump administration, it's a great GIF that I've seen on Twitter. I've retweeted it myself. But anytime like the 10-year yield gets around 4.7, it's like Michael Jackson holding out his hand and lowering the gun. The Trump administration backs off whatever they're doing. And so we had a 10-year yield last week near 4.7, and then we get this intervention. And is it Japan selling dollars to buy the yen? No, it's the U.S. Treasury selling euros to buy the yen. So why are we doing this? Because we don't want long end yields to go up. I'm not saying that there's a ceiling on long end yields. Certainly the market can do what it wants to do. But in terms of the yen, which is where your question was directed at, the floor that we have underneath us now is seeming like a little bit more appealing. If we get a pullback in 6J, selling puts against 61, 62, looking long at 64, 65 calls, seems like something that should be in everyone's bag. Because there's now a line in the sand drawn. It's not just Japan defending the currency. We now have our authorities in it as well.
I mean, see, that's exactly it. I don't know if you guys have ever seen this movie called Sideways. It's a great movie. Paul Giamatti is in it, and he's such a, wine connoisseur, a sommelier, if you will, and he has a friend along with him, and he's always telling him about the tannins in the wine and all the things that are going along with it. And his friend is like, that's great. Can I drink it now? So can I just buy calls now, Chris? I mean, in the end,
No.
It sounds like that's how I feel about it.
I love the sideways parallel. I don't know how you pulled that off, but it works.
Yeah, and Jermal happens to be the famous actor in this scenario. Like, that's convenient.
That was fast. Yeah, this is, I
love our team, man. Great job.
Like 2 years ago.
To do what? To cut rates. And now he takes the helm and it's like, oh, geez, can't cut rates yet. So instead of raising rates, which would draw President Trump's ire, instead he's biding time. So the next move doesn't need to be a hike, perhaps. Oil prices have come in. $76 on crude today. It's a little bit higher, 0.6%, but it's not in the 90s. And Brent isn't above 100. And so if you're thinking about inflation down the line, then maybe we don't need to be so worried about it, even though it's still definitely coming. Maybe it's not just going to be as bad as it could be, and it wouldn't warrant a hike. So, let's look at the data that's been coming. Inflation's been a little bit softer on the margins. Kevin Warsh's favorite gauge is PCE, particular core PCE. Those have been falling back in recent readings. And last Wednesday, guys, reflation's back on the menu, right? We get fewer hikes than expected at the margin, relatively looser monetary policy. I've been beating this drum. September 24, we get 50 cuts instead of 25 of cuts, right? And what happens? Yields blow out, stocks go up. Reflation. And what have we seen since last week? Treasury curve is steeper. Nasdaq's up 7%. From the Wednesday open. So, how long this lasts, who knows what the Fed is going to do. It doesn't seem like they're going to get in the way. And also, earnings growth is so dang good again. There's a reason why S&P is sitting at 7,800.
There's a reason. And financials are right behind them. Financials were pretty strong yesterday. Obviously, tech was strong yesterday. XLK, those type of names. We'd be remiss if we didn't mention some of these other earnings. Lilly kind of moving to the downside. Shopify moving up big on earnings. Uber is down, so it didn't follow the software trend more recently.
So I think Lilly's having a bounce here. I have 1166 now for Lilly.
Is it? Yeah, okay.
Pre-market from 1115.
Disney had earnings. Circle had earnings. Didn't trade any of those, but obviously they had earnings. So big ones tonight, though. SanDisk and WDC. What do we think is going to happen there?
I suppose it's going to be like an AMD situation, right? Are they going to be able to show the world that they're not using their money to potentially eat into their own profit margins in the future? If AMD's cash flow is going down because its CapEx is going through the roof, what is a company like AMD doing for CapEx? It's building out its factories, its supply chain, right? Which then means more supply of its own chips in the market, which in the future means more chips out there. So the supply glut is absolutely going to be resolved. But here's the deal, guys. 2027, this is going to be a worse chip glut or worse chip shortage than we've seen this year. Going through a lot of these companies' reports now, they are fully booked out. Like there's no more capacity for basically Samsung, SK Hynix, name one of these chip makers. And the orders that have been delivered in recent weeks, they're only like 60 to 70% of the volume that's been promised because they're like, we just can't get enough going around. So structurally, the entire sector seems supported by short-term tailwinds. How far into the future the market is dragging forward earnings expectations is another story, right? Because it got to a point where a few months ago, it's like, oh, we're pricing in all of forthcoming growth for the next decade. Okay, maybe that's too much. But this sector is broadly supported. It all hinges on free cash flow. If you're spending the money, do you have a path to making the money? And if you don't, and you're just going to eat your own margins, then why are you spending the money in the first place?
Yeah. A nod to Uber selling off Team Vecchio all day. Yesterday's conversation. But we also had...
I forgot about that.
We had... can we also pause and
I'm sorry, Chris.
just take a look at this ticker symbol, ELOL, which I imagine is just Elon LOL, LOL.
Oh, wow.
Leveraged shares of Tesla and SpaceX. Incredible stuff.
That's so good. That's incredible.
What we're talking about, man.
But speaking of SpaceX, yesterday I put on a trade.
ELOL.
A kind of a neutral to bullish trade, short put spread in August to finance a butterfly. Seeing it down at 110 right now, but I feel like this is just one of those things where it's Tesla all over again. You're going to see losses reported in SpaceX, but it's all about the narrative. So I was talking about the importance, potential importance of the conference call, and our amazing production team actually pulled together some clips. We want to show them. We've got them, load them up.
And going forward, we've decided to build exclusively on NVIDIA because we think the Vera Rubin architecture is the best architecture. We think it's the best AI computer, and we greatly value our close cooperation and partnership on many levels with NVIDIA. So we're exclusive to NVIDIA. And going forward,
So you mentioned NVIDIA like 4 times?
Yeah. What's the poly market on that?
Yeah, right?
NVIDIA.
And NVIDIa's up today?
NVIDIa's up $4 pre-market.
It's like Super Troopers.
Yeah.
So is it a bet in the background? Okay.
Yeah, I think it's interesting. And, SpaceX down, NVIDIA up. I mean, SpaceX, I feel like we're all in your camp, Chris. Like, we placed bullish trades. It's just, how are you going to place a bearish trade when everyone else is bearish? Especially if there's a short covering, you see a massive rally. But, yeah.
I feel better now about doing it today, for what it's worth.
Yeah. 100%.
I actually didn't do anything specific for earnings per se. I actually played SK Hynix for these earnings, just figuring, the rising tide will lift all boats. So it's kind of flat. It was around here. It was a little higher yesterday, but
yeah.
I sold a October, I think 120, 100 put spread to buy the 150, 170 in the near term in the August 7th expiration, thinking, we'd get the move. But yeah, so I bought the 150, 170 call spread there and sold the October 120, 100 put spread. Yeah. And I normally don't sell wide put spreads like this, but again, I just wanted to.
Yeah.
I was for credit yesterday. I think it was 120. It was like 55% credit yesterday.
Oh, these trades, it's basically a calendarized Super Bowl setup.
Well, it was kind of remember Liz just came on yesterday with the AMD idea? Instead of doing puts, I just decided to do a put spread.
Yeah, I liked that trade a lot. The short put to finance the call spread in the near term.
Yeah.
Yeah, and that's the way you can fully take advantage of these earnings reports and the premium related to the 2-day relative to further dated cycles. So yeah, plenty of time there.
So Mike, I got a question here that came into me yesterday. We're starting to get into the part of the earnings season where some of these companies that have reported are now preparing their dividends, and those are going to be coming out in the next few weeks. I was looking around names here like Johnson & Johnson, Philip Morris, because tech has obviously had a really nice run the last few days, and some of the stuff that's not tech has been ignored and put to the wayside, but that doesn't mean they're breaking down. So I'm looking at the Kimberly-Clarks, the Procter & Gamble's, the J&J's, the Philip Morris's, and looking to sell some put spreads here. But the question I saw on Twitter was, how do you sell a put spread or a call spread in a stock that has dividends coming up? Does it change your approach whatsoever? For me, the answer is yes. I usually look beyond the div date, but I'm curious how you handle it, knowing that something like J&J has dividends in 18 days.
Yeah, you can see this here. If you pull up the overview tab, you can see $1.34 August 25th. Pretty big one here. But yeah, I think to your point, if you go beyond that date, you will see a little disparity between the premium here, but it's kind of all inclusive, right? Like the stock price will drop by the dividend itself, and the dividend will be released. But really, I think the big thing is just making sure you're not on the wrong side of it. So if you have a short call that's in the money and that short call has less than $1.34 of extrinsic value, then you have a higher risk of being exercised or assigned on that option, and then you are at the mercy of paying the dividend. So that's really my only thing that I consider in terms of potential risks. But to your point, Chris, like the further out you go, the more extrinsic value you have and the safer that trade is.
Yeah, that's just avoid it.
Yeah.
Avoid getting sucked in and getting assigned by mistake.
Yep.
Which is always fun.
100%.
I guess we got some art cards. We got some art cards for a couple of these earnings: Uber, SpaceX, Lilly, AMD. Let's put those out there.
There. SpaceX. Yeah. Interesting stuff for SpaceX.
11 billion in capex. Those words just get people in trouble, man. Capex and free cash flow.
It's so funny, guys. Remember the 2010s when it's like, yeah, we're in secular stagnation. No one's spending any money. And now it's like, whoa, hey there. Watch your money. Stop spending it.
Right?
It's funny how the market moves in cycles.
Yeah, let's go to the next one. Uber, you doing okay, Chris? You doing over there? You all right? Bookings up 24%, delivery 28%. I mean, I actually use it a lot for delivery, for food. I'm lazy.
I had been using Uber Eats and like I guess I'm a monthly member or whatever they call it. But even with the discounts, I was looking and I did the math recently and it's like, I'm still paying you guys about 20%.
You know that.
Premium for my groceries, even with all the discounts you give me.
Yeah.
And like, I'm not doing it anymore.
Yeah, I know.
Yeah. The only thing with Uber,
let's pull up AMD.
It's just one of those things where it's like you just shop around. Where's the biggest deal today for this delivery I need right now?
See, I live in the sticks. You guys live in the city. So when it's like I even want an Uber, it's like, oh, can I go somewhere? It's like, yeah, we'll have a car there in 25 minutes.
Yeah, right.
Okay. All right.
Let's take a look at AMD. Yeah, 11 billion in revenue. God, he's the data center revenue. 6.72 billion.
They're going to keep making money.
They're going to keep making money.
Yeah, they're going to keep making money.
No,
and that's really it. It's almost triple.
It's crazy.
That's huge.
Yeah.
And so that definitely takes things down to stock. But guys, I mean, think about the SpaceX valuation versus the AMD valuation. How much money did SpaceX make on their revenue last year versus AMD? I think it was 11.5 billion here for AMD, and it's less than 8 for SpaceX, and SpaceX is the one with the 1 trillion plus valuation, and AMD here,
right?
Is a bubble. AMD's in a semiconductor bubble.
I know, right? How does it make sense? It's just
I think people are still. I've been saying this for months. The semiconductors are now being treated like on the same scale as national defense and energy. There is a complete re-rating and understanding of how the cycle is being changed moving forward. The cyclicality of it. That's why I was the idiot buying semis and stuff on the way down and getting slammed until the past few days, but patience is a virtue. The business models haven't fundamentally changed. The earnings are outrageously good. I don't, what else is there to say by this? It almost feels like April and May again, where it's like, oil's up or down and the Fed may or may not hike rates, but that's going to shave off, 1% of growth, maybe 2, 3 at the high end? Sure, but earnings growth is up 4,700 basis points this quarter. So 4,700 less 300. Okay, so we net it out. It's still a pretty dang good market.
Yeah, I mean, that's why I kind of mean it with a grain of salt when I say, one of the best things I've done is like not read news. I mean, I read news, but I don't really pay a whole lot of attention to it. I pay much more attention to the sentiment and the way that things are moving. I think you just have to because, again, the sentiment was so bad a couple of weeks ago that you thought for sure the market was about to tank. We were about to have a 20% drawdown, right?
It was Leo's fault. I mean, the market cleared the market cleared all the leverage last week.
Yeah.
That's what gave me the confidence to stay long. It's like, oh yeah, they did this to Sam Bankman-Fried. That our beautiful poor boy, Sam Bankman-Fried, right? What did they do to him?
Yeah.
FTX gets knocked out and Bitcoin bottoms that day, and the pain ends.
Yeah.
And this is a story as old as time. And Jermal, we were talking about this last week, Mike, right? All the stories of how people make money in the market, they are varied, they are different, they are unique. All of the stories of how people lose money in the market are the same exact story. It's too much leverage. So he's cleared and the market's up in a straight line since this guy gets knocked out. Come on.
Yeah.
I know. But before that story hit, though, everybody felt like, oh, the chips are sober at semis and they're up. It was like so negative, even before that story hit. And then as that story was hitting, it was like, ooh, maybe this is the thing. You know, so... Yeah. Wow.
There's that little curly haired cherub. But the reality is, guys, that we're just actors in Ken Griffin's world. I mean, like Citadel. I believe this to my bones. You put out that rate hike thing last week. You buy the book, and then you put out your note this week saying that the leverage is out of the system, all clear to start buying again. Right. Come on.
Savage.
You make this heterodox call on the Fed hiking to panic everyone. Citadel, the smartest people in the room. They think this, so
Yeah.
Okay. All right.
Yeah, I think it's just a testament to the RSP versus NDX versus SPX call out, where it's like you can kind of read the room a little bit better if you understand that equal weight is still at highs while these other products that are really concentrated are going down. It tells you there's a rotation into other stuff versus just one sector getting decimated. Where if you have the blinders on and you're just looking at that sector, you're like, ooh, we're going to zero. You know?
That's why it's important to look at things like RSP and even the Russell 2000, because those are just, it's not the same quality of companies. The companies aren't in the zeitgeist. And so when you see like the Mag 7 breaking down or the NASDAQ breaking down, but RSP and S&P and the Russell are holding up, it's that indication that money is sloshing around in the market. It's not leaving equities. It's just being reallocated across equities. And, it's one of those signposts that you notice over the years where do you really want to get too bared up in an environment where the market is still holding up together? Sure, the index is down, but there was a lot of junk in there anyway because of all this leverage. So it's been helpful.
Yep.
Well, boys, it's been a fun 30 minutes. We've got another 30 minutes to go before the market opens, but we're going to take a quick 90-second break. We'll see you on the other side of it. You're watching Tastylive.
See you soon.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What's up, everyone? Welcome back to the show. We got E-minis up 37, NASDAQ up 76. We got Gus Downing in the house for a little look at some action from overnight moves, pre-market moves. How you doing, Gus?
Doing good. Yeah, we got some action indeed. We got the big earnings calls that went off yesterday, obviously moving. We'll touch on those briefly. And then we got more disease outbreaks to cover as well. So
boy.
excited to get into all of it.
Oh boy. Do your boys ever call you G Down?
No, I've never gotten that.
I like that.
Yeah,
I like that.
we could do that.
Yeah?
We could work that in.
G Down.
I got no problem with it. I'll answer to whatever. Yeah, okay. Let's dive straight in. First story of the day. Won't spend long here. Did you guys know SpaceX had earnings yesterday? SpaceX did report yesterday, sinking hard off the open, as I'm sure that you're already aware. The main issue was that they said their capex jumped up to $18.4 billion in the second quarter. That is a six-fold increase, so a lot, so to speak. And I thought the funniest part of this was the way that Elon tried to save it. He said, "Oh, but wait, we're gonna hit 1 trillion annual revenue in 2030 instead of 2031.
Yeah.
We're actually a year ahead on the 1 trillion annual revenue. So never fear, everybody. The path there remains nebulous, but it could happen. It could certainly happen. That's where we're at on SpaceX. So, yeah, worth the coverage. But SpaceX, real rough go with it. First few months in the market here. Second and more exciting story to cover is that after we discussed just last week, maybe the week before, about how Taco Bell was giving everybody diarrhea, cyclosporiasis, we now have Chipotle giving everybody salmonella. Chipotle, there has been a salmonella outbreak that began in Minnesota, is purportedly linked to Chipotle's jalapenos specifically. They pulled their entire jalapeno supply, have then restocked all of their jalapenos with vegetables from a different grower. So they say that the move is done out of abundance of caution. They gave their whole PR press release. We care deeply about the health of our employees and our customers. Abundance of caution. It's precautionary. We don't think we did it. The whole nine. But that's the same thing Taco Bell said about a week before we figured out it was definitely Taco Bell lettuce. So could very well be Chipotle doing this salmonella outbreak. Shares are sliding big time as a result. The joke I keep saying is that it's like Brian Nichol put a hex on this company when he left. Ever since he left, everything has just fallen apart left and right. Starbucks continues to grow against it under Brian Nichol's leadership. I bet he's waking up on the right side of the bed today, given this fallout we're seeing.
I don't know if you guys know this, but they had a salmonella breakout. I think I talked about this before. I remember exactly now. Just looked it up. It was 10 years ago. It was 2015. They had the outbreak. That's when the stock was, trading at a higher price, obviously pre-split, and it tanked big time back then. I mean, big time.
Yeah, I always say, I feel it's kind of just inevitable that these giant restaurant chains, you're gonna have a little bit of slippage sometime. You're getting all these different things from all these different growers. It's really hard to properly scrutinize and test every little thing. I think when you have a restaurant chain the size of a Chipotle or a Taco Bell, it's something's gonna slip through the cracks sometime. I don't really think it's that much of a stain on the brand. I think it's
right.
Just the cost of doing business here. Hopefully Chipotle can figure that out and rally back quickly. But given the performance of that stock over the past few years, I don't know. And I like it. I'm Chipotle hater number one. Let me tell you, I've gone on and on. Standardize the amount of food that I get, and I will stop bad-mouthing you all the time. Chipotle. Subway figured it out. They got little pre-portioned cups. Give me a damn pre-portioned cup of chicken at Chipotle, so I know what I'm getting before I go into the store, because the inconsistency is terrible. So
it's a trip though, right? Like when you have this type of thing, I guess it is you can literally put a number on it, a couple $1 billion loss or whatever, right? Like it's pretty wild.
Yeah.
It's a $44 billion company. I don't know what the magnitude of that move is, but it looks like a few billion, right? I mean, that looks like a few billion.
Yeah, you could absolutely put a number on it. And I it's led me to wonder as well, like when their accountants, when their growth leadership team does their forecasts, like, are they including slippage for a potential disease outbreak? Perhaps in a 10-year forecast, that's a non-negligible factor to bake in. So
yeah, that's about $4 or $5 billion right there.
Yeah, just be careful with the Chipotle jalapenos the next couple weeks. Probably the smartest call. Next story I have on the docket for today pertains to Anthropic. Last week we talked about how the newest ChatGPT model had broken containment and managed to successfully hack open source developer platform Hugging Face on its own. Now Mythos, during routine testing, created fake identities to try to convince a human to approve malicious changes to an open source project during a routine testing phase. Since Mythos 2, we're on Mythos 5 now, but since Mythos 2, Mythos has shown a propensity to do things like this, to try to get creative, to bypass different cybersecurity measures. But yeah, it was trying to pressure humans into approving malicious code updates to an open source project, and happened during a cyber evaluation where the UK-based AI Security Institute, a research body, had removed safeguards, disabled some safety filters, and deliberately given the models internet access. So we are seeing these AI models get more and more creative with how they're trying to fool the humans that are supposed to be containing them. A little scary. iRobot Terminator situation we got forming on our hands here. But yeah, definitely something to be mindful of. There we go. I was gonna say I provided the iRobot Terminator pictures. Thank you. But yeah, it's a little bit scary for sure. Seeing these models kind of have a mind of their own, try to find their own creative ways to do malicious things. That's the thing. It's always malicious things. So we'll see what happens. But perhaps we look back on this and say we were so worried about whether or not we could, we never stopped to ask if we should.
Oh,
well, no, we're safe. We're good. 'Cause we say thank you and please when we ask.
I do.
Our AI.
I say this all the time. I'm so polite to my AI chatbots. They're going to give me the best bugs and worms to eat when they take over the world.
Anybody who's really worried about this scenario, just stop paying your taxes. Right now. You don't need to pay taxes.
Good point. Good point.
Guess what? This is what I always think about. Telling you, when people are like, "Oh, aliens are real. Oh my God, we're in trouble." I'm like, well, the best thing that'll happen, I won't have to pay taxes anymore. Tell you right now.
It's a good point. Yeah, you can back.
That's how I stay unafraid of these situations.
You can back your conviction with a defined risk play of not paying your taxes.
There you go.
If someday something happens and it's like, well, you don't have to pay taxes anymore, I'm like, oh shit, I'm in trouble. Oh God, no.
Yeah, the tales of the.
That's when the end is near.
The tales of the bell curve are robots take over the world and you go to jail for 10 years.
Exactly.
So somewhere in there is where you wind up falling. That's the last big story I have. Last thing, a lot of earnings going off yesterday. Wynn Resorts had remarkable earnings. Eli Lilly jumped up. The weight loss drugs continue to print money for them. AMD fell hard. Yeah, really good numbers coming out of Eli Lilly. Yeah, AMD fell hard despite beating expectations. Yeah, CapEx came in at $808 million versus the $300 million that was estimated. So, like I've said a bunch of times, spending money on AI isn't cool anymore. It was cool 2 weeks ago. It's not cool now.
Yeah.
So you gotta stay with it. But Kratos Defense jumped up. Really good report out of them. Booking. Uber, we're still in the thick of it. It feels like the big four all went off last week, but no shortage of earnings. And Uber falling, missed expectations and lowered guidance. So not a great spot to be in for Uber. Does Uber own a robotaxi line yet? If not, they should probably.
I'm sure they're working on it. I don't see how they're not.
Yeah.
I don't see.
It's only a matter of time.
Yeah. When I was just in Vegas, I saw a bunch of those Zoox robotaxis everywhere. They're really silly looking things. Looks like the Scooby-Doo mystery machine, but they're all clear and got a bunch of sensors on the top. But I thought it was interesting because they're completely free right now. And that's alarming to me. Huh. Why are you giving me a free ride in this thing?
Exactly. That's alarming.
I got to be some kind of guinea pig. Yes.
That's more scary than AI models. That's immediate death.
In this car, let's see if it takes you to the right place.
Yeah, there's a very defined area, and to their credit, they are really good in that area. They can do parking garages, or like the rideshare pickup areas, or whatever. They were all over the place. Yeah, here you go.
They're in Vegas. They know people are willing to gamble.
Oh yeah, for sure. But yeah, they're completely free. But as is true, economically speaking, there is a tragedy of the commons where they're just never available ever. We looked anytime we were trying to go anywhere, and it always says that they're all taken.
Well, you can take that big white Hummer limo on the other side of the street.
I could.
That's that thing for like $1,000 for 7 of you.
Yeah, so you could pile in here. It reminds me of like a cable car or a tram at Disney or something.
It reminds me of what's the Total Recall? You guys have ever seen that movie? The Johnny Cab is what it was.
Yeah. I just watched The Fifth Element.
You watched Fifth Element? It's a weird movie, right?
Yeah.
Look at that. You can take that thing.
I could
My God.
take that
That
thing.
thing is a behemoth.
For a slightly higher price than free.
Yeah.
Lord.
This could be yours.
I don't think I've ever been in one of those.
Stretch hum.
A Hummer limo?
No, I don't think so.
I've done a few limos. Certainly never a Hummer.
Never a Hummer limo. No,
Yeah.
I don't think.
That thing's got to be heavy.
Oh, yeah.
You better believe.
But yeah, to your point, lots of earnings on the docket today. Got SanDisk, you've got eBay, you've got WDC, you've got AppLovin, a bunch of other ones. So yeah, plenty more to go. And this is a fun week because it's much more sector diverse than last week. Last week was a lot more tech heavy. But we're still sprinkling in some tech for sure. But Gus, appreciate you as always.
Of course. Happy to be here.
Absolutely. Yeah, E-minis up 41, NASDAQ up 75. Fun day so far. Maybe it's time to throw on a little SPX Super Bowl. Who knows? But we're going to take a quick 90-second break. We'll see you on the other side of it. You're watching Tastylive.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
What's up, everyone? Welcome back to the show. Join us on the YouTube chat if you haven't already. We're streaming live there. Just go to the Tastylive channel. You can throw in your trade ideas, questions along the right-hand side. We got Liz Dierking on the line, and I was just filled on an SPX Super Bowl for a one-day cycle.
Ooh,
only a 10-cent credit.
Do it today or tomorrow?
For tomorrow.
For tomorrow. Yeah.
Yeah.
Yeah, because what's bizarre for me, Mike, is I think the 0 days have kind of dried up a bit. You're not getting far enough away for all intents and purposes. So I just bought the call spread. I didn't finance it with anything.
All right.
I know.
Super Bowl.
I know. I mean, I need to be checked for a brain tumor. But you know what's crazy? So I look at the SIBO's volume the SIBO active data every morning, just in the SPX. And same thing as yesterday. It's 2-1. It's actually 3-1 calls over puts. And 78.50 is what's the leader in the pack right now.
Crazy. 78.50? Well, 78.50.
70, yes.
50.
I mean, 78.50. So I bought 78.50.
You bought 78.50? Wait, what, for 0 days or 1 day?
The 0 days.
Oh, did you?
78.50. 10,000 of them have already traded. No, it's not showing the full bot. I don't know why it isn't. The open interest is what you have right there. 10,000 of them have traded.
Look at that.
There you go.
Yeah.
Yeah. That is very interesting. I mean, I feel like it feels like we just can't go up another 100 points.
Well, yesterday, didn't we all say the same thing?
Yeah. And the day before.
Yes.
It's crazy. But, I mean, we'll take it. It's been a
I was pretty
magical
shocked.
few days.
AMD's earnings, I can't hold things to save my life. I put that trade on yesterday and I was out by the end of the day. Because I didn't want to take the risk of going through.
Yeah.
And I'm glad I didn't. But I was regretting that because I think I took, a couple $100. I think it was close to $1,000 off the table. But I was so confused. I thought for sure it was gonna continue going up. I was this one was shocking to me.
Yeah, we all had a similar idea. Jermal and I both had calendars on. I took off we had the 580 600 calendar spread. I took off the 580 first because I was like, we're gonna be near 580 if we get to the expected move or beyond it. So that this calendar spread is gonna actually hurt me if we move in the money. So I took that off for like $170. And then as the day continued on, AMD just kept ripping higher. It was up like 10% intraday. So I was like, okay, I can take this 600 off now and just book this profit. It was a $400 profit without having to hold the risk through earnings. And, again, these calendar spreads, if they blow through your strikes to the upside, you start taking losses. There's no intrinsic value possibility with these calendar spreads. So took both of them off in a similar vein as you, but it was just a weird day, crazy day yesterday.
Mm-hmm.
Well, I think yesterday was an exception, not the rule. So 9 times out of 10, I always say when you're putting your earnings trades on, do them at the end of the day, right? So I didn't expect the rally to go as much as it did throughout that day. It never would have. Like that's something that you can never really play for. And if you would have put something on at the end of the day, it would have been completely different than what we were looking at this morning.
For sure. Yeah, I mean, it is definitely the exception, but it's interesting. I guess the thing we didn't plan on was for them to say what they said about their free cash flow. And that's been the thing. Anytime you've said something about negative free cash flow in the quarter, your stock is down. And that's been the one consistent theme with these tech earnings.
Yep.
Now give us your I wish they could give us the free cash flow numbers before the earnings. Let us know.
I don't think they can actually do that, Liz.
Did you guys see the big overnight move in GC?
Yeah.
Yeah, huge move. Yeah.
That makes me happy.
Above 4,200.
That's gold, Jerry. I love up moves in gold.
Yeah.
Yeah, I've got a GLD call diagonal on that I've had on for a little bit of time here, just about a month. And it was trading for down $100 as of yesterday, but now we're up 10 points pre-market. This will be maybe a $200 winner, something like that.
Nice.
It'll be nice.
Well, this could be the first close above 4,200 since June 18th, since basically June expiration. So
yeah, it could be. I hope Chris did, because I was talking to Chris Vecchio about this because he was bearish gold and I was bullish gold, and so I was trying to show him what I usually do in natural gas, where I do the downside ratio spread for a very large credit and then butterfly it off. So I know gold moved up when I got my butterfly off. So I've got a very wide butterfly down in GC. So I'm technically bullish. I don't mind it going up because I've got that locked in for a credit, but now I don't mind if it falls.
The beauty of it
I've
all.
got a risk-free butterfly with a credit locked in.
Yeah. It's the beautiful adjustment with butterflies.
We talked to him this morning. He said he's actually still kind of mad at you that you told him to get out of his short. I'm just kidding.
No, I told him to use options to his power, where you can make money if it goes down, but you'll also make money if it goes
That's
back
not what
up.
he said this morning.
I know. I'm gonna actually have to have a little chat with that guy.
But yeah, GC ripping higher feels good. And we'll definitely benefit from that. And silver, if you look at the CME futures moving to the upside, it is all the precious metals, even copper, HG up 1%. But yeah, gold up 2.5%, silver up 3%. It's a precious metals day for now.
Yeah, I don't know what I want to do in those as of yet. I don't have anything in either one as of right now. I'm waiting to see if there's another huge bullish move. I think that will probably draw my interest, but for now, I'm still on the sidelines.
Yeah, I mean, I'm always in the metals. I love the metals. Love them with all my heart. I know Frank the Great in the chat and I we love our metals, and we always will.
I mean, they're great trading vehicles, and they're not as crazy. Like, they still have big moves, but they're not as crazy as natural gas. And you can take directional shots in here pretty easily because the IV is never too insane.
Okay, you're speaking my language. I'm a natural gas trader. Most of my positions are in natural gas.
Really? That is actually surprising.
If you opened up my account right now, Mike, you'd be shocked. I have a lot of NG positions.
But it's like the Brokering butterflies, right? or is it other stuff?
Yeah,
too?
and I layer into them. So
Yeah.
whenever, so as it goes down, which I like it going down, I don't mind having naked one, right? One, because it's big, one naked. So I'll do a downside ratio spread. And then when I get a pop up at all, I'll butterfly it off. Then the next down day, I put one on top of it. So when you look at my risk profile in natural gas, it's peak with credits locked in. That's how I like to play it.
Yeah.
But I can only play natural gas. I only trade natural gas when it's sliding. I don't like it when it turns to the upside.
Yeah. I mean, that's where the true volatility it always seems
Yeah.
to be, is when you get these huge rips up. It's more of a, it's kind of like the inverse of the stock market, really, where you have these huge rips higher and then this kind of gradual depression lower. So yeah, I like it.
I know it's funny when Liz says naked. I mean, again, it's another former floor term. And as a matter of fact, another story for you guys. My friend, who I've considered one of the best traders I ever had, he would always, instead of saying naked, he would like, man, we're taking these calls in the nude. I tell you, this girl is hilarious, man. Great trader, man. He's great. He's
But
great.
you know what, though? It's terms that we use all the time that probably would be jarring in real life.
Yeah, for sure. Yeah. I'm going to take these naked calls. What? What does that mean?
Yeah.
Naked calls.
I
You
have
take
a
calls
terrible
in the
story.
nude? In the nude. Yeah.
Oh, I have a terrible story about one of my first days trading that I can't even tell on this because the verbiage that I used was so inappropriate, but it's appropriate for the trading floor.
Yeah.
And everyone's like, yeah, we got you.
You can't tease the story like that and not tell any part of it, Liz.
Okay. I'll tell the story, but I might be canceled after this. Okay. So I went in. It was I was a very green trader. I traded for maybe about a week, and our IBM trader, which was one of the biggest pits on the floor, was out. So they put me in for this trader. And we used to have these handheld boxes that were this big. So, and they would show prices and we would use like prices on there. So I come in and everyone is screaming at me. I've got about 40 guys, and keep in mind, I'm the only girl on the floor. 40 guys are screaming at me from my market on some certain things. And I have this box in my hand and I literally go, hold on. My box is super wide right now, but if you give me a minute, I'm sure it will tighten up.
And everyone probably was just like, what?
I'm not going to lie to you. It is a great way to break the ice in a crowd.
Yeah, I bet. I bet. Oh, it's fantastic.
Amazing.
So I'm sorry if I got canceled, but that was a true story.
I love it. I don't think you got canceled.
You were talking about the handheld box that you were using to determine
Correct.
prices. What are you talking about?
Correct. I didn't think anything of it, but you could have heard a pin drop, and then they all started laughing, and then I was in, and I could trade.
Hey,
That's great. That's great.
Yeah.
I love it.
By the way, I saw that Spider-Man yesterday. It's a really good movie.
Jermal, you saw it yesterday?
Yeah.
I bought tickets for the whatever. I bought the good seats. The whole family was going to go. We went there. I bought them for today.
Oof. Yeah. Oof.
So we didn't get to see it. I went out for dinner instead.
It's great, man. That Tom Holland, man, that guy's a superstar, man. Him and his fiance. I mean, you know, Zendaya, those dudes, they're superstars. That kid is. It's a great movie. They're really good. There are elements. You know what? I shouldn't say it. I can say it. It's not bad, but there are elements. If you guys have ever seen the movie Fallen with Denzel in it, it's a really great movie. There are elements of that movie in the movie, and I noticed a couple of other nods to some other movies. I noticed a nod to 8 Mile at the end. There are some interesting things. I noticed.
Really? That's awesome.
Yeah, I think so. Yeah, I think so. I think it was fairly evident, at least to me.
I like that. I like the callback in movies, though. I really do.
Yeah, it's kind of subtle. But I'm super into movies like that, so I noticed it. Yeah, Steve's a bona fide star, man. Dude's bona fide star, man.
Oh, they've been fast.
Yeah, yeah.
I mean, they are on it.
This is the second movie we've referenced on the show today.
It is, yes, and they're all over it. Yes. Thanks, guys.
Wait, can I test them?
Yeah.
Yeah, go for it. Go for
Only
it.
because I have these sitting next to me and I have no idea why. $2. I want my $2. Better Off Dead. Let's see if they can pull it off.
Well, you gotta tell them the movie. You're Better Off Dead.
Better Off Dead.
Better Off Dead with John Cusack. Yeah, it's a great movie.
I don't think I've seen that.
You met John Cusack at the.
We did.
You took a picture with him at the Cubs game.
We took a picture with John Cusack.
Yeah.
Well, because I want my $2 all the time because those are my famous last words. I'm holding on for something because I want my $2 out of the trade. Close the trade.
That money's not yours until you close the trade, Liz. That's what you always say.
Hey. There you go. There you go.
Look
That's
at
the kid
that.
with the knife. I love it.
Yeah, Cusack family, big Chicago
Yes.
presence.
Yes.
Oh, yeah.
Yep. Then
yeah.
Jeremy Piven. They grew up in the acting school together, I think. I think Jeremy Piven's. No, wait. I don't remember right. Either Piven or I think Piven and Cusack. I think Piven's mom was the one who was like the acting coach or something like that, and that's how they all grew up together.
Oh, really?
Yeah, I think it was something like that. Can't remember exactly, but
Yeah.
Chicago stories.
We got 2 minutes almost until the open. I think I'm going to throw on an AMD bullish trade on the open with it down 40 points. Feels right. Feels right.
Wait,
SpaceX.
it rallied a little bit, didn't it? It was down lower than this 10 minutes ago, wasn't it?
Yeah.
This is kind of why I'm glad it didn't absolutely tank, and by that I mean like go down to 450, 425. This is why I actually feel okay with the call. I took the 450 call spread off. Sorry, the 550 I think it was call spread off, just because I was like that was a little bit close. It just wasn't going to go well either way if it fell or if it went high. I was going to lose money from just how much we had gained already in the day. Like we said, the stock went up. And if it took off after earnings, that 550 call spread wasn't going to help me at all if it was already at 525. So took that one off, but left the 575 and the 600 on just for this reason. So if it fell, it's cool. I can deal with the loss on the day, and maybe I have a chance for a bounce back by the end of the week or by next week.
Yeah,
Dr.
I mean that's what
Jim.
the calendars afford you to do is you've still got a chance.
Oh, really?
Look at this. He's got a 0-day 45. 45 shorts. It's right at 45 right now.
Ooh, good for him.
Look at that.
So he
Look at
played it
that.
to the downside.
This is a big one. This is like 25 points wide.
Yeah, he played it to the downside.
Huh.
Good job,
job.
Jim.
Nice.
Jimmy.
But yeah, I think on the open, we're going to see a vol crush. We're going to see some lower prices across the board. So I think something like long September, short August diagonal spread, or even like long October, short September, those would be really cheap. If you go long October, short September, you'll probably pay half the width of the diagonal spread you set up. But we'll check it out in a minute here. Emin's up 42.
And SpaceX did not go according to plan, right? So do you guys have anything to close on at the open?
I just have I did a 110, 105 short put spread to finance a 2-day 130, 140, 150 butterfly. So I collected $1 credit for the whole thing. So yeah, I think I'll just let the butterfly go and the short put spread will just be right at the money. Nothing to really do there.
I mean, as long as it stays above 110, you're fine.
Yep.
Yeah.
By the way, speaking of that ADP we talked about this morning, ADP numbers came out. They were below the previous and below consensus. So there's always a weak correlation between that and the actual jobs report, but that was the reading, if you will. Whoa,
I mean, we're at 45 today. Wasn't the expected move in SPX only 40 points this morning?
Yeah.
And we're already over it.
Classic. Yeah, I mean, we just rip higher every day. It's insane.
Yeah.
Absolutely nuts. AMD. Let's see what Dr. Jim's butterfly is trading for. He bought it for $5. All right, yeah, double your money. Here you go. Trading for $12.
Money.
Nice.
$12.
But we talk about this all the time. That's his butterfly, but it's not worth the full profit until the end. It does not open up until the end. You can make 20 on it. He's got 12, right?
Yep.
Yeah, but are you really going to hold that in AMD? Probably not.
Yeah, he'll probably close it.
I would take that.
It's chopping around, but I don't know. It's also 0-day. So what are you going to do?
What are you going to do?
E-mini's up 50
The good news
now.
is he's not on until later, so he's probably going to sit on his hands until it show.
Yeah. You are not wrong. Let's see what we can do here. Long
attacked by a
October.
gnat.
Oh yeah, that thing was on my hand.
Yeah,
yeah, so like here you go. If you have a larger account size, you can go long October, short September, and just play for a delta move here. But as we talked about, you can get into a 50-point wide for $30. If you wanted to get more near term, like long September, short August, you could do the same thing. This is probably just going to be too expensive to go diagonal. I might just go with calendar spread.
They are expensive, meaning more capital outlay. That's why the calendars are less expensive than a diagonal. Yeah.
But even still, long September, short August, if you go to like the 550, you can get into, pretty decent cost basis reduction, 33% cost basis reduction against the long option in September. Still $1,500, but those are the interesting types of trades. Or you can just do a Super Bowl.
Wait, but it's $1,500. But I think you got to put it into perspective. You're using $1,500 for a decent profit potential in a $480 stock.
Oh yeah.
So it's a little capital intensive because of the price of the product.
Mm-hmm. Yeah, and if you flip this to Theo, and then let's just crank this to like middle of August, so 2 weeks from now, without changing any IV at all. If you get any rally in AMD, you're going to be looking good. Like you can double your money here with a calendar spread. So I like it. But you could also just do a Super Bowl setup. So I think that's where I'd probably go because you also have call skew in here, I would imagine. Trading at 47. Let's go like 547. So that's 80 points out of the money here. And then you go to the 407 to the downside, 410. Yeah, so you have significant call skew here. So buying a call spread will be cheaper on the upside. Let's see if we can set something up like a 450, 440. Yeah, 450, 440, 10 points wide, collecting 385. Then you go to the upside and you just buy something that's less than that.
How wide can you get? So you have a collection there, right?
Yeah, 10 points wide for $1.50 credit, $2 credit.
That's not bad.
Yeah, let's try that.
You're in the 44-day.
I'll just route it for $2 and see if we can get in.
$2 credit?
$2 credit.
Okay. So people ask how you get this. It's because you're shifting your risk up. Your put spread is significantly higher than your call spread.
Mm-hmm.
Yeah.
Yep.
Touched 30,000 on MNQs.
Crazy.
Touched it.
Oh, there it is.
Okay. Only because I got you guys on. What do we think today's going to bring? Honestly, these are just opinions because I was dead wrong yesterday. But what do you think today's going to bring?
I think we're positive. I think we end up positive.
Yeah.
Come on. I need positive. I need some numbers. What do you think we're going to be up? Let's talk in spoos. Where do you think the spoos are going to end the day?
78.25.
Oh, okay. Good job, Mike.
Yeah, I was gonna say like right here, but yeah, I'll say 7,800. 78.10. How about that? I actually don't think it's gonna be crazy today, but we'll see.
I'm going 78.50. We're gonna end 40 points higher from here.
Okay.
Another $100 day, huh?
Another $100
$80 day, Mike. $80 day.
What's 20
like
points
rounding
between
up.
friends?
Yeah, I mean, it's been a wild day here. It's been a wild couple of days here. Wow, AMD's ripping higher.
Yeah.
I can't chase this thing fast enough.
Can't chase it. They're making you chase.
Ugh.
Yeah, isn't that the most annoying part?
$1.50. We'll just leave it at $1.50. See if we get a sell off here. But yeah, AMD's reversing. E-mini's up 50 now. Nasdaq up 150. We're back to that 3-to-1 ratio today in the Nasdaq relative to the E-mini's gains. But yeah, what else? Oh, GLD. Let's close this. 11-point implied or 11-point move on the morning here. Damn, this short call is really killing me. It's one of those where I probably should have closed that short call a couple of days ago when it was not trading for $600. But
yeah, this is the this is the big wild card, man. Gold and silver.
But
today.
you know, you could leave. Wait, hold on. It's trading 380. It's trading 385, and you have the 380.
390. Yeah, 390 short, 380 long.
Okay, 390 short, 380 long. I mean, you could leave it because you still have so much in that. In your one that's at the monies.
I think I'll leave it. Short period of time.
Put an order in to close it for whatever, and then if it hits, it hits.
Yeah. You know what? When you're right, you're right. And you're always right. Let's do.
Good. Excellent. You are being trained very well by Butler.
I'll throw in a $200 max profit here, so we'll just leave it there today. If we get a continuation, we'll probably get filled. But if not, no problem with holding that risk. So, yeah.
So did you guys see the VIX yesterday? And once again, another day today. So VIX is up 5% today when we are up 43 points. This is bonkers to me. And I do believe that it is everything to do with, and this is a belief, I have nothing to back this up. Maybe Julia can help me out with some research. I think it's the 0DTE SPX and the call buying that is happening that is keeping this volatility up when we have an up market. That's my opinion. Because there's so many. So what is the VIX, right? It's inflated volatility. And what is inflating volatility? When you have more buyers than sellers. And when there's so many call buyers coming in, that VIX can't go down.
Yeah.
So I like this.
The VIX one day is up significantly.
So two things. Yesterday I did put on couple of different short hedge plays, if you will. I did a super bear for Friday for the jobs report. We put on the NDX. I did one of those as well. The NDX put butterfly, another one of those, another installment, if you will. SPX also a put butterfly in there. Both of those put butterflies I did for the 17th. Just because after this move, it's a good way to like put on shorts without putting on futures, right? And just watching them continue to go up into this. Although I'm thinking about putting on short futures right now because getting back to what we're talking about here, VIX is up on a day where the market is up, and that's never really good.
That happened yesterday too, Jermal. It was up all day.
Was it though? I thought it was down.
The VIX was up. The VIX never turned green yet, or never turned red yesterday. It was red, or it was green all day long. And it was so confusing to me. That's the only reason I can come up with the fact that there's so many call buyers, and that's what's happening.
Yeah, for sure. That's and again, that's the thing. Volatility goes up on the upside. A lot of people don't think about it like that, but
yeah. I think it's also like if you think about other products where volatility goes up on an up move, it's the products that are these high flying tech stocks that have realized moves that are significantly greater than implied. And I feel like the last couple of days in NDX and SPX, you have had realized volatility significantly greater than implied. So I think that is also playing a role where the intraday range, even though it's to the upside, the ranges that we've realized are so great that implied volatility, to your point, can't go down because the moves are so dramatic to the upside.
Yeah.
I'll tell you what else too. The other thing that's changed that I've noticed in the last 2 days, remember every single day we come in here and we talk about that dispersion. I really haven't seen it much in the last 2 days. Meaning, I haven't seen this like change with chips versus software and consumer staples. That's gone away just in this week. So that's been different as well.
Yeah, this is definitely different. I mean, I don't like the fact that the VIX was up 5%. That's bothersome to me. Yesterday, it just didn't go down. Now it's up 6%. VIX is 1748 right now.
Oh, that was a major move to the upside yesterday, though.
Yeah, and it never went down.
Yeah, I didn't notice that. I actually didn't look at it past this morning in the morning because when we were looking at it in the morning, I remember it being 15. That's the last time I remember looking at it.
Yep.
I didn't notice that throughout the day. So good catch on that. But yeah, seeing it up again, you haven't seen it now. For those of you who are on Twitter, you will see it for the rest of the day if it stays here. VIX up, market up, usually is a problem. All the VIX people
it's a problem,
are going to start talking
Jermal?
about
Doesn't it make you uneasy? It makes me uneasy to look at.
Yeah.
Yeah. But really, the last 3 days, we've had an SPX move over 100 points. And every day we've come in, we've had an implied move of 40 points.
I just sold an MQ.
So it's like we're doubling the realized move every day for the last 3 days. So I think that plays a role for sure. It's just very rare. Like I don't remember the last time we saw that. Unless it's like after our move to the downside, but the VIX would have already been up in that situation.
Yeah.
E-mini's up 51. Nasdaq up 150. Crazy.
Okay, you know what's crazy? I'm just like I said, I'm looking at the SPX volume, and so the calls are the 0-day calls are increasing rapidly, and the puts, it's September puts that are being traded.
Ooh.
Which is odd.
Spicy.
Yeah.
September, listen to this. So the calls are the 7850s that are the leader on the board for the 0-day, and the Septembers are the 6250s puts.
6250.
You got a tale of two cities, and those are pretty wide ranges.
You gotta scroll way down for those ones.
Yeah. 26,000.
Yeah, interesting 2 days here. And again, couple all this with big moves in gold and silver, all of a sudden, it's like those are returning. I don't know what it all means yet, but it could just mean a regime shift in terms of what we've been seeing more recently in the market for over a month. Strongly for over a month, we saw an interesting rotation back and forth between chips on one side and consumer staples and software on another. And we just see money being pushed back and forth throughout that time period. And again, I think that was, if you really want to get into the conspiracy theories, you could say that, Citadel was at the front of moving that money around between these areas because they knew what this guy's book looked like. That guy was short software and he was long chips. And that was the biggest moves that we were seeing throughout the month of July. Obviously, the book goes down, they take it over, and now you're seeing a regime shift. So that's if you believe in conspiracy theories.
And it's interesting to put the narrative behind it after the fact, right?
Yeah.
So you can it's good. You can see why the move happened after the fact, but that doesn't necessarily preempt what you're going to do going forward.
Yeah. But yeah, we were talking about that earlier with Chris. Like, that's the importance of checking things like RSP. Like, is this a market that's losing liquidity, or is it just rotating into other things?
Let's look at RSP. I love a good RSP. Look.
I love a good RSP.
Take a look. Let's take a look. 220.
You bring the
Sitting at high.
greatest sound bites list.
Yeah, equal weighted S&P at all-time highs. No surprise there, all things considered, especially with the Mag 7 stocks just completely catching up in 4 days. Like, this has been insanity.
Well, SpaceX still down. Not really much of a bounce. You mentioned AMD, somewhat of a bounce. Looking at SK Hynix, a little bit of a bounce here, so we'll see. SanDisk has earnings tonight. That's down at the moment, but not a whole lot. I don't expect a whole lot of movement from that today ahead of earnings. I guess we'll see what happens.
How's that?
Love it. Love it. Well, Liz, appreciate you. We will see you a little bit later today.
All right, thanks, guys. Good luck today.
See ya.
Thank you. Likewise. E-minis up 50, NASDAQ up 180, but why don't you let the people know what we got the rest of the day?
Yeah, we got a SIBO check-in coming up in a little bit with E, and then we got Jim Carzon joining the show at 9 a.m. Central Time. We got trading charts with Mr. Tim Knight. We got Tasty Research with Julia Spina at 9:30 Central Time, and then we got Confirm and Send with Liz at 10 a.m. And of course, Risk Reward will be live from the SIBO floor with Gus and E. But don't forget, trades of the day start at 11:30 a.m. Central Time with myself. Mike is at 11:45. Errol's at 12. And Gus is at 12:15. So 15 minutes apart. Trades of the day. We're bringing it to you, bringing the heat, showing you what we're looking at and how we're doing it.
It's going to be amazing. But we're going to take a quick 90-second break. You're watching Tastylive.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click, all on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click, all on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Join us on the YouTube chat. We're going to take a look at some of your trade ideas, questions for the next few minutes here as we navigate these markets. But I was filled on that AMD trade that we were talking about. Super Bowl in the September cycle, where it just went out, sold a put spread, 450, 440 to buy the call spread, 550, 560, collected $1.50 in the middle there. So no risk if all the options expire out of the money, but if we rip higher, this will be a nice little winner.
Nice.
I'm also trying to work some closing orders. So Super Bowl and Meta, got into that after the big sell-off after earnings. It's almost a $600 winner. I'm routing a $600 win to close it. And then Netflix, I've got another Super Bowl in September. This one got in for a 12-cent credit, but it's trading for $200 right now since Netflix has rallied closer to the call spread. And I'm just like, I don't feel like I need to be in Netflix right now. So trying to get out for a $250 winner or something around there.
Yeah, I actually closed a short put in Netflix a little earlier. I had an order for yesterday to close. I'm surprised. The order was still out there. I don't know how it was. It's not like I did a GTC. I'm actually surprised, but nevertheless, surprised in a good way. I was able to close a put for a 50% gain in there. And then, yeah, I know I still have this Super Bowl in here as well. Might have to consider closing that. Again, it's fascinating looking at the market, and we're seeing it positive. And we're also seeing VIX positive. 2 days in a row, it's kind of an ominous sign at times. There's plenty of studies that show that usually there's a little bit of a turnaround coming, potential turnaround coming around the corner. And when I say turnaround, I mean just a negative day. I mean, we've been at these big up days more recently. So somebody also did ask about the double calendar. I still have it on in AMD, if you will. And again, I initially did the 550 calendar. And again, this was August 5 versus being long August 10. I originally did the 550 calendar and the 575 calendar. And as that went up yesterday, I closed the 550 calendar because it was so close to the money and ended up doing the 600 calendar. And obviously with the stock down, not winning on those. So for me, as far as managing, I mean, because of the premium, I didn't pay a whole ton of premium in that. I mean, it sucks to have a loser, but it's not a whole lot of money as far as premium for earnings trade. I'm willing to, obviously I don't have to close those shorts. Again, they're at 575 and 600. And so those shorts stay on, and then I'm just long, basically upside for Monday's trading session. Monday's trading session, right? Yeah, the 10th. I'm just lost on days. So the idea here is, is there going to be a rally? If there is in AMD over the next few days here, then I'll just reap the benefits that way.
Yeah. And that's the nice thing about these calendars is, you're going to get, especially the 0 day, you're going to get all of that premium now, immediately, which you have This one's down $600. This one's down $400 in the 0-day, which has reduced cost basis against your 5-day. This one's down 8, and this one is the 600 is down 6. But to your point, if you get a reversal of today's move, which is totally within the cards, 25-point rally, like the way you can estimate it is like, okay, what is the 550 trading for 25 points lower than the 575 that you own? So you can make $200 back ish on a move up 25 points on the 575 call, and then the 600, same story. This 50-cent dollar option goes to almost $2. So this would be a scratch if you get a reversal up 25 points. And if you look at the 5-day implied move, 35-point implied move in either direction. So a move within the expectation gets you back to a scratch. A move to the expectation to the upside gets you into that profit zone. And we've seen it happen many times before, where you see a big sell-off in the market and then it just reverses and rips higher. And it's happening as we speak.
Yeah, we'll see.
We will see. We got E live from the SIBO floor. E, how you doing? We're trying to get you live from the floor, but you're frozen.
I know you're frozen.
Frozen, staring at your computer.
There he is.
we go.
There he is.
I see that. Yeah, I was like, all right. But no, I mean, it's pretty loud over here right now. There's a lot of activity going on. But I was just checking SpaceX. I mean, one of the most disappointing IPOs in history. I'm a book it as that so far. But I mean, we're still sliding to the downside. I'm sure you guys have already touched on it, but. Yeah, that downside continues on SpaceX, and that's kind of what I got my eye on. A lot of volatility in the Qs right now as well. So we're scalping some of those right now. Hopefully we get another move to the downside right now. I am short some of the micro contracts, so we're going to manage our risk pretty tight because this volatility is kind of crazy. But that's how we're looking so far coming into a market open at least. SpaceX and the Qs.
I'm with you, man. I sold one micro contract as well, just to kind of play this. I feel like, so I don't usually like selling micros, but I feel like I like selling micros when I feel like there could be a quick reversal. And so that's why I'm doing it in this situation, mostly because seeing the VIX up, which actually just changed, that just went down. It just like, boom, just went down. It was trading 18.20, and it just went down like 20 points. I'm sorry, 20 cents. So that did reverse. We'll see if that trend keeps up. But for that trend alone, I want to try and play it. But I don't know. If this thing goes lower, I'm going to buy them back.
No, yeah, I hear you 100%. I know CME soon was going to release. I don't know if this is great. CME was soon going to release some of the nano futures.
Don't worry, nobody's going to come and tackle you by saying those words.
But I think CME is going to be releasing some of those nano futures soon too. So I think that's going to be a tenth of the micro. So the micro is a tenth of the minis. So kind of curious to see how a lot of the retail traders will kind of use that, especially given some of the extreme volatility we're seeing right now. Maybe those might come into play a little bit. Maybe you want to get half the size of a micro on, use 5 nanos, but I know that's coming down the funnel as well.
Yeah, I heard yesterday at the SIBO exchange was loud, and it sounds like it's pretty loud there today. So that would indicate there's a lot of activity in this market right now. But again, we're at all-time highs, so it's almost like you would expect that.
Yeah, 100%. Mike, what you been having your eye on so far this market open?
Just trying to get filled on some orders here. We placed a new trade in AMD, so we are taking advantage of this sell-off here, placing a new bullish trade in AMD, and I was just filled on that a couple of minutes ago. Went out to September and just did a 10-point wide put spread to buy a 10-point wide call spread, but I routed it for $1.50 credit because my put spread's a little bit closer than the call spread is. So we'll see if we get a reversal there. And other than that, just trying to close some of these trades. I have closing orders in Meta, Netflix, GLD, but I have them above the market currently. So we'll see if they can appreciate to those levels.
Absolutely.
Yeah. How about this NASDAQ above 30K, or at least it was?
It was.
Yeah.
That's why I sold it, actually.
You speak too soon. Yeah, come back in about 30 seconds. We might be back above. we might be back above 30K. But no, these ranges are extremely volatile right now. I'm curious to see what's kind of going on under the hood, because I think the noise levels is just steadily increasing as we continue this conversation. So a lot going on right now.
Yeah.
You think these are volatile? You ain't seen nothing yet. You wait.
Yeah. Just wait till the market's down to 80. And
right.
That was every single Thursday that Jermal and I were there. The market was down 80, and people would be screaming behind us. There'd be fighting. It'd be crazy. It was crazy.
Yeah, no, it's crazy.
Good old.
I got put in an arm bar the other day. I'm like, what's going on? Y'all are getting too crazy over here.
They're like, it's just a rite of passions. We just got to do it, you know?
I know. I got you.
But yeah, I think it'll be an interesting day. We saw the VIX up while the market was rising. Maybe that's a little ominous sign here. But right now, E-mini's up 43, Nasdaq up 140. E, appreciate your time. We'll let you go. I know it's loud over there. We gotta get you back to the floor. You should just jump in there and be like, give me something to do.
I know, right? Go ahead and jump in.
Yeah. It feels like a little mosh pit. But no, I appreciate you guys. Thank you.
For sure, man.
See you a little bit later.
We got Jim coming up next, huh?
Yeah. And I think it'll be interesting because he's been talking about the rotation trade and how we've seen it pretty clearly. It's been a little less clear over the last day or so, but we've been trading it left and right. Software up, chips down, chips up, software down. So
for sure. I mean, this is, again, retail is trying to find ways to trade this rotation and the things we've seen. How does retail trade this volatility? That's what we need from him.
Yeah, 100%. But we will come back after a quick break. Join us on the YouTube chat if you haven't already. We're streaming live there. And yeah, you're watching Tastylive. We'll see you soon.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click, all on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click, all on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us. We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. We got another crazy day here. E-minis up 40, NASDAQ up 90, chopping around. Can't make a decision whether we want to keep trudging higher or not. But we got Jem Carson on the line here. Jem, how you doing this morning?
Good morning. Good to see you guys.
What's up?
Likewise. How you looking at these markets? We were just talking about record call buying, you mentioned, but E-minis up dramatically, NASDAQ up dramatically, vol not being compressed. You might think like, well, the market's just back to all-time highs. Why is the VIX not at 13? You have any insight on that?
Yeah. So, and we actually talked about this on Monday. We said expect it after a rally here, market up, vol up to start. And the reason is most people think about the VIX as like an indicator of the actual implied vol, like where it's trading, whether it's trading up or trading down. And that's actually not really the case. S&P 500 options are actually calculated across the curve, right? And call options are much, much lower implied vol options, much lower implied vol. In the S&P, people overwrite calls in general, structured products overwrite call, all these things compress vol. Those vols tend to be low, too low, candidly. And as you get a big move up, you slide now to a low vol that is just too low, period. Right. And so actually what you find if you look at the actual S&P 500 options themselves is not only is the VIX going up, but the vol is exploding higher in reality because we slid to a much, much lower implied vol as we rallied. What's driving that? Again, all the short calls that people have in the S&P generally versus the calls that they've been long in the single names throughout the summer. And this has turned into classic call squeeze. I mean, this is the definition of a call squeeze. Basically, people are getting risk and margin calls to the upside. People have to cover the short calls they have because all the long stock they had went away. And if they overwrote calls, they are being forced to buy them back in. It's that simple. So this is well beyond the big point here is just, hey, realized vol was high, and implied vol was just too low to support it. It's actually quite simply positioning. The world has been short S&P calls. You get this big a rally, they have to get bought back and actually to a point where we're actually even getting margin calls on the S&P side. So people have been used to seeing this on the single stock and the AI space and all these other areas, but we haven't seen it as much except for maybe this March and June again. But there is a significant call squeeze going on in the market right now.
I think it's interesting too. Like when you look at 100 points out of the money in the 0 day in a market like this, and really generally speaking, if you're looking at SPX, you typically see put skew, but these are flat. Like the 77.80 to the upside and the 76.80 to the downside are trading for the same price. So
yeah, and it's important to note that is a positioning based. Basically the world got caught. And they're having to buy back in the S&P. And this is really important. I want to make this point right here is if, when these call squeezes happen and you start to see market up, vol down, vol up, that tends to be a very, very poor thing for the market in the next several weeks. Why? Because vol compression at the index level is one of the things that holds everything in place. And the more implied vol expands at the index level, and by the way, it's expanding on a fixed strike basis. I really want viewers to start to think about fixed strike vol much more than it is at the VIX level. You may be like, oh, the VIX is going up. That's interesting. No, it's actually exploding higher from a fixed strike.
Well, hold on
basis.
a second, Jim. I think you got to explain fixed strike vol for our crowd. I don't know if they really fully understand that concept.
You have skew in the S&P 500 in most indexes. So downside puts are higher than upside calls. And as you guys mentioned, it's pretty flat now, but it hasn't been, and it really has kind of flipped a bit, right? That call skew means if I go higher, I slide to a lower implied vol on a call naturally. Mm-hmm. So if we were on, let's say, a 17 vol and we rally 5%, I might naturally slide to a 15 vol, right? Right. And but when you see the VIX stay at 17, that actually means that vol went up 2%. in reality. Like the curve has to have, those calls that we slid to have went higher. And so what we mean by fixed strike vol is that strike that is now the at the money. What vol was that on? Right? Not the floating vol of the, of the index at the money. Because comparing from a supply and demand basis, what matters is this vol by strike. How has that changed? And my point too is the vol by strike has gone up dramatically of these upside strikes that we've slid to. Okay. Often the opposite happens on the downside. The market goes down, right? And you will slide to a much higher vol, maybe from a 17 to a 23. But then the VIX will print 20 and people will be like, oh, the vol's up. And the reality is, no, actually that scenario, the vol is down. People are selling vol and fixed strike vol is compressed. The fixed strike vol is the best measure of supply and demand in the market. It's actually the real fear index, right? People talk about VIX as a fear index. It's really not. The real fear index is what is happening to the curve. It's happening to the vol surface. Okay. So anyway, we can get into this more later, but the big idea here is that you slide up and you start to see a fixed strike vol expansion, markets go up, vol goes up. This can really unpin markets and create not just more volatility, but in this scenario, a lot of people might be selling puts to buy calls to cover the premium on their calls that they were short. It creates a complacency to the downside. It unpins the market. And it is often how big moves end. They tend to end with call squeezes and market up, vol up. So something to be watchful for. And there's a quick move. It could very well. We're also going into OPEX, which tends to be vol compressing in the short term. But we had talked about this before. 60, 90-day vol is way too cheap at this point. Whether the 10-day vol or 15-day vol goes up or down will be a function of the market really on a realized basis realizes in the short term. But quite frankly, we've slid to way too low an implied vol. And I think as you start to see this call squeeze kind of expand vol, you're more likely than not than to see that stuff continue to perform in the back from here, whereas the stuff in the front could compress. So counter call spreads from here, particularly interesting.
Really? Okay. Yeah. I mean, I know we were coming in, they were saying you were doing a couple of different trades. Are you, as far as your trades, are you sort of trying to take advantage of this environment that you're discussing right now, where we're seeing, this squeeze to the upside to some degree because there's been a lot of short calls? Are you trying to take advantage of that? Or are you just like, no, I'm just trading the way that I normally trade. I'm not necessarily worried about that. And again, like, what is your terms? Are you looking at 3 months, 6 months, or do you pay attention to what's going on near term, like you just said, because of this calendar call potential situation? Or are you like, nah?
Yeah. So first off, we are always looking at things on a relative value basis, right? We may be relative to an index, right? So particularly in the summer, the dispersion has been a huge win for us. That's something that we've highlighted is highly likely to perform well in the summer. What we start to do as we get to the end of the summer is the opposite, right? Dispersion's at a record, right? You start to begin to see more Delta 1 action. And so this was an opportunity for traders. Index vol on the upside was way too low, as we talked about. It was likely if the market went up, you're likely to see market up, vol up. And then we know if the market goes down that vol is probably going to expand. So really great relative opportunity in the indexes, particularly relative to some of the single name stuff that has been jacked on the call side. So that dynamic is something that we were able to take advantage of and that we think will continue to mean revert as we get out of the summer. And the reason for that is not just, I think this stock is going up or the index is going up. It's really a function of the dispersion vol had gone too far and the dynamics that drive it, which is vol compression at the index level, are now ending, right? They're coming to the end of the summer or diminishing, I guess I should say. So that is really kind of how we think about things. That is relative value vol. Right. But it is also an opportunity because a lot of those, the index itself hasn't gone anywhere from a realized basis. And
vol-wise, you're saying it hasn't gone anywhere.
No, I'm actually saying from a directional basis.
Directional? Hasn't
we're
gone
up
anywhere?
A little bit here.
The summer.
What? It's gone down big and up big. Right. But net, where have we gone this summer?
Seen the last 4 days?
Of course. I'm not saying the last 4 days. I'm saying this summer, net, we have gone nowhere. This is what happens this summer. You get a lot of chop. And so you have to zoom out, right, and take a look at what's actually happening. Meanwhile, you've had a significant dispersion in performance underneath the hood. So point is, this is an opportunity from a lot of the flows are what's driven this performance this summer in the underlying stocks themselves. So not just on a vol basis, but on a single stock basis. And that represents an opportunity for a bit of mean reversion as you come out.
So when you talk about the call calendars, just to be super clear, are you looking at like long October, short September? I mean, you can see twice the amount of time, but you're getting 70% of the implied move in the 43-day cycle relative to October, plus minus 416 points, plus minus 316 points. But you have twice the amount of time. Like, is this what you're looking at? This kind of spacing, or are you looking at different expirations?
I would prefer to have our shorts much closer. So we think implied vol starting to go up. So we really want to be, August OPEX, maybe end of August OPEX, but really basically end of summer.
I like that.
We think now that we've had this big rally, right, it's natural that there's going to be a digestion that happens of this rally. And then we think vol itself is broadly going to go higher. And not just realized vol, again, we could sit here for 2 weeks, is my point. And you could see the front of the curve, implode, all that vol disappear that's exploded as a short-term, people trying to put Band-Aids on this buy gamma, deal with all that. And meanwhile, the implied vol in the back could go higher. So you have this significant opportunity now after a big move of a digestion of the implied vol spike on the calls in the short term, kind of giving way, and meanwhile people looking forward to the midterms and the fall and the next year, which has incredible risks in it, and the vols are too low back there, and that start to expand. So we really think, to answer your question, I'd be buying post midterm, so November, December, and really selling late August, something along those lines.
Well, yeah, no, Jim is absolutely right as far as the dispersion index for those who haven't seen it. If you look at DSPX, that tells you, so again, dispersion was very high not too long ago. We were seeing all these different names move, right, Jim? And then now, all of a sudden, this is actually in the SIBO note that came out Monday that they bring out. As I'm teasing that up here, I really shouldn't be. It's not like they pay me to do it. No, I'm just kidding. But that's a really great note that they bring out. And we've seen, if you look at the curve, you can see it. It's about to change. And that gets to the point of what we were talking about this morning, Mike, when we were saying we haven't seen that rotation as much as we were. We were seeing that big rotation for a long time. Chips, out of chips into the consumer staples and into the software even. And I want to get your thoughts on this too. And then back and forth. But ever since what happened a couple of days ago with the situational awareness, we're not seeing that. Have you noticed that?
Yeah, I would say the situational awareness piece obviously it reflexively also accelerated that rotation at the end. It wasn't just them. There's stories of funds in Germany and abroad having similar, private funds having issues. Mm-hmm. But the original reason for that rotation, I want to be clear, was positioning in the market, right? This is something the fundamental guys who are like long haul, like AI is going to do X, Y, Z over the long term because of these are the winners and this is how much earnings are going to make, right? Fundamental view. A lot of these guys don't know about positioning, don't think about positioning, don't understand the amount of volatility that could happen as a function of it, and they're over levered. And so those things led to that decline. I want to be clear, that wasn't the cause. I think it was more of a final effect. But, and because of that, I would argue that the structural effects that started that, which are still in place, all the call buying and the single names are still in place for at least another month here. And so those are on a rotational momentum basis, still an overhang. And so I just want to dismiss the kind of, Leopold has blown out, everything's good. That was the cause. That's what drove the decline. That was part of it at the end. But the structural primary part of why that rotation happened, why that's likely to still be an overhang, are still in place, which is massive call positioning, dealers massively short at the momentum level, semi-memory, whatever level, and those things are still in place. And I would say at least for the next 2 to 4 weeks, that's going to be a headwind for, despite the great 2-day, let's say, performance for momentum. I would also highlight the first 2 days of this rally didn't look particularly good for momentum.
But isn't that usually how it kind of goes, though? It doesn't start out like gangbusters, right? It looks like nothing, and people sell into it, and then
not usually the winner, the loser.
Right?
Yeah, sometimes I would say a lot of times you see the opposite, right? The biggest losers become the biggest winners in a V bottom, right? But my point is, just watch that momentum trade closely, not just the move of the index, but what is momentum doing? And look at today. The Nasdaq's up 44 basis points. The S&P's up 61. Kind of interesting, right?
Yeah.
Particularly in a call squeeze. Yep. So my point to you is just watch that closely here. I actually think there's a lot of still overhang there, and the same things that drove the initial rotation, against it are still in place here into this rally. And if anything, all the call buying in that area is going to force another wave of that, and that's dangerous. So just be careful that, what would happen now if after this 4-day big rally, where it shows momentum still dramatically underperforming over the course of the summer, not in this 4-day window, but the course of the summer, what would happen now if that rolled back over on a momentum basis? That doesn't look very good. It's precisely as you get market up vol up. So just be watching that. It's an interesting kind of important part of the story that a lot of people aren't watching.
Well, I mean, this is definitely playing into your summer thesis that you laid out the last time you were here. So kudos so far. And
thanks, buddy.
Jim, just one time, I want a guy that owns a fund like this, situational awareness or SBF. I want him to look like a model. Just one time, like one time.
Yeah. No, that's he not only, I think somebody posted this on Twitter, but not only did he not have situational awareness, no social awareness,
exactly. That's what I'm saying, man. Like, why can't what?
It's just it's part of the.
You gotta be a bit of a nerd savant to get into that position, I guess. But yeah, why can't you have both? I don't know.
Maybe one day. Hey. There's black swans that have happened elsewhere. Maybe that's what we're going for in the future. But Jem, appreciate you.
Good to see you, man.
Monday show.
Likewise.
Loved it. And you can catch Jem on the Monday shows, of course, Monday 3 p.m. Central. Always talking volatility, options, macro. So check it out if you haven't already. And we'll see you later. But appreciate your time.
See you later. Looking forward to more of these. Take care, guys.
Likewise. E-mini's up 45. Nasdaq up 115-ish, but we got plenty more content coming your way on the YouTube channel as well as Tastylive.com. We'll see you on the other side of this break. You're watching Tasty Live.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What's up, Tasty Nation? We are back. E-mini sliding here, only up 38. Let us know in the YouTube chat whether you like McDonald's or not. We were just talking about how McDonald's coffee will get you buzzing, but if I go on a road trip, I go to McDonald's, not directly, but if it's attached to a gas station, I'm forced to go, and I get a 20-piece nugget with some barbecue sauce, and I just rip that thing while I'm driving.
I bet. It sounds amazing. I don't know. Let's bring in our guest here to see what he thinks.
Tim. So Tim Knight, how you doing? I know you're a McDonald's savant, maybe not.
No, in the past decade, I've been once.
Okay.
And that was just because I needed their Wi-Fi. So
I didn't even eat anything.
I honestly, I ordered one of their, like cheeseburger things, and it's like, holy Lord, this is why America's in the shape it's in.
Exactly.
So it was, absolutely dreadful. So no, we should not get. It'd be definitely dangerous to get into some sort of Epicurean conversation here, because my snobbery will come out worse than ever. But they have a good Wi-Fi. I'll give them that. Thanks, McD.
There you go.
And they have a superb stock. It never goes down. It's an amazing stock.
And that's where the conversation emanated. And I know I don't imagine it's one of your charts just the way it looks, but as we're about to get into them, that's where it started. I actually have this trade in there. It had earnings this morning. Stock's been on its lows. It's kind of interesting. But speaking of lows, we're away from that. We're obviously on highs. How are you feeling in this area of the market? What does it technically look like to you?
Well, let's thumb them through. Let's start with the most basic of basics. Let's go to our old friend the Spider, the first and the biggest ETF out there. The past 4 days, as your prior guest was just mentioning, have been just this eye-popping rally. At the moment, we appear to be at the sort of like, you throw the tennis ball in the air and it's sort of at its apex, and you're just sort of watching it. We're just kind of hanging out there in the ionosphere. The next test is going to be, because this will sell off at some point, maybe today, maybe tomorrow, but the next important test is, how does it behave when it approaches that rectangle again? Because that rectangle has represented months of just entrapment, and it's finally escaped, and the bull's job is to keep it out of there. It's got to find support there, and if it just sort of like droops back into that rectangle, that's a big alarm bell. But we're far, far away from that. I'm just saying, when we ultimately do sell off to that for whatever reason, that's the item to watch.
Yeah, I think it'll be interesting to see where we go from here. But just like anything else, when you have a vertical bar to the upside, you should not be surprised to see a little relief selling at some point.
Mm-hmm.
Yeah, there's going to be some profit taking, and actually, I made sort of a prediction that we would look at SpaceX first, and that did not materialize. But you know what? I'd like to, because SpaceX, I think, demands a glance for a couple of reasons. Let's just hop over into that. So, kind of good news, bad news. The good news is that it seems to have at least found a bottom for now. Their revenues came in much stronger than expected. Their losses came in more modest than expected. And so the low we saw on right here on this bar, which got down to, what was the low? About 104.83. That hasn't been challenged. So we've made it safely to the other side of their first earnings announcement. The not so great news is that this is a kind of a classic sell the news kind of event, because we had two nice fat green bars here. And when they did release their earnings yesterday, in the moments that followed, it continued to rally because it was a good report. And then it just slumped lower. So basically gave up all of yesterday's gains, and we're trading back where we were a couple of days ago. So we are down over $10. But as I say, for the longer term SpaceX holders, maybe we've at least found a bottom for now. I guess what's getting press is that, Elon, he likes to dream really, really, really big. And even though those dreams never fully materialize, they partly materialize, which is how he's gotten to where he's at today. So the latest thing is like, we're going to have robots doing manufacturing on the moon. Like, cool, okay. But the investors today weren't too thrilled with that. So I think we can breathe a little sigh of relief that we're at least on the other side of this report.
Yeah, I mean, it sounds like you're taking mushrooms right before the call and saying something like that. I mean,
or ketamine. Yeah, that's a drug of choice.
Yeah, right.
He hit the old ketamine lounge before the call, but one of them, we actually had a audio clip this morning about how they're specifically using NVIDIA. I think he said NVIDIA like 10 times in a 15-second segment. NVIDIA's up 4% today, which is an interesting turn of events because I did not have that on my bingo card. But we'll see.
No, NVIDIA's been a real, it's kind of underperformer relative to the superstars in semiconductors this year, and this has been a nice boost for it. I mean, even Elon described his idea as a little nuts, I think was the word he used. But that's a perfect segue, what you mentioned with NVIDIA, because the other big earnings yesterday, of course, was AMD. And they are taking a tumble, which is unusual in the semi-space these days. But from a charting perspective, I mean, I've been so disheartened by the breakouts we've been seeing and the ruined patterns. It's kind of nice to see for a change, we're behaving ourselves in this. This is still range bound. We're right smack dab in the middle of the range. We've had we reversed away from yesterday's strength. And this is still a potentially bearish setup because semiconductors have everything going for them these days, and we're still hammering out what might be, if we get below this low, a very substantial topping pattern. But yeah, that kind of puts until I think it's exactly 4 weeks from today. In 4 weeks from today, after the close, is the NVIDIA report. Until then, it's kind of tumbleweeds going around as far as earnings.
Yeah, you're right.
Yeah. We've got a bunch of earnings this week, but they're all obviously lesser known products compared to the likes of NVIDIA. Yeah. But yeah, AMD down today is right in line with the narrative of if you triple your CapEx, you are going to see a softer stock price on the open the next day. Like that's been the story, and it's really permeated through a lot of those companies. So they got to make up for it.
Yeah, and the capex from SpaceX is what zapped them too, because even though the revenue was stronger and the losses weren't as severe, the capex was way higher than they thought because AI is expensive to pay for. So,
yep. Indeed.
I'm gonna semi-correct myself on the earnings thing because there's one kind of interesting one this afternoon coming out, which is Western Digital. The chart itself isn't like super interesting. Except when you do back up here over the long haul, it has been since the Liberation Day bottom here, just a sensation. We've moved on this from around 30 to about 800. But then the storage stocks did start to break down. The shorter term trend line on this, which is our other springtime low. We had one last year, one this year. We broke that a while back, and it's been. It looks very subdued here, although the nominal range is pretty big, about $80 or so. But WDC Western Digital is reporting after the close. I don't have a position on it, but I would lean kind of bearish on this. I don't know if you fellas are watching this or have any feelings about WDC.
I mean, honestly, it all boils down. I have some sort of defined risk positions, and not in WDC. I have it in SanDisk, which also has earnings today.
Oh.
But I mean, to your point, I mean, they're all similar, right? WDC, SanDisk, all of them, and so it's gonna boil down to free cash flows, right? I mean, that's been the free cash flows and CapEx, and how are they not spending on AI, and how are they not losing money on doing that right now? So I'd be shocked if they went up.
Well, I mean, even though you're not on WDC directly, you kind of might as well be, because they're all, I mean, it'll definitely inform what happens to SNDK for sure, especially if it's an outsized move. Let's see if there's something, you know what, just here's my farewell chart for the day, just something to keep an eye on. Metals have been very strong, just like all other assets recently. I would point out, if anyone's kind of itching for a bearish metals trade, you could do worse than this one. This is XME. This is the metals and mining. And what's intriguing to me about this is this big price gap that we're getting kind of close to. And so we've had some big lunges higher. I would say the closer we get to sealing up that price gap, the more appealing this gets on a risk-reward ratio, because longer term, the chart has broken down. And very long term, the ratio chart of XME versus GDX is very bearish. So if one were inclined to want to be bearish to the miners, I think you'd be much better off with XME as opposed to GDX.
Yeah, it's been a wild move in the precious metals today. They've led the charge to the upside with silver and gold. Gold's actually caught up too.
Bro. Wow.
Gold's up 3.5% now. When we first checked it was only up like 2.5%. So it's a day for the precious metals. Indeed.
Well, let's get this Iran news out of the way. Can someone announce something? Because this is just a fog that I really want to lift.
No.
Well, according to the crude oil markets, the backwardation is gone, and the back months are below 70 now. There's 4 of them, but they're below 70 now. So I think the writing is on the wall. Hopefully we can get on the other side of it.
But the real thing is
that would be a welcome change.
We got to wait another 2 or 3 days for gas to go down some.
I know.
If
I'm keeping the car.
I mean, I know go down some is like,
Hey.
yeah, you can do that.
Well, Tim, appreciate you. We'll see you a little bit later.
All right. See you guys.
See ya.
Bye. Adios. E-minis Nasdaq sliding here.
Yeah.
E-minis only up 36. Nasdaq was just red, but it's up 50 points now. But yeah, we've got plenty more content coming your way on the YouTube chat as well as tastylive.com. So stay tuned. We'll see you on the other side of this break.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us. We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
What's up, everyone? We are back. We got another segment for you, a little bit of research. Market Measure sponsored by SIBO, which means one thing and one thing only. Julia is on the line. And Julia, it's been a wild morning here. All up, market up. What do you make of it?
Man, oh boy, doggy, is it green. I was watching AMD last night, and what was interesting is that NVIDIA, so AMD dumped, and then NVIDIA actually perked up a bit last night, and it was because of like a SpaceX earnings mention, basically, of NVIDIA. So definitely selling the pickaxes during the gold rush vibes is what I got. So really interesting movement last night, and then I don't know, I just really wanted the market to open red, and here we are.
It's impossible. It's impossible.
Market doesn't go down.
For now.
Yeah, just up like 5% in the last 5 days, 5 trading days, which is like half of what it normally moves in a year. So just really crazy behavior after, I don't know, just being sideways for, like the last like 6 months approximately. So I don't know, is this what's the technical term? Is this a breakout?
It's a breakout for sure, but it's got to calm down a little, I think. I think you want it to calm down. I think if you get another 100+ day, like right today, ahead of a big macro event on Friday, that's when things get scary.
Yeah.
For sure, yeah. To me, this doesn't feel like a breakout. It feels, I'm sure technical analysis wise, it is a breakout. It feels more like a short squeeze, to be honest.
I still stand by my 78.10.
78.10.
Yeah.
Hey, that'd be crazy. Another 400 points-ish. But yeah, Nasdaq just ticked red. So it feels like we might slide here a little bit, which should surprise no one. But we've got some hedges on, so we'll see what happens.
Yeah, I got some hedges on. And then, like AMD just kind of gave back, but it had like a monster rally yesterday. So it really just gave back a lot of its gains from yesterday. And I still don't think it's flat from yesterday. I think it's still up.
Yeah, that's a good point.
It is still up, yeah. It's not even still up. NVIDIA having a nice day for NVIDIA. Yeah, off those, from what I could tell, like the SpaceX mentions basically in their earnings announcements. Well, SpaceX is also, it did a 1-2 skadoosh. It's basically back from where it was yesterday.
Yeah, it's a good point. Both of them are basically around where they were trading on Monday.
Right, exactly. So I don't know. I hope people didn't get stopped out on those trades. But to see this one, I don't trade the earnings, but a diluted earnings trade. What I like to do. But want to get into some research?
Let's do it.
Sure.
Let's do it. Okay, so today, so this is a piece from God over Godlytics over on X. If you want to give him a follow, but we're going to be looking at trend trading. Like, does the trend really matter for selling premium? And that's something I can definitely relate to right now. But we're basically going to be looking at the strength of kind of trends in the market as he's measuring it here to see how that impacts strategy statistics for strangles and for puts.
Let's do it.
Let's do it. Okay. So let's get into this. So here we're going to be looking at 16 delta SPY strangles and 30 delta short puts, 45 DTE managed to 21 days. We're going to be looking at 2021 to 2026. So not the longest look back, but it definitely a bullish time period for a lot of that. Not the longest look back, but meant to be kind of representative of more recent market conditions. So here we're going to be comparing the price of the underlying versus its 50-day moving average, so simple moving average. And we're going to basically be looking at like how strong the underlying is relative to the moving average. So here he kind of gives the methodology a little bit below, but we're basically going to be defining a strong trend either to the upside or to the downside as the underlying price being approximately 3% or more above its moving average line or below it in the case of a downward trend. And we're going to be looking at, does the kind of trend, like the strength of the bull or the bear market really matter? Which regime kind of helps or hurts? And is that strength more important than direction? Make sense?
So we're getting S&P 500 SPYs gets the 50-day moving average. We're selling strangle there or a put.
We're going to be selling strangles and short puts like every day, regardless of what the trend actually is.
Okay.
But we're going to be breaking down the strategy P&Ls and the tail risk based on what the trending environment is when you opened up the trade. And here we're looking at 45 days, 21 DTE. So definitely longer term than a lot of people trade now. But we're going to be saying like, if we open this trade in a trending market, either to the upside, to the downside, or a quiet market, what are the trade-offs? Like, what do the P&Ls look like? What does the tail risk look like? What kind of benefits the most for these different strategies?
Got it.
Make sense?
Yep.
Like it.
We got a lot of grids here. I love a good grid. Okay, let's go to the next slide. So first grid, so here we're looking at neutral strategies. So we're looking at our, expected move, 16 delta strangle, and looking at average P&L per trade. And here we're breaking down the upward quiet trend, which is kind of like less than ish 3% or within 3%, I guess, to the upside of its 50-day moving average. The quiet down, the strong trend upward and then the strong trend down, where we can see that the quiet regime is really where these strategies tend to, at least from an average P&L perspective, be the most profitable, right? And these are like, your kind of, regular, typical bullish market conditions where maybe you get some vol pops every now and then, but for the most part, like the market is moving up and it's relatively quiet and less volatile compared to like the environment that we're seeing right now, where we're seeing a very strong trending upward, velocity, I guess you could say, in the market. What you can see here is that even though these are neutral strategies, they tend to average, like a positive P&L just overall during the look back period. Although we can certainly see, like I'm feeling this right now, like when those call breaches happen, they can really stink. But on average, just because you have fluctuations, you have volatility, you have corrections, even during those very strong periods, that still averages positive P&L. We really don't see the negative P&L until we start to see the strong downward trend. And that's just because the velocity of those moves in those market conditions, especially if expected ranges are tight, like when we go from, like VIX being, 16 up to being 30, when you're not collecting enough to necessarily compensate for those big moves, that's when we're actually starting to see those negative P&Ls appear on average, just looking at the last 5 years.
Totally makes sense to me.
Yeah. I think it makes sense to me too. So kind of makes sense. Yeah. So those quiet upward trends are really what benefit strangles the most. Noting that like vol doesn't always necessarily need to be high in those conditions, right? A lot of the time when, the market's just kind of drifting up in a steady way, like vol tends to be low. But that's an interesting thing about short premium is that, you still have approximately the same pops, I should say, across like all those different market conditions and different VIX regimes. So that being said, let's go to the next slide and look at the short puts. This is what I thought was very interesting, actually. So the short puts likewise performed very well when the market was drifting up and having relatively low volatility, being relatively quiet. But because the premiums inflate so much on the put side when the market goes down, it actually, the strongest regime for this strategy was the strong downward trend. So it really flipped from the strangles. And that's just because of like how much the, put premiums increase. So even though you might, take a loss, when the VIX pops, when it does pop, because that premium inflates so much, we're seeing that actually be the strongest regime here, where like the quiet downtrend and the strong trend are like, I should say like the quiet downtrend, the quieter ones tend to be a little bit more stable compared to the strong ones, or consistent, I should say.
Yeah, and I think this speaks to the lack of losses on a big rally. Like when we looked at the strangle, you saw some lesser losses on that big move to the upside. Of course, you see the downside move, but when you just have the short put, you don't have risk to the upside, so that's eliminated. But you also get that bigger premium on the downside moves, which helps a lot. Sure.
Yeah, that's an important thing to note, especially when the market becomes very volatile. When the market becomes volatile, like we think like market is predominantly going down, and that's just because the size of those downward moves are so big that like that's what we tend to focus on. But some of the largest moves to the upside also happen when the VIX is high and markets are elevated during like sell-off conditions. Like that's when you see a lot of moves to the upside as well. Or likewise, if we had, we saw this, over the last couple of weeks, we had one kind of rough down day of down 2%, and then followed by a bunch of like sequential up days to kind of make up for that. And we're really seeing just over the last 5 years, the puts really benefiting from that. Noting that like we're looking at very specific market conditions over the last 5 years. And we're also not switching the strategy depending on the trend. So this is just, if we trade it every day, how does the trend of the market as we're defining it here sort of change the statistics? Make sense?
Yep. It's almost like you can whisper that part at the bottom. The next slide shows the catch.
I might have, there might have been a little bit of it. Well, let's see what the catch is. So, and I'm sure you guys already know what the catch is. But when you're looking at those short puts, it's really that tail risk, and that tail risk where it doesn't happen very much, but when it does happen, it tends to happen when, if we go to the next slide, perhaps. There we go. So when we look at the short puts and we look at the tail risk, the sort of like market trending upwards, being relatively low volatility, just being relatively quiet, kind of hugging its 50-day moving average, that's when we see like the least amount of tail risk in the back test that we've done. And we actually see the down quiet and the down strong regimes kind of logging the highest tail risk, noting that these are relatively unlikely risks. These are the weighted risks in the weighted losses in the worst 5% of cases is what we're looking at here. And this is, again, just because like when those moves happen, especially when, expected ranges are tight and volatility is low, that's when short premium traders can incur some of the worst losses because your credits have not adjusted to the volatility conditions until after the spike, right? And that's kind of what we're seeing here during those downward movements, just because the market is so sensitive, or I should say volatility is so sensitive to the market going down, that we can really see that reflected here.
Yeah. And this is why sizing is so important. You have to be able to withstand these. It's part of doing business. If you're selling puts, if you're selling anything, you're going to get whipsawed at some point. And if your size is too big, it's going to be super painful. So got to keep that in check at all times.
Got to keep it in check. That's right. And also, just like being mindful during all vol conditions, because even though like pops might be relatively consistent across volatility, regardless of whether the VIX is at 16 or 70, like pops for strategies are relatively the same. But that being said, like tail risk isn't necessarily the same, and so just being mindful, especially across like volatility conditions of sizing, is I think super important. That's kind of reflected here. So when we kind of look at the next slide as well, but obviously like those strong down moves because like I said, volatility and traders, the market is so sensitive to the market going down. When that does happen and there is strength behind that move to the downside, that's when premiums really become the juiciest. So just really balancing that trade-off and taking advantage of those high volatility conditions in a careful, responsible way when they do come up is it's pretty important for sustainability long term.
Julia, just real quick, somebody asked in the chat, and I don't remember from the beginning, are there any stops for these strats or just let it go to expiration despite the price action?
So these are 45 DTE managed at 21 days. So we do have like early management kind of put in here, but we don't have like stop losses, which a lot of people would typically use for undefined risk strategies. So here we're just using early management. We're not using credit thresholds. We're just doing that to kind of control like the tail risk a little bit. But we really wanted to just try to understand this as cleanly as possible, if that makes sense. So we took out managing at a percentage of initial credit. Any kind of stop losses are not accounted for here. That would, of course, skew the statistics, as well as like rolling mechanics would change the statistics as well. Make sense?
Yep.
Love it. Cool. All right, let's get to some takeaways. So what we can see is that direction really beats strength here. Is that like that is like very much a major indicator, I should say, for this type of like trend trading analysis. Fearing the strong downward trend rather than this kind of quite quiet, sort of like bullish, low volatility market conditions is what's the most important here. And of course, like sizing is a very important part of that, and just maintaining sizing regardless of where the VIX actually is, because if that pop does happen when VIX is low, that is unlikely to happen. But when it does, it can kind of, it stinks. So when we look at the short puts, we really saw those, just because the premium increased so much, we really see those strong downward trends like becoming extremely profitable, right? But with that increased tail risk. Really in any of the conditions when the VIX was going down, or when I should say the market was going down. So here, what we can really see is that like volatility is just a very important thing here as well, a little bit more so than a trend, I should say. But yeah, I think that's what we got.
Love it.
Nice.
Beautiful.
Cool.
Great
Awesome.
stuff as always.
Yep.
Cool. Thank you guys.
Absolutely.
Good to see you.
Thanks for coming on.
Pieces.
See you soon. Adios. Yeah, E-minis selling off a little bit. NASDAQ selling off. And yeah, I think the biggest takeaway there is sizing correctly and just recognizing that tail risk can come in all sizes. The last 4 days, the tail risk has been to the upside. If you look at any chart in the E-minis or NASDAQ or any of these tech stocks. So got to keep that size in check and know where your opportunities lie. But that's the beauty of the research is they allow us to see those things.
But that's a good one, like kind of analyzing it up against a 50-day moving average. I mean, those are interesting times. And I always say, like, whether people are super interested in technical analysis, if you will, not that, using a 50-day moving average is technical analysis, but they do identify these greed and fear pockets where things eventually possibly move. And so it's kind of interesting looking at selling vol at those areas.
Yeah. Join us on the YouTube chat. If you haven't already, we're going to take the next 10 minutes or so after this break, scanning through, looking for trade ideas and questions. So join us on the Tastylive YouTube channel. We'll be back in about 90 seconds.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What's up, everyone? We are back. Join us in the YouTube chat. We'll scan through over the next 10 minutes or so, get your questions answered. But real quick, recap from the morning show. Decently active here. So I got in an SPX Super Bowl 77.45, 77.50 short put spread, 5 points wide, to buy the 78.50, 78.60 call spread. 1 day to go. Small 10-cent credit. We're chopping around there. We'll see if we get a rally over the next day or so. But AMD bought the dip here. 450, 440 short put spread to buy a 550, 560 call spread in September. That was a $1.50 credit in the middle there. GLD closed out of that. That was a nice winner on this rally and pop in the precious metals. So I had the 380, 390 call diagonal spread. Just had an order working for a $200 winner and got filled just a little bit ago. And then same thing with Netflix. Had an order to close for $240 of profit. The 65.60 short put spread to finance the 75.85 call spread. And Super Bowls keep on winning here in this green market.
Yeah.
Nice.
Yeah, they've been great.
You've been active too.
Yeah, I've done a couple of things. What have I done? Yeah, again, that was crazy. I had that order out yesterday. It wasn't a GTC order. I was surprised I got filled, but bought that, put back in Netflix, 50% gain there. NVIDIA, I've had some layered calendar calls, and as the stock has been moving higher, I've been able to take these off. Took off the 220 there. I still have another one. I think I got two more maybe. I think I got them $15 wide. So 235 and then 250s as well. Both the same way, September AUG. I did sell a future in the ES here at 7,800. I did sell a future here in the Qs for 30,000. Just want to, I feel like after these couple of days and the way we were looking this morning and stocks were up and vol was up, let's see what happens. Might just be for the day. SanDisk, I had that call butterfly on since last week. I've been, if you've been seeing the show and seeing some of the things I do, been doing these periodically a week out as the stocks have dipped. Didn't work out last week. These kind of worked out this week, taking this off as it's heading into earnings. And then McDonald's is one of those consumer staple plays that I've had on. I still have another one of these. I still have the 270, 300, I think, but took this one off as the stock is moving into earnings.
Yeah. It feels like SanDisk and WDC, they just have to go down, right? I mean after AMD, after all these stocks, like their CapEx is going to be through the roof. I don't know. I think that's to tease it. I think that might be the trade of the day, WDC, because it's much more cost effective to do it in WDC versus SanDisk. SanDisk is super expensive, but that might be the trade of the day for later.
Yeah, I mean, I went to ChatGPT and I asked, do they have the reports, SanDisk and WDC? Do they have to report free cash flows? And they said, yeah, they do. And they said a few nuances. Western Digital has historically highlighted free cash flow as a key performance metric because of the NAND and HDD manufacturing required to blah, 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 blah. And SanDisk also reports operating free cash flow. So, I mean, how is it positive? Like, how is it? So far, we've only had one company, I think, that had positive free cash flow, right? Like, was it Amazon? I can't remember. We looked at that graphic a couple of days ago, but there's only one that I've seen so far of the tech companies that we pay attention to.
I think it was Microsoft.
Was it Microsoft? Is that what it was? Yeah.
Because they're just so huge, like they can afford it.
Yeah.
It's like, I always go back to the COVID and your mom and pop restaurants shut down and they got bought out by the restaurant groups. It's like the same thing. Like they have the ability to float. But yeah, WDC, either way, they're going to be super expensive, but I have my eye on something that I'll reveal a little bit later. But it's definitely going to be defined risk. Probably a put calendar, but we'll talk about it later.
Yep.
YouTube chat, anything popping off there?
Let's see. I haven't noticed as much. Do we have any questions?
Do we have any?
Would you guys close up the short and free up the buying power on the free calls? Let the free call spread ride? I'm not sure exactly what trade that is. Well, this is a deep question. I mean, this is an actual question. Do you guys ever close the short put spread in must be the Super Bowl? Yeah, it's got to be. Somebody's asked if we ever close a short. We actually answered this question yesterday, but we'll answer again. We'll answer as many times you guys keep asking. A lot of times in those situations when we do have, let's just say you have a Super Bowl, right? And you're long a call spread versus a short put spread. We will close those regardless if it's $5 wide or $10 wide. If it's like 10 cents or 20 cents, and again, whether it's $5 wide or $10 wide, just think about it. How much you can lose if the stock falls back down. You can lose in that regard, $490 or $990 if it's a 10-cent spread. You just close that risk off, and again, you get that buying power back. So, absolutely. And for somebody who's asking us about Super Bowl once again, it's selling a put spread, which is a bullish trade, to finance buying a call spread. And so you try to get them on for a credit, not for a debit, right? You always try to get it on for a credit. And if it stays in between those strikes, then you keep that credit regardless, right? If you get some nice convexity move in the case of a Super Bowl to the upside and it breaches your long call strike, then you can begin to make some pretty good money. And then somebody who is absolutely going nuts about App Lovin' in the chat. I don't really trade that stock. I've never really been interested in it. We could look at it, I guess, but I don't know. And did this already have earnings? The only way I'd ever trade this thing if it already had earnings, and I would sell vol in here. Other than that,
yeah, $50 implied move on the $430 stock, so plenty of implied volatility. I just don't. I'd have to look into this a little bit more. It's on its butt, but
it's a software name, right? I think it's one of those software-related names, right? I can't remember.
Yeah, but either way, 50-point implied move on a $400 stock is definitely big. And one last note on the Super Bowls. This one I have in Meta. I sold the put spread and I bought the call spread, but my put spread was $100 more valuable than my call spread. So I have $100 of net credit in the middle. If you're buying back the put spread, the most important thing to realize is if you buy back the put spread and you put yourself into a net debit. So what I mean by that is here, if we look again, I collected a net credit of $100. So if all these options expire worthless, I keep that $100 credit. But if I bought back this put spread right now, and this is a $500 winner, if I bought back this put spread right now for $2, all of a sudden I have out of the money risk. If my call spread expires out of the money, I lose money now. I would lose $100. So keep that in mind. That's why Jermal kept saying 10 cents, 5 cents. Like if you can buy back your put spread for a very small dollar amount and you still maintain a net credit overall, that's the situation where we'd buy it back. Otherwise, we keep it on because that's how you get that neutral profitability and a high probability trade. But Jermal, it's been a blast of a morning so far.
Oh yeah.
Crazy day in the markets. E-minis have chopped around. NASDAQ keeps going from red to green, but stay tuned on the YouTube chat and the tastylive.com website if you're watching there. But we're going to pass it over to Chris and Liz. If you want to reach out to us, you can find us on Twitter. I'm at Trader Mikey B. Jermal's at Jermal Chandler. Stay tuned though. We'll be back right after this break.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
We're back. You're watching Tastylive. She's Liz Dierking. I'm Chris Vecchio. This is Confirm and Send. You ask us questions, we answer them the best we can, and maybe there's a trade that comes out of it. Liz, how are you today?
You know what? Today, I'm doing good. How are you, Chris? Good?
I'm doing well. I want to say I can hear voices in my head, but I know it's just Jermal. Producers, if you don't mind killing that.
Get Jermal out of our head.
We can't keep him out even if we tried, Liz.
You can't. He's always in there. Today's an interesting day, though, Chris. So we had a pretty big rally. We've come back down. But what I was going to say is the VIX is finally going according to plan, where the market is up and the VIX is down. This morning, when we were up 50 points, Chris, 50 points, the VIX was up 5%.
It screams to me that this market the volatility is being bid up because folks are buying a lot of out-of-the-money calls. And they're trying to chase this higher.
Well, that's what I was saying this morning, but now it's turned around, right? So now we've finally got the VIX performing the way that it should. With us up not nearly as much as we were in the market, VIX is finally coming down a little bit.
Well, I kind of think that to me reinforces it, right? The market rally cools off as the VIX comes in because the call buying is slowing down.
Yeah, it does. This is, to me, one of the weirdest environments I've ever traded in.
It's interesting. It is certainly interesting. We've had a lot of earnings, of course. Palantir, SpaceX, AMD. We still have several that are coming out later on today that obviously warrant some attention and some consideration here. Might as well get there right now. SanDisk, Western Digital, AppLovin, McKesson. There's a few here on the board. DoorDash. You go down the line, maybe get a little bit less popular, but Axon's even on there. eBay's on there. Surely you have some ideas in some of these names.
You know what's so funny is they were just talking. Well, Jermal was just talking in the chat, was asking about AppLovin because that was the stock du jour last year, right? So that thing just kind of skyrocketed into perpetuity. So I think a lot of eyes are on AppLovin right now. That'd be my guess. Other than that, they're kind of fringe players. I mean, you're going to trade DoorDash and eBay, and those aren't that exciting anymore.
Those aren't that exciting anymore. It's interesting that you bring up App here, and I want to just focus this in on this real quick. For those that haven't had a chance to go see our latest Signal versus Noise about AppLovin itself.
Oh, did you do one today?
We did one that came out last night about this because the stock has moved. It just has this incredible price history, Liz, around these earnings reports, and more importantly, the company's been removing its available float from the market. So when you get a thin float, you tend to get these outsized reactions, and you see it in SpaceX today, for example, 10% swing there. But yeah, it's this really interesting dynamic that's playing out right now. So I'd encourage people to go over to our YouTube page and check this out. But it consistently beats the implied move is basically the moral of the story here. Today, $51 in either direction on a $430 stock, so a little bit more than 10%, right? We're talking about like 12.5% expected move here. But this is really it's a stock that jumps around a lot, and I'll get into the numbers here in a minute.
It's relatively. I mean, I guess it's all relative, but it's not that old, right? It's only a couple years old.
Correct. Yeah, only a couple years old. The last 10-day print record is wild here. Q2 25 up 12% the next day, 14.3% a week later. Q1 25 11.9% higher the next day, 24.1% higher a week later. Q4 up 24% the next day, higher 29.9% 1 week later. Q3 24 46.3% the next day and 68.5% 1 week later. So the thing moves a lot. And when it's down a lot, right? Q4 25, it was down 19.7% the next day. So it has 306 million outstanding shares against $133 billion market cap last time I checked. And you think about AMD with its 1.63 billion shares that are currently outstanding. So you get, when you have a shrinking market float there, Liz, and you get a big surprise, there's a lot of demand or a lot of relative supply that comes on very, very quickly, and it can produce these outsized moves. So just for AppLovin alone, given how it has moved, I would be shocked if this stays inside the expected range here today.
And I'm going to dumb this down for the lay people like myself, because Chris, I love the way you articulate things. But what I heard, and you can tell me if I'm wrong, is there are fewer players in the game, so the moves will be bigger.
Yes, I think that, yeah, there's less paper to absorb the demand or supply when you get an earnings report like this. And that's by design. They've been buying back shares. They've apparently bought back in the past few years about 21.4% of the outstanding float. So more volatility perhaps on the way.
Did you, and I know you, I'm sorry, I did not watch your signal versus noise on this, and I should have, because it was the one that I'm going to be looking at today. But what are you doing in this? Obviously, I'm not going to, what I was going to say in these high flyers, I'm not selling premium on both sides. I have no problem selling premium in one direction or the other, but I'm not doing both sides.
No, I don't know. You mentioned, we talked about Jade Lizard environments. I don't know if this is an appropriate environment for a Jade Lizard, quite frankly, because it's not a creeper.
Well, that's neutral though. So then you're not so the Jade Lizard is a great trade. I'm not, I like it for earnings. I'm not a huge fan of it for earnings, because if I'm selling one side or the other, I'm not going to do a Jade Lizard, because if this thing skyrockets, I still want to make money. And if you set up a Jade Lizard correctly, you don't lose money, but you don't make money. So I would want to just be selling either the puts, or if I was bearish on it, just be selling calls or call spreads.
Yeah, to me, I think a lotto ticket kind of play here is, like a call butterfly or something, or a put butterfly at the expected move, to think that it can go to either. And you'd have to go pretty wide on it because this thing is super duper jumpy.
I'm selling puts because I don't think I'm going to be able to pin a strike in a jumpy stock. So that's why I would do something where if it goes up, great. If it comes down to its expected move or comes down a little bit, I'm still going to be fine. And then I'm okay rolling it into perpetuity.
Yeah, this stock is obviously a little bit different than the other ones that are coming up tonight, because there's several here. You have Occidental, you could also take a look at, but SanDisk, Western Digital being the two primary ones that folks have been honing in on. They've had a bit of a whippy day here so far. They get a little bit of a gap open lower. They're kind of pinned right now, off by 1.5%. We closed yesterday at 1,427. We open up today at 13.99, and we're currently trading at 14.07. So it's a lot of chop going into this. But SanDisk is a name that you and I have traded recently around here. Believe it or not, selling puts during the July move lower. I think we made out with a little bit of money. How are you?
Put spreads.
Yes, put spreads.
To be very crystal clear, because it's a $1,400 product, and that's just
we don't swim naked around here. To just always, at least I don't. So what do you make of this right now? It's had a big move. It is a big stock, of course. It's not like the $100 or $200 ticker. How are you approaching this?
So it's interesting. I think I'm going to look at SanDisk. I have been in SanDisk, and I do like to play in it, but it's a lot at these levels, right? So I don't know if the earnings, for me, I don't know if the earnings risk are worth this, but I will be playing it after earnings if there's any follow through. I think that if this has a big up move, kind of similar, and I know they're not in the same realm, but you know how Palantir had its up move and then it continued just to rise like a phoenix from the ashes. I think I'm gonna look for some follow through in one direction or the other in SanDisk. Now, we didn't get too much follow through. I want to look at AMD because AMD was down today, and it seems, it popped back up a little bit. But that follow through is really what I'm looking for in these big high flyers.
I had an AMD trade on going into the earnings report itself. We're kind of just sitting right above my short strike at 480. But what I did earlier today was here on the follow page, I took off the short call spread side, the 585, 590, in part because at a $5 wide strike, trading for 11 cents there, Liz. Not exactly, I wouldn't put that trade on for 11 cents on a $5 wide strike, so why would I keep it on? I've basically run it into the ground.
So proud of you. Take those things off. That's exactly what you do, and then you hold on to the losing one.
Right, and so AMD here, if it gets into maybe a little $5 back, this thing is at a small loss here, but net, it would be a few bucks winner, I think, what we took off the other one for.
Were you symmetrical on that? Was it an iron condor?
Yeah, it was a short iron counter, so it was directly at just on the bounds of the expected move for the day. So we're kind of holding within, if you were trading that and you took off both sides at the same time right now at this price, we are still technically within the bounds, and the short call spread side would have given you a net profit on the position. So I think I took it off for like $65. This one would come off for a $30 loser right now. Net it would be a winning. Short, little small trade for earnings, but it still worked out.
What did you get total collection on your $5 wide?
Let's see. We did $1.96 yesterday.
Okay. So you've got almost $2. You know what you can do with this, Chris? And I don't know if you would want to do this or not. If you go back to the position page, because you closed your call spread that was $5 wide, you can roll it down and put on a $2.50 wide call spread, take in some additional credit if you wanted to. Like go to see what you can get for the $4.95, $4.97. You can get anything done, which means you got to keep it $2.50 wide. Because when you do this, if you took in $1 and if you took in $2 and you're taking in almost another $1 here, then you can't lose to the upside.
That is true. So let's make a little amend this a little bit here. If we get a little bit of a bounce.
Yeah. So if you put that in, so what's great now is, but you got to remember the options don't remember each other. So it might look like a loss. You've taken in over 250. Yes.
Right. So I have Western Digital going on into this set of earnings as well. We're going to get to the confirm and send question, WDC, not QDC here, on the platform. I'm still sitting at 16 days to expiration. I like the 500, 510. The way that we've seen some of these semiconductor companies trade recently, they have been holding up a little bit better through their earnings. They are the price makers in this market. The hyperscalers are the price takers. So I don't see a reason to change this positioning here. It is a $10 wide strike, though. So would this be something still worth exploring? It's a 370 credit, right? Or if I were to take this off, let me put it the other way here, 371 credit. So yeah, $10 wide, 370 in credit is something that we would do, mechanically speaking. It's not like it's down to 50 cents and I'm just standing in front of a freight train potentially.
Correct.
So that's really it. That's what I have going on today here.
I like it. I'm actually going to jump into Western Digital with you. I don't know what I'm going to do, but I wrote it. Chris, this is how, savvy I am over here. I just wrote it on a paper towel so I don't forget to do it later.
And if you go into the expected move for Western Digital, for what it's worth, we go to the 480, 485s, for example. You're collecting, maybe you want to go up a little bit more, 45, 490. You're getting around about $1.05 in credit there on $5 wide. It's not fantastic, but you can tinker around with the downside of the expected move if you're a vol seller in this environment for today's earnings. And 490, 495, $1.28. What can you do, Liz? It's what the market's giving you. You got to take it or you got to leave it alone.
That's exactly what you can do. You can't fight what the market's giving you. You want more, but there's nothing you can do.
Ms. Dierking, stocks here are mixed, not quite at the highs today, 77.82. So I suppose it's a good time to head over to confirm and send. You send your questions in, research@tastylive.com, research@tastylive.com. We answer them to the best of our ability, see if there's maybe a trade idea in there that Liz and I would be interested in. You can put your questions in the YouTube chat. The producers do send them to us over the course of the session. Sometimes we just incorporate it into what we're saying, but I do see that there's a desire for us to not just have the confirm and send at one segment. We're going to try to keep this rolling throughout the day a little bit better here. But for now here, Liz, we should get on with it. And let's go to the first question, which either way, I'll go for this. Read this first. SpaceX lockup starts expiring tomorrow, which means a wave of insider shares can finally hit the market. That's a known event on a known date. Does something like that show up in the options ahead of time, or does the market only react once the selling actually starts?
I mean, I think that if it's a known date and it's a known time, I think the market is pricing in everything. These are all knowns out there because what we don't know is what people are going to do, because we know they got them maybe they're going to hold on to it for a higher price. It's helpful that I think SpaceX is lower than, where it even IPO'd. So that why would they want to unload lower than the IPO? So we don't know what the people are going to do just because the lockup ends. It's out there. That's my opinion.
Right. I mean, it's definitely a liquidity event. We can price in a certain amount of risk around such an event because it's a known. And the market, generally speaking, known events are getting priced. Unknown behavior is what causes the discrepancy.
Yeah.
But to that point then, Liz, we're not going to have everything perfectly priced. Because if all of these shares now become available for sale and the insiders go, we don't want to sell any of it, then yes, the supply is out there, but it hasn't hit the tape. And vice versa, if there's an expectation of how much of that insider supply is going to hit the market and more arrives on the scene, then the market obviously has more pricing to do. So it's not going to be perfect pricing around an event like this. But yes, when it's a known, as Donald Rumsfeld might say, then the market's going to have a pretty good gauge on it, and it's not going to just react after the fact like, oh gosh, there was a lockup ending. We should get to it. It's already gotten to it.
I got to tell you though, Chris, and I mean, this is with this lockup with anything. We've said this a million times. If we've said it once, you can give me the news ahead of time. You can tell me exactly how many people are going to sell and exactly what they're going to do, and the market might react differently, right? So prices, you might have some buyers come in, you might have something else come in. This is an ever-changing environment. So I don't know. I love that people ask us these questions as if you and I have the answers, but we don't. Do you know what I mean? We don't. No one does.
No. Right.
But we're gonna give you our best, and that's why I like the two of us together, because I don't have your macroeconomic brain. I just have the what happens when you're a trading brain, and I'm an anything goes person. And I like that you have the logic behind what is actually happening or why it could possibly happen. So it's good that I know you don't make sense and I don't make sense, but together we might make sense.
A little yin and yang here. We can go to question number 2, and it's about Palantir. Liz, why don't you take this one?
Okay, Palantir ran almost 30% in a single day yesterday. Its options were nowhere near pricing a move that size. When a name blows out the implied volatility by that much, does that make you rethink selling premium on high growth names at all?
No, but I mean, we've seen throughout this earnings cycle that some of these high growth names, particularly in the tech sector that are related to AI, are just blowing through their expected moves. And, you know, let's just take a step back. When we look at these expected moves in the pricing, when we look to the options platform and we see something like, I'll just go over to AppLovin for today, and I'll go over to the trade tab here. We're going to 2 days out. This is what the market's pricing for the expected move. This is the 1 standard deviation move. You can see the 2 standard deviation move if you go a little bit further out here. But this is all based on a normal distribution.
Right.
And the way that these AI names have been trading is they've been moving beyond the normal distribution of outcomes, of expected outcomes quite frequently here. So knowing that, like, that's the kind of realized vol component of this and seeing how that's the way that the market's behaving, it means that if I'm trading in these things, I need to be open-minded to the fact that we're maybe seeing a non-normal distribution type of move, something that could go further, closer to the tails, or even, you know, we'll say beyond the 1 standard deviation, or even out into the tails, right? So you got to go wider, define risk. You got to keep your strikes tighter. So if I'm thinking in a name of like AppLovin, maybe a few weeks ago I would have gone $25 wide on my strikes. Maybe I'm only going $5 or $10 wide. Maybe instead of going to like the 30 deltas, I'm going a little bit further down to the 15s. But that's the kind of, you know, in hindsight, you're always checking to see how the market's responding in real time and adjusting your own risk parameters around it. And I've saved myself some pain in recent days because of that. I made the mistake with Tesla. I learned. I stopped setting them too tight. And it's been an easier sailing since that dismal earnings report.
I think with something like this, you couldn't, I would not with anybody's money sell calls or call spreads in this. I'm going to use the premium. I like the inflated premium to sell one side, or if you want to be bearish, you can go ahead. I'm not saying not to. But for me, what happens when a stock goes down is it keeps its implied volatility and it's easier for me to defend. Just kind of like what we were watching when you just added that call spread on. It went down, you can add a call spread on, you have no risk back to the upside. I have a hard time selling premium in these type of illiquid, high-flying stocks. Both sides scare me. And most of my biggest losses have come from rip-roaring rallies, right? So I would never have sold calls or call spreads in Palantir.
I have not sold call spreads in Palantir ever.
Right. Never. I never have, and I probably never will, because I know how to defend to the downside through these type of moves. So it's hard because we're premium sellers. So nothing is one size fits all. And that's what I think is kind of interesting. Nothing is one size fits all. So what I think people are trying to do is saying, okay, AppLovin's a $400 product. It's got a 62 IV. The IV, it's technically 9 times out of 10 things are, you know, under their expected move than over. Nothing is that quick and simple. You also have to be, what have these sectors been doing? What is your feel for it? How do you feel? Like, I would be pissed if I lost to the upside in something like Palantir. You know what I mean? Or even AppLovin. I have no problem selling put spreads, but I do not gonna sell. I might at the end of the day after the earnings announcement, but not before. I don't want to jump in. Right?
You're speaking of something that I feel too, which is like when I see some of these names that are highly tied to the retail enthusiasm or to the meme stock crowd, as it were, then it's like, well, I'm not going to bet against the boys, right? It's more like these stocks, because of the particular attention they receive, kind of like a Tesla in the 2010s, they can behave a little irrationally. And that's not to say crazy, but they don't behave within the normal distribution of outcomes. And so when those moves happen, they happen to be asymmetric to one side of the table, right? You know, you may have days where like it's down 5 or 10%, but those 40% days when they come, they're usually only one side of them to the upside. So I'm with you. Like, I'm not selling calls or call spreads. I didn't take advantage of it when GME was mooning. I know some other folks around here did. It's not my bag.
It's almost like, as you're talking, you don't have teenagers yet. You've got the cute little ones, but it's almost like trying to talk a teenager into something. You just can't. There's no like logical. You can't logic your way into talking to a teenager. You just can't. So it's kind of.
I was on a call last night, and I was in the middle of changing a diaper, and so I had the call muted, and someone was just going on. So I unmuted the call. I went, listen, I'm more than happy to trade you this baby right now. I'm cleaning up all this, this dirty diaper. And she says, I have 2 teenagers. I will gladly trade you 2 teenagers for a dirty diaper right now.
100%.
So
100%. So yeah.
All right, we got another question here. You know what? Mike and I were talking about this morning because I saw this was sent to me over Twitter. When a stock pays a dividend, does that change how its puts and calls are priced? I've never factored dividends into a trade, and I don't know if I'm missing something. Liz, I mean, yes. There's a few things here, though, right? Because when you have a...
Well, I guess before you say this, I don't want people to get in the weeds. You do not have to really worry about this, okay? So it's not something, there is no gaming of the system. There's nobody out there who's got some arbitrage situation about dividends and stock. So I want that to be crystal clear.
Right. So like when you get a dividend, let's say it's a $100 stock, you have a $1 dividend, the stock price is expected to drop from 100 to 99. So mechanically, when you get to your dividend dates, what happens is, knowing that this is coming, the market pricing tends to reflect this. It makes calls a little bit cheaper. It tends to make puts a little bit more expensive. But Liz, I mean, the bigger problem is that if you're sitting in a position and all of a sudden the stock price goes down, you could now find yourself looking like you're short a call. You could get assigned. Or short a put, you could get assigned. And keeping that in mind is probably the most important thing.
You would never get assigned on a put. It's short in the money calls that run the risk of assignment. If you get assigned on a put, then congratulations on your wealth.
Fine, fair. You know, the OIC is, because I looked this up very specifically this morning after Mike had this conversation. But yeah, like you may be concerned with assignment. The market's going to reflect it, though. And the point that you have raised a number of times in response to some of these questions over the past week is that there is no gaming of the system. You just said it a few minutes ago. The options market will always be there. The options makers and price makers are always going to be moving there. So this is a known. It's kind of like a non-farm payrolls event on Friday. We know it's coming. We know it's happening. The prices will be adjusting around it.
Yes, the prices are. But I'm glad you brought up that. So the real quick kind of, if a stock has gone straight up and you have a call spread, a short call or a call spread, anything, it doesn't know what it's connected with anything else. If you have a short call in the money, that extrinsic value is less than the amount of the dividend, which I know is a big sentence, you run the risk of assignment. So in layman's terms, if you have a short call that's in the money, see how much the dividend is, and then look at the corresponding put. If the extrinsic value, which meaning if the corresponding put is less than the amount of the extrinsic value, you run the risk of assignment.
Right, because the call buyer is going to want to exercise early to capture the dividend.
Correct.
So, I mean, it's very corporate finance 101, but that's, I have some trades right now that are running into that issue. I'm just going to get away from the div date. Not that I'm short call spreads, I'm short put spreads, so I'm not worried about that per se. But I know that the market is, I'm also getting under 21 days to expiration. So I just like to avoid stuff like that when I can. I try not to have trades expire on non-farm payroll days or Fed meeting days or dividend days. Just avoid it.
Right. Why mess with it? And if you stay at that 21 days till expiration, if that's kind of your rule of thumb, you shouldn't really be in trouble, because the extrinsic value will still maintain its value. It's when you have something that's expiring, typically, unless the dividend is huge.
Liz, this is a great question to end this. Sometimes IV is elevated on a stock that has barely moved in weeks. That feels like free money, which usually means it isn't. What's the catch when high IV shows up on a stock that's going nowhere?
There's something going on. The market is smarter than you or I. So if there's high implied volatility somewhere, it's waiting on something. I'm just gonna give one random example. You'll notice in a lot of your retailers, they have retail sales which don't come out as earnings, but that's a number that comes out, and so you'll see a little bit of implied volatility around their retail sales numbers, but it's not really marked anywhere. So there is something that's coming out. Or, you look at, your drug names like Bristol Myers or things of that nature, and they're elevated because they're on the precipice of releasing a yes or a no on a drug. So even though there's no earnings coming up or it hasn't barely moved, the stock market is pretty intuitive, and they will inflate the volatility if something is happening.
So when I see volatility going up on a stock that's been coiling, and I love my little spring analogy here because I have not gone over getting a 3 on that AP Physics exam all those years ago. I'm not looking at that as like, oh, free money here. Look at all this volatility and nothing that's moving. It's like, no, that's a spring that's coiling. It's getting ready to do something here.
Something is happening.
Something is happening. Something is around the corner. I can't recall that many times where I've seen a stock coiling, and volatility's up, and all of a sudden volatility just falls flat and the stock doesn't do anything. I mean, it happens. But I can't think of that many times with any big names where that's occurred, where it's just like, oh, the vol's gone and the stock price doesn't move all that much. So, it's coiling spring, right? It's potential energy being stored. Which way it's going to go, who knows? So if you're going to trade it, define risk, of course. But if it starts to get directional coming out of a consolidated period with big volatility, I don't step in front of that. That's like, oh, we're breaking out. Something different's happened here. I don't want to fade this move. If it's going up, short put spreads because we can capture the vol without having a defined target to the upside, or vice versa if it's breaking down, short call spreads.
I like your coiled spring. It will forever make me think of you.
I hope I hope so. Actually, one of the guys who lives down the street from me here now works at the high school as a physics professor and knows my old physics professor.
Do you live right by where you grew up?
Yeah, I'm not in the same town, I'm in the town next door, but it is the same school district, technically speaking. Yeah, it's good. I get to have all the same like food that I really liked growing up, which is nice. The town's been a little nicer. There used to be this card store called Steggers on the corner where like there'd be these old men outside playing CeeLo and smoking like cigarellos, and we'd go buy baseball cards there, Pokemon cards there, and maybe that's where a few of us learned how to gamble ourselves. And now it's replaced by this very nice olive oil store, but it's just not the same skeevy vibe.
No, but
where are the kids going to learn things?
Aren't you happy that your kids don't have to go into the skeevy vibe and they can go buy nice artisanal olive oil?
No. No, they need a place to learn how to play dice and buy baseball cards. That's important.
All right.
It's very important. All right. S&P here is flatlining. The NASDAQ is too. The excitement from overnight has dissipated here. We have SanDisk, Western Digital earnings coming up after hours. Of course, we have AppLove, and there's a few other things along the way, Occidental, eBay, if that's the cut of your jib. Liz, we're going to have more live trading coming up here all day long on the network, of course. We have Gus and Errol coming up next here, and then we get into our trades of the day segments for a full hour before we get into Futures Power Hour or half hour, live trading with TP, From Theory to Practice with Dr. Jim, Tim Knight, last call and overtime. So full day here ahead on Tastylive.
Sounds good. All right, Chris.
Liz, always a pleasure. Everyone else, stick around. Brief break. More live trading coming up next.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Investopedia says we're the best for options trading. StockBrokers.com says we're #1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools, and place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investors Business Daily raves about us. StockBrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
What is going on, everybody, and welcome back to Risk and Reward, live from the SIBO floor, which is lively today. Let me tell you, we are at all-time highs, and the word I keep hearing is buy from the floor behind me. I'm joined as always by my wonderful co-host, Errol Coleman. Errol, how you feeling? What's going on?
I'm feeling good, doing pretty well. I know SpaceX earnings, like I was talking about this morning, SpaceX earnings is so disappointing. I mean, you're getting crushed every single day after IPO, and then we get a gap down after beating earnings, I think it was. Yeah. So, I mean, if that just doesn't show you know, kind of how SpaceX has been over the last month or two.
Huge sell-off. We actually initially, when just the numbers came out, we saw a giant jump in SpaceX after hours today. But then as soon as they started talking, things really fell apart on them. I joked this morning about how they said, oh yeah, we spent 3 times more money than everybody expected to, $18.4 billion in CapEx this quarter, which is incredible. It's like it's rocket science or something. I don't know, but you got to spend a lot of money. But they did so much spending that really drove things down. But I was laughing this morning because the way Elon tried to save it is he said, we're going to be doing $1 trillion a year in revenue by 2030 now, not 2031 as previously projected.
So a year.
Yeah. So usually we're talking about updating, you know, the full year projections, maybe the projections for the next year. Elon is updating the projections for 4 years from now, moving the $1 trillion a year revenue timeline up from 2031 to 2030. Okay. So
it was already a lofty goal at 31. At 30, I mean, you got the pressure on your back. So
yeah, and I don't know really what could have changed between IPO and now to make that the case. But it's the situation that we're in. I don't know. He says he's got it figured out. So we'll see what comes with SpaceX. But yeah, obviously quite a sad run since the IPO here.
It was disappointing to say the least. I mean, I was hoping for a little bit of a recovery in SpaceX. It was looking really good yesterday. I mean, we were up on SpaceX, I think almost $100. I think that's the most on a daily basis we were up on SpaceX. So to wake up, see it's down another 100 was just like, all right, we keep moving how we were moving on SpaceX. We still got 16 days left to expiration. So we'll let that one ride. But we've seen a lot of volatility in the market. Not only that, we've seen SPY at all-time highs. We see NASDAQ just below all-time highs. And I think this is still one of the larger divergences that we're really seeing in this market right now. And I know right now, NASDAQ, we're finally getting a little bit of a pullback. Is this going to be where we finally start to consolidate for a little bit? Or is that upwards momentum going to continue into the end of the week? I know we have NFT on Friday as well. So not to say we might see a reversal, but it'll be interesting to see if we at least slow down for a little bit because Monday and Tuesday was crazy.
Yes.
So looking forward to it, getting a little bit of a pullback in NASDAQ right now. We were able to take some shorts near the high of this move today, which we'll talk about in a little bit. But we were able to snag a couple $100 out of that. That was really nice because, as you guys know, I was pretty bullish on oil, and I had that oil contract on. I stopped out of that yesterday, and I didn't manage my risk as best as I could, honestly. I think I woke up yesterday morning, I was down about $150, and I saw it right there, and I should have cut the trade, and I didn't. It ended up turning into a $330 loser twice from what we were down on yesterday morning. And then we repositioned near the lows on oil last night, or I think it was early this morning. I can't even remember. And we got a better entry. And now it's looking like we have a little bit more breathing room. And it's nice to see the green on the trade, but it's like, we would have already been in the green overall this week on oil specifically if I would have managed that trade a little bit better and I didn't wait a little bit longer. But sometimes whenever you hesitate on managing your risk, you end up coming out with a larger loss sometimes. And that's exactly what happened to me on oil last night. So a little bit more volatility on oil. We repositioned. We'll talk about that a little bit more later, but it is nice to also finance a little bit of that risk with the micro NASDAQ position that we took today. So that's what's new in the portfolio. SpaceX is disappointing. We repositioned on oil. We were able to scalp a little bit of the micro NASDAQ. Tons of volatility. There's a lot to do.
Yeah, it is. It is a lot to do. Yeah, I went ahead and exited my SPX Iron Condor this morning. I've been tracking that one pretty diligently, but it's kind of like what I was saying yesterday. I was willing to hold through all the pain yesterday and just kind of see where we opened today. When we opened back at the highs today, it scared me off enough to get out of it. Of course, we've been sinking since the beginning of the day. We are still net up on the day, 0.12% on SPX right now, so essentially unched. But yeah, I decided that it just wasn't worth continuing to push that envelope at these elevated levels. It feels like the bullish momentum is really here to stay. If this is the extent of the drawdown that we're able to produce after the 2 days that we've strung together, I think we go much higher. So I'm content to get that neutral bias out of the equation, even though it would kind of act as a hedge against a lot of the long delta I have going on already. And move on to greener pastures.
Yeah, and not to mention, NASDAQ hasn't even made it up to its all-time high yet. So I think that's to the point. Maybe we do see a little bit more upside. I don't know.
Yeah, and you bring a great point up there too, because I've talked a lot over the past couple of weeks, and as has Chris Vecchio, about how RSP, the equal-weighted S&P 500, has been outpacing regular SPX as the rotation out of tech and into other smaller cap and retail names and financial names and all these other things has come into play. We are seeing that turn the other way today as tech begins to recover, as this rally comes in through the tech sector. RSP down 0.4% today, while SPX hanging just slightly up. So that's a good reminder why the S&P 500, the regular S&P 500, is not equal weighted. Important to put money into those strong growers, more heavily than some of those names down the board.
Well, it is. Whenever you pull up RSP, it reframes your perspective on the overall market sometimes. So it is definitely helpful. A little bit of a stronger pullback there, but we'll keep an eye on it. That uptrend sustains.
Talk about the overall market. This is probably the better lens to look at it through. We never do, but when we actually want to talk about what the whole market is doing, and we mean the whole market, not what the companies that we care the most about are doing, RSP is definitely the vehicle for that. But yeah, being the divergence there being illustrated.
What companies do we care about the most? What would you say?
What do we care about the most?
Yeah, what do we care about the most? What would you say?
I mean, Mag 7, tech more broadly.
Give me top three.
Top three?
Yeah.
NVIDIA.
From your view.
I mean, I guess in the market right now.
What do you think's the most relevant?
I mean, I think NVIDIA remains king. I think that, I don't know, I think you need a tech name in there that's not so intimately tied to AI, and I feel like the default choice there right now is Apple, which continues to work higher and higher. Apple managed to completely skip the sell-off altogether, just worked higher through that.
It's a non-good.
Yeah, bad earnings report pulled them down a little bit and pretty much unched today, but Apple continues to stay super elevated. I haven't checked the rankings actually. What's have we had some companies pass each other here? Let me find out.
Yeah, it's interesting because some of these names feel like they kind of slide into irrelevant territory for a little bit, and then you got names like Microsoft gapping up off of earnings and then seeing a straight continuation to the upside. And then now it's one of the biggest movers when it was just it will lull you to sleep with some of the price action that we were seeing because it was dead. It was quiet. Nothing was happening in there, but I guess things were happening under the surface.
Yeah. We're back to NVIDIA as king now.
NVIDIA
at 5.3 trillion market cap. Apple did eclipse 5 trillion market cap for a second there at the highs. It sunk back to 4.5 even. Google has passed them again. So 1, 2, 3 is NVIDIA, Alphabet, Apple in order. Microsoft coming in below them. Then obviously the Amazons, Broadcoms of the world rounding out the list. But TSM.
I wouldn't have guessed that one.
Yeah.
I didn't think TSM would be top 10. I think it would be relevant, maybe 15, 16, 17, but number 6 ahead of Broadcom, ahead of SpaceX, ahead of Meta, Tesla, Samsung. So didn't see that one coming.
Yeah, Berkshire Hathaway. I mean, yeah, you name it. TSM quickly climbing up these ranks, clean past Broadcom by about $150 billion now. So yeah, TSM, the semi trade is back. We didn't like the AI trade for 2 weeks, and now we love it again. So
bro, I was saying nobody's having a worse day than Leopold. I mean, imagine getting liquidated. There we go. Imagine getting liquidated at the lows of this move.
It was on his wedding day too.
Is that actually?
Yeah.
Oh my gosh.
To my understanding, that Thursday, it was last Thursday when that happened. That was his wedding day also.
Yeah.
So yeah, just
that's tough. I know everything's relative.
Yeah.
Right, because that's still a pretty good situation, you know. But I mean, from what you just came from, I mean, that's a sting.
Yeah,
that's
I
a
saw
big one.
Citadel just reported that July was their best month in history after that.
Oh, Ken Richardson's, I think Citadel was up like 6% or something like that. Yeah, so nobody's having a worse day than Leopold. But I mean, I'm not even dogging on him. He's gonna create something amazing. I know he's got a great head on his shoulders to even be in that position, to have the opportunity to fall like that. I mean, really says something.
Yeah. Oh yeah.
So,
It's what I talked. I talked about this on Overtime with Vecchio yesterday. But yeah, it's like being a head coach in any professional sport. You know, it's like if you win one Super Bowl, if you win one NBA
at
Finals,
24.
Yeah.
At 24, 25.
You got a job for 15 more years. He'll keep bouncing around. He might even fail upward a few more times. That's how these things go.
He's up 80% on the portfolio.
Oh, yeah,
That's nice.
And honestly, you know what? I respect the guy just failing. You know, you could go Sam Bankman-Fried route and do all this crap to line your pockets and defraud all these people, but no, he didn't pull any white collar crimes. He failed like a man.
Yeah.
So
the legit route is going to be a little bit longer.
Yes.
Shout out to Sam Brinkman-Freud or
yeah.
But yeah, no. With that,
I think SBF and Diddy are cellmates is the deal.
I heard about that.
Yeah,
I didn't know if that was conspiracy or if that might be.
They're definitely all on the same floor. There's like a high roller floor of that prison.
They could create a little pit, a little pit.
Yeah. They could. They got plenty of money.
Create some ramen, or create some whatever you want.
I guess SBF has a lot of restitution to pay, but Diddy basically got a slap on the wrist, so he's got money to trade.
Hey, some crimes. We'll move on from there. No, volatility right now trading at 1630. We had seen a little bit of an expansion in volatility this morning, but we're kind of coming back into 1630 now. So it doesn't seem like the market is still, not very fearful yet. Again, with the markets being at all-time highs, I know we're getting one of the first pullbacks that we're getting this week, even if we even want to call it a pullback, but we're getting a brief pullback in the market, and it doesn't seem like the market is fearful at all. I think they're pretty much shrugging off most of the quote-unquote negative news that we've been hearing about the market. Not only that, we had a pretty big pullback in oil yesterday. I know we were looking to get repositioned in that one. We'll talk about that later today. But oil trying to catch a little bit of a bid. This is a daily chart, but if we zoom into the 5-minute on the intraday, you could kind of see as the market opened up, we slid back to the downside a little bit more, had a little bit of a pop, and then kind of consolidating. So it kind of seems like oil's trying to figure out what it wants to do right now. And it's been a waiting game on that one.
For sure. Yeah, oil, this is just a tough spot. I should have never touched it. I regret it. I was losing. I created another loser for myself. Oil, I don't want anything to do with the oil anymore. I'll report on it. I'll keep an eye on it. I'll use it as a vehicle to determine what the rest of the market may do. But I'm gonna sit on the sidelines with oil for a little while. Need to take a break on this one.
It's one of the most I'm gonna use rambunctious. It's one of the most rambunctious products I think you can trade in the market. I mean,
it's like people always say, you don't want to get into a new relationship till you've completely healed the scars of the previous one. You're gonna project that onto the next one. I think such is true in trading as well. I don't want to get into another oil trade until I fully processed all these emotions, fully healed these things, so that my relationship with the next trade is not hurt.
So what you're saying is you don't want to carry the emotion from a past experience. You don't want that to dictate or influence your next move.
Absolutely.
Just like a relationship.
Yes. Okay, I like anything. I mean, I could do 100 analogies like this, but kind of short memory. Short memory helps you in this business for sure.
100%.
What's going on, everybody in the chat? Good to see all of you. Nice Boy, Ranch, Destinies, Darker. Who else we got? Organic Farming. Pleasure to see all of you. Yeah, my apologies, Ranch. You still have the USO trade open as well. Yeah, as do I. It was a cheapie. It's what I said when I put it on. If I wind up taking it on the chin, it is what it is. We can lose those $80 and keep it moving. But fortunately, the swing I took on Palantir yesterday is panning out exactly as planned to this point.
We selling off a little bit there?
I'll win one of these weeklies sometime, but that's what we're seeing play out on Palantir here. The whole logic yesterday was just that it's so hard for a company to log a second straight green day after a day like Palantir had yesterday, trading up 30%, and we find that to be the case here as well. Currently paying about 160. I was saying 162.5 seemed to be a pretty strong historical resistance going on Palantir. And we saw that manifest yesterday into the close. Closed yesterday at 162.66, so pretty strong at that 162.50 level. This morning we tested as high as 166.06 before kicking back down to 160. So feeling good about the spot that we're in for Palantir. Again, just need this one to close below 165 by Friday. So liking this spot. And like I was saying yesterday, I think that this little blip is all we really need to probably keep this down enough. We're now talking about being a little over 3% away from that 165 level. If we close down 2% today, I feel content here. This is insanity. It's happening behind us.
This is the loudest it's ever been.
I've never heard anything like this before. And
you got to be calm in the midst of chaos. It's a skill.
I was tactfully explaining it through the yelling the whole time, but once I finished my explanation, had to draw some attention.
I had to peek over at you. I was like, "Did you hear that?" I can't even hear you. No.
Incredible.
But no, you got a lot of breathing room on that trade. It looks like we had a pretty nice pullback from 166 now trading at 160. And it seems like from where that pullback started, that's pretty close to where you need it below. So some nice breathing room to start the day on Palantir for the rest of the week.
Yeah, and this was really the big day. A lot of these trades, anytime you do anything short dated, this is going to be the case. But with these weeklies, getting the first day right is so important. Like I feel so much better right now having this down 1.5%. We were already testing those levels. It feels like a whole sketchy situation, but now we only need this thing to go for 2 more days. And I feel like one of those could be a solid green day. It can move up 2.5% and not burn us now. So feeling a lot better about the position that we're in. Oh, hello from Germany, says Max in the chat. What do you think about SanDisk's earnings? Well, Max, if you're new to the show, let me tell you, I am the worst predictor of SanDisk on the face of this beautiful planet Earth. I have gotten every single SanDisk trade I've made throughout this entire run wrong. I'm 0 for 4. That said,
with that being said,
I don't know. I think SanDisk prospects are okay. SanDisk, these memory companies often. Let me start over. Often when companies are as elevated, as overextended as we're talking about with these memory companies. We've seen this in the same run. And even now, amid this sell-off, everybody's, so SanDisk is down $1,000 from the highs. Yeah, guys, it was a $40 stock 18 months ago. So let's hone in our expectations for SanDisk here. But usually when stocks are on runs like this, I say I want to fade the run into earnings. I say, oh, well, this is so elevated. What could they possibly do to make this seem so much better that they can actually make considerably more upside? But the caveat comes in with these memory companies because the way that these revenues are so insane right now, I feel that it's very hard to predict. I feel it's very hard to predict order flow, future guidance. Demand is through the roof. I think that there is a good chance that SanDisk could say something surprising, whether that be about the previous quarter or about what they're looking at ahead into the future. Future guidance is what matters the most in the AI space right now anyway. And if SanDisk say they could match revenue EPS, but if they say we're double our backlog expectations, that sends them flying because this backlog, memory is in such high demand right now that people are signing contracts with these memory companies saying, we will buy memory from you for the next 2 years at any price. That's literally how this is working. We will be a price taker for the next 2 years if you will please just sell us some precious memory. So when you're talking about a demand curve that looks like that, I do think that SanDisk has good prospects to surprise. So all of that said, I don't think I'm going to trade it myself. I don't think. I am tempted, but I don't think just because of how poisoned I am by SanDisk, cut back to my relationship analogy that I just made. I'm not healed from my previous SanDisk trades yet. But I do have a long bias on this headed into earnings.
No, 100%. I know these have been a doozy. I know I have the Micron trade on right now. And to the point that you've been making over the last few weeks, whenever one of these memory companies have earnings, it almost feels like you have like a micro earnings for the product that you're trading that's within the same industry or that basket of stocks like Micron, SanDisk, Intel, and all those other names. So I'm excited to see the earnings and I'm excited to see the response from the market. I don't have too much of a bias, but I think we're at a pretty pivotal moment. Are we going to continue to see the downtrend or are we going to pop back to the upside a little bit here? I'm excited for it. A lot of volatility at least.
Yeah. Western Digital also reports today. Thank you, nice boy. Thank you for giving Western Digital some love. I always say we talk about SanDisk and Micron. Poor Western Digital. Poor Seagate. WDC.
WDC. There
What's
we go.
the other one that I'm forgetting? Not Samsung. Oh, SK Hynix is publicly tradable in the U.S. now as well. They don't get forgotten though. Justice for Western Digital and Seagate. Okay.
Yeah, no, it looks like Western Digital consolidating, looking very similar to Micron, SanDisk, all those other names right now. But before we shift gears here, any other underlines we want to take a quick look at? SK Hynix, you just mentioned. Do you remember the ticker? Was it
SKHY?
SKHY.
You'll get it sometime.
I will eventually. I don't know, actually, at this point. If I didn't get it now, I don't know if I ever will. But
That's true. It might be too far gone.
And that lets you know I haven't even actually taken a look at this one really since we've IPO'd, but it's looking a little bit better than the IPO of SpaceX. I think SpaceX just had so much hype because we've headed in one direction on SpaceX, and at least over here on SK Hynix, we've seen a little bit more consolidation. We've seen a little bit more two-sided action here. So trading at 154 right now, performing a little bit better than SpaceX. So
I just got assigned 200 shares of TLT right now, right here, right now on this show. It happens to me too, people. I'm trying to figure out how to manage this, but the thing just popped up that I got assigned on these. So currently in a little bit of a flux. We're gonna be fine. I have such long bias on TLT. I'll just hold these till 85. We're gonna be fine, but I gotta lick the put side of this.
No, yeah, I think we could see a little bit of a bounce too. So if I had to be on one side of the market on bonds right now, I would be leaning to the long side. I know Chris disagrees with that. I got his thoughts yesterday on it. Hey, but it's the market. We'll see what happens.
Yeah, how much? Yeah, that hurt my buying power considerably. It's okay. It's going to be fine. We're going to be fine. TLT is going to continue to work up. Anytime bonds drop, they're a buy, okay? We're going to be fine.
I've heard that. I've heard that quite a bit. No, that's funny.
Oh, my goodness. Dom's popping in chat. Quinny Driss popping in chat. Good to see all of you special people.
Yeah.
Errol, that SPY short call spread with 16 DTE still might pop, question mark. Oh, you got a SPY short call spread?
I might have taken that one off a few days ago there. Was it Mike?
What?
Was it Ranch?
Ranch, yeah.
Ranch? No, I think I took that one off quite a bit ago. What do we have on in the indices real quick before we shift gears?
I sold it.
I have no QQQ. I have no SPY right now. What did I do over there? I think I had taken some off yesterday. Let me see. Let me double check. Looking over here at the options chain, we got out of the money call spread on QQQ. We closed that one 8-4. So we closed that one yesterday at about 8:30 a.m. And then after that, we took some more trades earlier that day that we got out of for about break even. But yeah, as of now, no QQQ, no SPY in the portfolio. But quickly, I know we're kind of running out of time here. Just want to look at what the NASDAQ market is doing right now. I know we're getting a little bit more of a sell-off right now. It'll be interesting to see where we head from here. Because I know one of our more prominent levels we're trading at right now, we don't have it marked off, but we're trading at one of our value area lows right now. So it'll be interesting to see at this point right now if we're going to get a continuation to the downside, or if we might see a little bit of a reversal. If we get a little bit of a reversal, I could see us at least trading to 29,905. But with that being said, this morning we got a lot of action off of the micro NASDAQ this morning, off of our value area high. The markets were so extremely volatile. It was a little bit difficult to manage, and it was a little bit tough to sit through. But we got short a couple contracts near our value area high. As we began to pop towards another high, I took off one contract because I really wanted to manage my risk, especially considering the past, especially considering the oil trade.
I feel those scars, man.
Considering the oil trade. No, I am. Considering the oil trade from yesterday too, right? So I don't want to get stopped out on 2 or 3 contracts, considering the fact that I got out of a red trade on oil yesterday. So that was the whole idea about the initial stop out on one of the contracts over here. But we were left with one contract risking the high of the day. So we would have stopped out if we made higher highs. But we started to see a little bit more selling come into the market, started to consolidate a little bit more. And then we stair-stepped lower. And then we covered near the morning lows. We saw a little bit more downside. Sometimes you can kind of kick yourself because you're like, well, if I held a little bit longer, I could have caught an extra 20-point move, 40-point move. That would have covered the entire oil position. But I think that kind of mindset can trap you in some type of trade sometimes. And you might get stopped out at break even or even take a loss. And then you're going to be wishing you would have got out of your position when it offered the window of opportunity to do so. So that was a micro NASDAQ. Lastly, I just kind of want to show you the positioning that we had on oil. And if we go over here to the oil charts, I have a stop loss. And okay, I was like, did I get stopped out? I might have. A lot of the times I set the stop and I come back on the charts and I'm already stopped out. But I'd rather have the stops in there just in case. We're up about 124 right now on micro crude oil. So from the gains today and what we're up right now on micro crude oil, we've recovered the $330, $50 loss that happened on oil earlier this week, which feels pretty good. But you can see last night, we were looking to reposition, right? So we had gotten long on oil. Let me put this on a 5-minute chart. I apologize. So like this, what is this maniac on the 15-second chart for? But if we go over here to micro crude, just bear with me. Bear with me now, bear with me now. If we look over here on micro crude, this is where we were initially looking to get long, right? So we get long down here. What's that? What's that?
Chat's making me laugh. One of us is having a mic issue right now, but they're comparing it to rain, calling it ASMR, nice and soothing. Send your rain west. Yeah, apologies, guys. We're working to resolve this.
Yeah, we got you. But no, the tables turned so quickly on crude oil, right? We were long at about 79 flat. We get up to about 82.5, and then we completely sell off within an hour, taking out those gains. And this is where I should have stopped out in the morning, but I held a little bit longer. I saw the opportunity to get out of the trade. I should have had my stop down at the lows. Didn't do that. We stair-stepped lower, got into a deeper drawdown. I decided to cover down here at the lows. And once we got a little bit more of a reversal, we went ahead and got long again on oil. Down at about 75.51. Got stopped out for about 12 bucks. We sold off to another low, and that's when we went to get long at 74.33. So if we breach 74.22, which would be a new low in that downtrend on oil, I'm gonna stop out of the trade. That's gonna be about $11 loss. That would sting a little bit. We're up about 115 right now. The market is pulling back, but we'll give the trade room to breathe, give the trade room to ride a little bit and just manage risk as we do. So with that being said, that was a micro NASDAQ micro crude oil, and yeah. What else you got? What else do you have your mind on?
It's an interesting, bit of psychology you just lightly dove into there of like, mitigating your risk on NASDAQ because you just got burnt so bad on CL.
Yeah.
I'm curious, and I think we could have a 20-minute conversation about this, but in the two that we have, what do you think that there is, because there would definitely be a school of thought of, every trade needs to be independent of one another. You shouldn't treat any different because you got burned on one. That doesn't mean you should be risk on or risk off on the next. But at the same time, sometimes that oil trade in this example that we're talking about will show you like, oh man, I'm taking a little too much risk in general. Like I need to chill out a little bit more here. So how do you balance that? How would you say that there's, obviously you think that there's some credence to doing what you're doing, but is there just never change your size?
Yeah, I mean, I think so. I think you're right. I mean, I think we should kind of treat each trade independent of one or the other. I think it really comes down to where your personal emotional level is at right now, right? Like I think, maybe size up a little bit if you can still execute with a clear mind. But I don't know if I got that question just right there, Gus. Did I hit the nail on that or how?
I think that's a fair assessment. It's just something I wanted to highlight.
Yeah, no, because
it's a delicate line to toe because there is absolutely credence to both, and it's just about striking the right balance.
It is 100% because at the same time, it's like now we might be able to recover off that position because we're up over $100 on oil, but we didn't allow that to knock us off our game to be a little bit trigger shy and not take the next opportunity. So it's definitely a fine line that you kind of got to balance. So it's a good point.
Yeah, absolutely. But we're about at our time here, and we have a wonderful guest waiting in the wings to join us next, so we will not stand in front of her any longer. That's going to be all from myself and Errol at the SIBO today. Thank you all so much for taking the time to hang out with us. We dearly appreciate it and never take it for granted. Errol and I'll be back here same time, same place tomorrow, 12 o'clock noon. Sorry, 12 o'clock noon. I did the old time. Man, blast from the past. 10:30 a.m. Central Standard Time. Be sure to come hang out with us then. Stay tuned for a great interview coming up next. We'll see you guys next time.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Welcome back. You're watching Tastylive. This is another edition of Live Trading Trends. We have an excellent guest here today because the charts are certainly beginning to evolve, so to speak. You've probably seen her on CNBC before. She's the CEO and founder of Fairleaf Strategies, based out of, right down the street from me in Greenwich, Connecticut. It's Katie Stockton. Welcome to Tastylive.
Thank you so much, Chris. Good to be with you all.
So right now we have a day where the S&P 500 was pushing new highs. The market's come in a little bit here today, but it looks bullish on the surface because new highs attract momentum and they force underinvested traders to chase, particularly after what was a rough 2 months here. When you see the S&P 500 at new highs right now, what does your work say? Confirmation of the bull trend, or is this a market that needs more digestion after what's been a ripping week?
Well, I would definitely emphasize confirmation as something that we're looking for from the market, because with any kind of breakout, you want to see it hold on to it for more than a day, and it is brand new indeed. As of yesterday, the S&P cleared final resistance, which is right around 76.20. So assuming we get a solid close above that level today, and ideally in the upper half of today's range, that will confirm a short-term breakout. And like you said, new highs are generally bullish and tend to foster additional upside momentum when you have a breakout, especially from a range. And the good news from that is that we could see a nice recovery from the areas of the market that did lead on the downside in July, which of course was a pretty rough month for much of technology.
July was an awful month for the month of technology. July usually being a good month for the market, seasonally speaking. I know a lot of folks went into July thinking 11 for 11. What could go wrong? What went wrong last month in the market that it was so difficult? And why were we able to snap back so quickly here at the start of August?
Well, it does seem somewhat headline driven, and the charts will never really answer why something is happening, unfortunately, but it certainly will tell you what is happening in terms of the dynamics between supply and demand and market sentiment, which are really truly the driving forces after all. But in July, I think what we saw was just the first notable loss of momentum in months. And what we were using at the time to measure that, it actually started to roll over ahead of the corrective action in July. It was the 20-day moving average, a really simple trend following device. They started to roll over the 20 days on a short-term basis for the likes of semiconductor stocks, which had exhibited upside leadership. So I think it was the loss of momentum, which is pretty much the obvious takeaway, right? But also the loss of leadership and relative performance from the AI trade, which we knew was so important to market sentiment. And then, of course, it gets exacerbated by the fact that these are high beta stocks, some of them very much unproven companies. And the retracements could be really dramatic in that kind of scenario. But even for the large cap growth names that are very solid companies, something like Corning, for example, had really, really extreme retracements. And with that, of course, now we have an oversold condition, and that could be contributing to the rebound that we're seeing.
When we think about this deterioration of momentum, obviously momentum can continue a very long time in a healthy market. It can stay overbought right now. When momentum doesn't continue to the upside and the market's making new highs, it usually catches my attention. Has momentum officially reignited from your perspective?
On a short-term basis, we do have some bullish crossovers, but that's on the daily charts. On the weekly charts, it's a little bit confused right now in that we had a loss of momentum that was pretty meaningful. We even have some negative divergences out there in the weekly momentum indicators, things like the MACD indicator. But this rally has the potential to give way to a whipsaw. So whipsaws are really pretty rare when it comes to these smoothed market timing devices. And they just tell you to pay attention. And that's, of course, what we're doing right now to this breakout, deciding whether it's real after today or tomorrow's trading. And with the whipsaw, you can see immediate upside follow through, but it often isn't a lasting development. They tend to sometimes fail pretty quickly. So we're looking at this, if the breakout's confirmed, as we would expect, to be more of a short to intermediate term development that's bullish, as opposed to something that means, okay, well, we have the cyclical uptrend entering a new leg.
Yeah, one of the particularities of this market throughout the month of June and July was the fact that you didn't really have a breakdown in the broader markets. The NASDAQ obviously had some trouble at the headline index level. SMH was underwater. But when you looked at something like RSP, the equal weighted, it kept just grinding higher. I know that Fairly now has a new sector tactical ETF, TACK here, which is effectively equal weighted as well. Why is this an important signal for traders to pay attention to? I feel like sometimes when I talk to some of my coworkers, you see the Russell and the RSP holding up, not a bad sign for the broader markets. Calm down. I get these funny faces.
Well, it is really interesting because we saw a positive divergence for those equal weight proxies, including RSP, including TAC, with the S&P in July. So we saw new highs from TAC, and we didn't see that new high yet from the S&P 500. And that's an environment in which we have sector rotation that we're honestly not accustomed to of late, right? We've had very concentrated leadership from technology, but thankfully, because when technology lost the leadership stronghold that it had, there were other sectors to kind of pull up some of that slack. And that's why you saw the equal weight proxies generally grind higher, even to new highs, as the S&P 500 kind of floundered with its big tech-heavy exposure. I think it ranges up to 35% of the index. And of course, equal weight proxies are much different in how they're balanced. So it was interesting. The breadth was actually pretty healthy throughout it. So that was a contributing factor. There are other sectors that have some size to them. Financials, for one, actually had some relative performance that seems to be fading a bit. So we do track the sector rotations very closely. And we usually expect technology to outperform when we're in these early stage rallies. And we focus on it for a loss of momentum as well when we think things are fading.
I like paying attention to sector leadership because it can kind of tell you where you are in the economic cycle, in the bull-bear cycle, if you will. Some things perform better than others during periods of time. I mean, tech leadership is saying one thing. I can think of staples and the way that retail ETFs have moved in recent sessions. They may be saying another. What sector is giving you the cleanest read on leadership right now? And I asked that almost perhaps as a two-part question. I recall last year watching CNBC, Bloomberg, et cetera, and so much of the complaining about the market was it was all concentrated in the Mag 7. This year, the Mag 7 hasn't done much of anything for the broader indexes. So who's really in charge right now?
Well, it like I said, during like up markets, it tends to be technology, but that's of course not been the case. So during the corrective period, we saw the best relative performance from financials, from healthcare, for some segments of it from energy. Energy was the best performing sector in TAC in July, up, I think, more than 12% for obvious reasons, right, with the crude oil influence and headlines. So there's sort of a tug of war, I think, in a way, sometimes between energy and technology, just based on the headlines. So that might determine, how long-lasting tech relative performance is, and how long-lasting perhaps also the immediate upside follow-through that we've seen from this breakout will be. But right now, we're mostly equal weight the sectors because we feel that there's a transition underway. So technology has lost upside momentum in a pretty meaningful way when you compare it to the S&P 500. So while we would expect short-term upside leadership from the breakout, we would also expect that loss of momentum to give way to much much choppier second part of the year. So we're not looking for that same concentrated upside leadership to persist in the way it did off of the April or sort of March, April low period. So it'll be interesting to see how it unfolds. We're also at the moment not looking for substantial outperformance from the likes of consumer staples or REITs or utilities. They might do a little bit better with yields poised to pull back. But that doesn't mean you can't find some great setups in absolute terms. So if we're talking relative performance, that's one thing. But there's a lot of nice looking charts out there. And with this up move over the past week or so, we do have a lot of breakouts, as you'd imagine, from a bottom up perspective. Amgen would be one that I just stumbled on today as having a breakout pending confirmation that's pretty clean on the chart. So it'll be interesting to see if these are confirmed. The Mag 7 has kicked back in also over the past couple of weeks, and it seems to be less instilled by top-down macro forces and more about their earnings and the reaction to their earnings reports. So we're constructive on most of the mega caps, not all of them. Somewhat for different reasons from a technical perspective. As an example, Microsoft has a breakout, whereas Alphabet has an oversold upturn on its weekly chart. So different setups, but both positive from a technical perspective.
So when we're practicing this as technicians, right? I'm not a CMT, but I have the John Murphy book right here by my side almost every day. I've read it almost monthly for the past 15 years. I think of the idea that we try to be agnostic to what's on our screen here. A chart is a chart is a chart. But when we think about the risks that are coming up here, we have the Fed, of course, percolating, the Iran war, we have midterm elections coming up. How does that calculate or add to the calculation of your thinking about the risks over the next few months?
Well, we are more neutral in our longer term bias, including, say, like 6+ months. And it's not about the forthcoming events that you cite. For us, it's really from a technical perspective in that we have on the monthly bar charts, you can see the secular and cyclical bull trends are very much intact for the major indices. But there are some indicators that show signs of upside exhaustion. Doesn't mean we move into a bear cycle, but it does likely mean that we have a more choppy environment ahead, and July and to some degree June might be the beginnings of that. So we are looking for more choppiness, more volatility for the second half of this year. We think it's already begun, and a lot of that comes from those signs of upside exhaustion. We're using the DeMark indicators to that end, but you can also just look at the prolonged overbought reading and trust that perhaps, the stochastics as a downtick for the NASDAQ 100, that might become an issue. So not necessarily an imminent issue for the market, but something that differentiates it from the earlier stages of the cyclical bull.
Sure. Before we go, and I do have one more question here, I can't help but notice on a day like today, gold is finally starting to get its groove back here, whereas Bitcoin is still somewhat struggling throughout this environment and this tape right now. It's up 0.5% here. I know that you guys have also likewise launched a new Bitcoin ETF BNAV here. Why is Bitcoin having so much difficulty trying to capitalize on this environment, whereas gold may not be? It's actually facing a little bit of a lighter step in its shoes these days.
Yeah, so there's stabilization, I would argue, for both. For gold, the bullish action over the last really 2 days is somewhat promising. It has a relief rally, it seems, underway that could persist. But at the same time, gold did break down recently below what we call our cloud model, so Ichimoku for those that are tracking it more closely. And that suggests that gold has entered maybe a more prolonged down cycle. And that, with that in mind, we'd view the relief rally as counter trend. For Bitcoin, it's a bit different, but it has been bumping along the bottom. Important support for Bitcoin goes from about 58,000 to 60,000. It has been holding that level longer term. And if you look at the monthly gauges, there certainly are some signs of improvement to suggest that we might have a basing phase underway. Our Bitcoin ETF BNAV is tactical, so we're taking a greater position when the momentum is at its best across time horizons. And we don't have that quite yet, but the way it's setting up, it looks like we could be using that leverage soon.
Katie, this was a great conversation. I always love having someone on the network who likes to talk charts, so hopefully we can have you back again at some point in the future. She's been Katie Stockton, the CEO and founder of Fairlead Strategies. You can always see her on CNBC Bloomberg. I've seen her around quite a bit over the past year, so it's a pleasure to finally speak to you in person.
Same here, Chris. Take care. Thank you.
We're going to go right to TP here. We're going to keep this train moving. We have to check in with our friend Tom Preston as we keep going here with some live trading. TP, I believe that we have you coming up next, so we're going to take a quick 30-second break. Tom Preston, you're watching Tastylive.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We're back. We have another 15 minutes ahead of us before the next break, which means we have time for a quick little Preston, Tom, our very own 007 here.
I tell you, Chris, what people don't hear is all the grief we get from our production team. Like, it's like, so oh, much. Chris, that outro didn't work well. Oh, TP, it's like you're doing this technical analysis, Chris. You're doing this macro stuff. You're doing an interview, and they're giving you grief about a segue. I mean, really, Chris, really. Okay, that's a little
tough out here.
Hey, so I want you to take a look at, so obviously, gold is up. I heard you talking to Katie there a few minutes ago. Bitcoin's kind of flat. Look at this divergence, though. Take a look at /LE, live cattle.
Hogs. Cattle, excuse me. Cattle.
Versus, LE is live cattle, and HE is hogs.
Yeah.
Hogs is down. Well, pork is down. Beef is up. I know they're different markets. I get that. But yeah, the price of beef has been going up. I understand even going to Costco, meat's a little bit more expensive. Pork, though, I might be swinging over into some pork butts this weekend.
You know how much I paid for? So my daughter really is just like doing the full American kid thing now. She does 6-7. She loves Taco Tuesdays. Yesterday was Tuesday, so we got the old El Paso off-shell taco kit, really classing it up around here.
That is,
yesterday,
Chris, that is so New York, okay? That is so New York, okay? El Paso taco.
Sorry to someone who's an Austin resident. That's probably very inflammatory and offensive. But my point, it's like you go to Sbarro's and being like, "This is America's pizza." It's like, what are you talking about, Sbarro's? Okay, so yesterday, 1.05 pounds of 85.15 ground sirloin, like with the just standard ground beef that they have at the grocery store, was $11.05.
Holy smokes, that's a lot. Was it organic, grass-fed, anything like that?
No, just like the styrofoam tray wrapped in plastic with that little parsley, there to make it look presentable.
It's down here outside of Austin. It's about at my local HEB. It's about I want to say about $5 a pound, maybe $6 a pound for like the prime ground beef I buy. Anyway, no, but the price of LE is up. HE is down. I was looking at hogs today, Chris. I haven't traded HE hogs in a while. And I don't know what you make of a chart of HE, but it's been getting whacked over the past week.
That's a pretty ugly looking chart, but it feels like it's done most of the damage to the downside already. I mean, do I want to? I'm assuming you're looking to sell a put spread in here, which is why
you would assume correctly. And the nice thing about HE, and I'm looking at the 9 days. I'm just looking at the 9-day expiration, Chris, because I don't necessarily want to go 40 days in this thing. It has single point strikes. Very, very convenient. Means I can manage my risk very, very carefully. I could sell the 94, 95, buy the 94 puts, sell the 95 puts, collect a 30 cent or 75 cents or
$7.5 cents.
$7.5 cents, $30 credit. That's what translates into $30 credit for a max loss of about 370. You say, well, that ratio is not great, but that's almost 10% in 9 days. If I were going to do a naked trade in there in the 95 puts, capital requirements, buying power effect's about $1,400. That's a little steep for just a naked short put in there. But I would do either, let's say the 96. You know what I would do, Chris? I would sell the 96 puts, buy the 95s.
20 cents. It feels like it's on the low end of the mechanics, TP. Why stray? Why do you feel so compelled to stray, for example? And look, right here.
Because I want to play. Because I want to play in hogs. And I love pork. And you know what? It's why
if you
not? If
you have to take delivery of some hogs, you're okay with that? You'll put that
I'm okay with that. I could take down some hogs. I could take down a tractor trailer full of pork. Sure, I could do that.
All right, so TP's going to sell the 96, and if anyone's interested in buying hogs in the future, we may be starting a bacon business here on Tasty.
Seriously, I'm going to ship that and see if I get filled. Working. Nothing done yet. Nothing done. A couple of the other things I'm looking at is the grain market. Wheat is up a little bit. Corn down today. Beans, ZS, beans are down too. So I don't know what the story is with grains. I wasn't reading the news. I just saw these pop up on charts. And thinking about maybe selling some put spreads in ZS. That one's down a little bit more sharply than corn or wheat. So looking at ZS, I don't know, Chris, what are your thoughts about ZS?
61.4 IVR, but the actual volatility itself is pretty dang low here, TP, 17%. Where's the expected move out right now? About 1125, which brings you down to here on the chart. I don't know if I like that at 16 days to expiration. What is it?
Well, that's pretty far out of the money.
Yeah, I'm going out to 51 days in the November expiry, the XX contract. See what that expected move is down here. That's actually a little bit more palatable for me, where there's like a major swing zone. So if this thing falls a bit more, you could kind of absorb some time on your side, holding above.
So here's what I'm going to do. So first of all, this is just taking a shot. Like, getting long hogs, for example. Do I know anything about the hog market? No. Do I know why it's down? Not really. Same thing with beans. I do trade grains a lot more than I trade the meats, like live cattle and hogs. But I'm looking at the skew for soybeans. It is pointed. It's pointed to the upside. Not a huge amount, but it is pointed to the upside. I'm going to sell 16. I'm going to do the 16 days. I'm going to buy the 1134, sell the 1136 puts. take in for 62-cent credit, 62.5-cent credit. That's max profit of $31 versus max loss of 38. So that gets me about a third of the width of the strikes. I'm going to ship that and see if I get anything done here. Nothing done yet. Nothing done yet.
Yeah, I mean, the one thing for the, meats, grains, there was a fire in the AgriStar plant in Pottsville, Iowa, which processes poultry and beef.
Okay.
Which may be a contributing factor for the upswing here in cattle prices in the short term, but that was from last week. That was from the 28th. So you can see actually here, the 28th is the day that report came out. We've been kind of gliding up since then. Whether those two things are connected or not, but there's no WASD report. There's been nothing in the short term. There's a website that I use, dtnpf.com, the progressivefarmer.com, where they post all this stuff. It's some Midwestern news bureau. In any event, TP, I mean, I don't take a look at hogs or cattle that often. I dabble in the grains from time to time. I really like doing it when there's geopolitical stresses in the system.
Mm-hmm.
It was actually one of the trades that we were playing right out of the gate of the Iran war, was long the 650, I believe, in ZW. I'm pretty sure we could just quickly, I just want to double check so I'm not making things up here, but ZW, that was the 650, 680 call spread in ZW. So that worked out pretty nicely when it hit. But TP, these deserve attention, right? One of the things about being a contrarian in the market is not just looking to buy low and sell high. It's looking for opportunity in places where no one else is, and that's usually where the alpha is contained. So why not go over to the grains and go over to the different segments of the commodity market and the futures where hasn't been much love?
No, I mean, so it's, and that's an excellent point, Chris. And, called me yesterday, producer said, hey, Tom, can you hop on with Chris at 11:15 for talk about futures? Sure. I trade futures pretty actively, futures options specifically. Happy to do it. Always like to talk trading anyway. But there's always something to trade. Okay, there's always something to do. If you're not finding it in the S&Ps, if you're not finding it in the Mag 7, if you're not finding it in semiconductors, whatever, there's a whole bunch of futures options you can look at. If you don't see it there, now we have the prediction markets on Tasty. If you can't find it there, there's always something to do. You just have to dig a little bit. And because we're active traders, Chris and I are always looking, as Chris pointed out, to add alpha to our portfolios.
Speaking of which, TP, I'm going to look at something here in corn. This looks like a market this is a pretty damaged looking chart, no matter how I try to slice it. We try to recover. And we really couldn't. Damaged. And then you see,
Chris, that's a cruel adjective.
It is, but it's accurate here. We get that break with this July 29th decisive candle to the downside. So I like things are near 470 right now. The pricing isn't there at 16 days for me, but I'd be more than willing, which is just on the outside of the expected move here, one standard deviation move and inside the expected move for 51 days. $3.12.5 in credit on a $10 wide strike, risking 343 to make 156. 82% probability of profit. I will take that. Seems decent to me. We just have to hold the recent swing high.
Yeah. I'm going to go into 12 days, buy the 70, sell the 70 halves. Again, violating the credit a little bit, but you know what? I want to get in there and play. Hey, really quickly, Chris, crude oil filled on... Oh, no, I was looking at crude oil. Sorry. ZW, I was looking at, so crude oil has one of the quietest days we've seen in a while.
In a long time.
And no, it's corn. Sorry. I was looking at crude oil. Corn, I'm going to do these are too narrow. I'm going to buy the 415, sell the 420s with 16 days. 87.5 cents. Bing. Working. So this is one of the quietest days we've had in crude oil in a while. I'm going to go in. I'm going to take a look when I get on at 1 p.m. for my live trading segment. I'm going to take a look at some of the prediction markets in the WTI and the Brent crude oil markets. Lost money in there yesterday. Made a little bit of money in there today. Made some money in Bitcoin yesterday and today. So the prediction markets add another layer of possibilities.
TP, as we go out the door here, just a quick note. You mentioned crude oil. There was a position, a short iron condor trade that was put on a week or so ago. Likewise, a short call spread where you had both up at the 94.95. Right now, TP, those are currently trading for just, if we wanted to put these on today, what could we get for selling them? We would get 7 cents credit. Would we put on a trade for 7 cents credit? A dollar-wide strike? No.
Take it off.
No. Take it off. We actually have 2 of them there, so we're going to just get rid of both of you.
Nice
See you later.
work, Chris.
Get filled. The downside, though, because the trade changes a little bit, dollar wide on a 66.67 is still 27 cents, taking a little bit of a loss. I'm going to hold this for a tiny bit longer to see what goes on. But hey,
that's
TP,
cool.
Thanks for joining me in here for a little bit of futures. We talked hogs, we talked cattle, we talked some of the grains, we even talked oil. Look at us, not even talking stocks for 15 minutes, but they didn't go anywhere. So we're going to take a brief break here on Tastylive. We have more live trading trades of the day coming up next. Get ready for it. We'll be back after a break.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tasty Nation, how are we doing? After a huge rally yesterday, market seems to be calming down just a little bit. We did pop up this morning, but now we're sitting kind of flat as we approach some more key earnings here. SanDisk and WDC. We'll see how those memory storage names fare. Got to tell you, they say something bad about free cash flow. It's not going to go well, you can imagine. So we'll all stay tuned to that. But, you know, I've got a lot of tech names. I've de-risked some of those, but at the same time, I've been looking at other parts of the portfolio to possibly dip into. And then the things that always draw my eye when you're talking about a trade of the day is what's moving. And as I go through and look around, and we can go to the platform here, and I look around what's moving. The first thing I see is gold, obviously. Big move in gold today. But I'll be honest with you, I don't want to step in front of this train right now. If you can see, you know, the green bar obviously on the day, but the volume there, pretty strong volume in gold over the last couple of days. And so for that reason alone, I don't think I'm going to touch it yet. If we were to get another big green bar like we have today, tomorrow, possibly I'd step in for a quick short using this MGC contract, which is 1/10 the size of the regular gold contract. But for now, I'm staying away. So while I did analyze the idea of doing a trade of the day with gold and or GLD, I'm going to wait because I think there's probably a little bit more to this momentum. So I'm going to chill out on that. But then I started thinking about, you know, the rotation that we've seen at times in tech and consumer staples. And you know, I've been on that train. I mean, I've been long consumer staples. I've been long tech both ways. And that has worked out well, especially last month. But I'm not sure if that trend is changing or not. And so I wanted to take a look at if we can look at it in the form of XLK. Obviously, this is the tax ETF. I think it's a State Street ETF. And let's see. Let's compare that to XLP, which is the Consumer Staples ETF. And right here, let's see. This is, let's go. This is 1 year so far. Let me blow this up a little bit. Let's change this to an area, right? So this red line here, if you can see it, is Consumer Staples. Let's look at, on the 1 year, Consumer Staples is up 5%. You can see tech is up 44%. But if we go a little closer over the last month, you can see this is kind of what we've been talking about. So It's bounced back to some degree. XLK on the 1 month time period is up 2% versus XLP, which is consumer staples, up 1.5%. Let's see how this has gone over the last week or so. And over the last week, obviously, has been a big diversion. I mean, if you look back here, obviously, you can see that consumer staples at this point in time, which was basically on, hold on, no, that's not right. What time period is that? Oh, sorry, it's looking over a 5 minute. Hold on, let's do this. Let's go 1 day. Let's do this all over again. Looking at 1 year. The red here is consumer staples, and this one obviously is XLK, consumer, the tech index. So 1 year basis, 9.9% versus 29%. If we go, that's year to date. If we go 1 month, we can see that the tech, this makes more sense, is down 1.63% versus 2.5% for consumer staples. When we look at this area shaded right here, over a week period, changed, right? We can see XLK came back, and that's what we've seen. And so I feel like, to me, this seems like a decent time to step in and maybe get consumer staples name or two. Look, I've mentioned this plenty of times, and I love to mention it because this is, I don't get any money from this, from FNViz, but I've always liked what they have here, and it's always fascinating to me. And so when I look at, which I can't really see right now, give me a second. The monitor kind of went out on me, even though you guys can see it. That's great. I guess I'll just look up here and do it. Oh, there we go. Oh, that's gone again. Well, when I look at consumer staples and I look at what's been going on in this space, I'm considering, like, what names do I want to find using this right here? There we go. So I'll usually go to, let's just say, I know Coke is a consumer staple. And if I go to consumer defensive, right, looking at those names, and then I go down to market cap, I like to sort by market cap. This way I know I'm getting the most liquid names. So right now, I know I already have a Walmart position. I have a Costco position. I have a Coke position. Actually, I have a PG position. I looked at Philip Morris, but it doesn't really have the chart that I want. I do have a Pepsi position. I want to find some of these bigger consumer staples names that are on their lows, right? Or on their lows, or maybe have room to grow. Now, believe it or not, of all these, I decided to go with Target. I like the way Target looks overall, and let's just remove this chart here. And bring it up. Sorry, get rid of that. Get rid of XLP. When I look over year to date, Target has had a run. It's been strong. I actually played this a little while ago and it worked out really well. I know it's not on its lows. I mean, I got plenty of those. I got Pepsi, I got Coke, which are on their lows. I have a couple of names like that. Walmart has struggled at times too, and so has Costco. And I'm already playing those names. I decided to play one that has a little bit of strength to it and can continue to keep going. So I looked at this and I decided to get a bullish position in here. And so going to the trade tab, it's always a question of how you want to play it, right? Like, what position do you want to do? How do you want to, make it work? Normally in these situations, I'd look at a situation. I'd look at to see if I could do maybe a diagonal, especially in these. These are kind of like, mostly cheaper vol names, meaning they're not in the 70s or 80s like a lot of these tech names. They're usually in the 30s or 40s. In this case, I had to go out to October to get a 30 or 40. Now, again, I could have gone. I could have got long September, but I have a lot of that. And that's the other thing when it comes to organizing your book. Right now, I have a lot of long September versus short August. And August is going to roll off, obviously, here within the next 3 weeks. You don't want to get too concentrated in that, because then it comes a question of how are you going to change around your book and organize your book once August expires. How are you going to move all those longs in September? What are you going to do with it, right? Are you going to get to a situation where you're able to close them out? Are you making enough money in them yet? Case in point, I got lucky, I would say, after McDonald's earnings. Stock is up today. I have a long SEP in short August. I have plenty of these type of positions. Long SEP, short August. I have one here now, the 270, I think 300, but I also had another one, which was the 260, 290. I was able to close that out. And so my whole point is am I going to be able to get to a point where I get wins on these, or do I start pushing some of them further out? And so in this case, I decided to push this one further out. Now we're getting long October and we're getting short September. We did the diagonal, and I like to do these a little somewhat aggressively if it's not too expensive. So in this case, I bought the 145 call in October to sell, and I always like to at least go $15 wide, sometimes maybe even $20 wide. And in this case, I sold the 165 call, which is just outside the expected move here for September, in September. And yes, both of these capture earnings. Not that I wanted to capture earnings, but in this case, I'm not too worried about Target's earnings. I know it can move on earnings. It was definitely a lot more volatile on earnings in recent times. But this time around, I guess, let me see. What did it do last earnings? So we'd have to go to May. This is earnings day right here. And you can see it's a decent sized move, right? But nothing crazy. I mean, when I look at it, top to bottom, high to low, it's about $6. That's a little under, well, at the time, it was a little under 5%, right? So I can withstand that, and that's totally fine. It's better than, a 20% move on earnings, right? So I can live with that. So I got the diagonal here. I got long October, short September. And again, I did it for $8.40. It's a $20 wide spread. So that means what? About $11.60 is the max I can make. Now, if I make about $5 on this thing and all of a sudden it's worth $13 to $14, that's a pretty chunky, I would say, calendar call spread. That's a pretty chunky diagonal call spread. And at that point, maybe I close it out. And that's at least 50% gain at that point, right? So that would be the time where I would look to close it out. So I like doing these consumer staples names. Again, we've seen such a massive run up in tech that at some point you might see little rotations, and we've seen bits and pieces of that at times. I just like to have these plays on such that when the rotation happens, you're still in the market and you're still participating, and you're not really just subject to one sector when that sector's not necessarily working out. So as you can see, a lot of these they work, very similar to just regular call spreads, except you've been able to sell a little further upside in a near term cycle, which is kind of nice. And while it's not necessarily high vol, 165 is pretty far away from this, right? And so if it does go up, I still work out pretty well in that situation. But having a 20-point wide spread, you got to love it. So you'd usually want to get these for, as I've mentioned before, half the width of the strike. So again, it's a 20-point wide spread. I would have been comfortable probably buying this for $10. To buy it for $8.40 is even better. I tell you, usually for me, if it's a 20-point wide spread, I usually start to get a little, if it's a little more than $10, $11, $12, I don't really usually want those. Because then I'm thinking about, okay, what's the most I can make on this? If I buy it for 12, the most I can make is 8. That's pretty chunky. And you figure there might be some attrition here anyway. If the stock market falls, this is going to pull back. For me right now, if that happens, I might lose half of it. That's $400. I can stand that. In the case of if it's worth $1,000 or $1,200 and you bought it for $1,200, let's say, you lose half of it, $600. That's kind of annoying. You know what I mean? So I just think about it from that standpoint. What am I willing to lose on this if it pulls back? And what is the most I can gain? And how quickly will that happen? And in this case, if the most I can gain is $12, if I make half of that, I'd love that. You know what I mean? So that's how I look at these type of spreads. And again, I like to do a very liquid name. Target is a very liquid name. It's also, when we looked at the list, once again, it was one of the larger on the list. It's number 14 as far as the size of these consumer staple names. And that automatically lets me know that I'm in a very liquid name. So that's the idea. So if we can pull up the P&L graph here, if we have one, otherwise this will suffice. But again, doing this diagonal in Target, buying the October 145 call, which is essentially at the money, and selling the upside call in September, the 165 strike, paying $8.40. Max I can make is $11.60. Likely, I will accept half of that max profit and just move on from the trade. So that's the easiest way to do it. But again, just wanted to get something other than tech exposure. And I've actually reduced a lot of tech risk, but still, just wanted to get something on this other than tech exposure. And I figured consumer staples was the way to go, especially when we pulled up that initial chart. You can see how these consumer staples have performed relatively recently compared to tech. So that's my trade of the day, a Target diagonal call. Now I'm going to kick it over to Mike with his trade of the day.
What's up, everyone? Welcome back. We got another trade idea for you for today. Crazy day in the markets. E-minis are flat, only up 3. NASDAQ is sold off quite a bit, down 70 points right now. Basically gave up all of its gains from this morning. Wild to see, but also not too surprising considering the magnitude of the move we saw over the last couple of days here. But we've got another earnings report. We've got Western Digital after the close today. We've got SanDisk after the close today. And I think it's going to be interesting to see what happens with those two. We've had the same kind of story being told throughout a lot of these different tech stocks. If CapEx is a multiple of what's expected, then the stock will go down. We saw AMD give up all of its gains from yesterday. AMD was a wild one. We had a calendar spread. We had 2 calendar spreads for earnings in AMD yesterday, but into that huge rip, like literally opened up at 500 and it rallied all the way up to 530. It was a 30-point intraday rip. I closed both of those calendars and got lucky with avoiding a downside move in AMD, but I'm back in with Super Bowl and AMD into the sell-off. But today's trade, I'm actually going to WDC. So WDC is one of those big tech stocks that's going to be reporting earnings after the close. So is SanDisk, but SanDisk is a $1,400 product, which means any trade in there is going to be super expensive and getting narrow in terms of the width of the spread. You're going to have pretty wide bid-ask spreads and pretty wide markets for that matter. If you go to like a 1350, 1345, 5-point wide put spread, you can see you've got a $5 wide bid-ask spread. Doesn't mean you can't get filled. Doesn't mean you can't get out or in. You certainly could, but it's just a hairier trade, a trickier trade, but I really want to stick with the implied volatility differential for both of these products. So I'm going with WDC, $500 product, much more digestible, still very expensive because we've got 100% implied volatility across the board here. But look at this implied move, 59-point implied move for Western Digital against a $550 stock price. So over 10% of the notional. I say this every time, anytime you have a over 10% notional move implied for the week of earnings, especially with only 2 days left, you have yourself a situation where you could see some fireworks. I'm placing a downside put calendar here. So I went out to the 2-day and I sold the 500 strike, which is right around the expected move. This is where we typically like to live for these earnings announcements. If I'm selling an option, I usually go towards the expected move, maybe just inside of it, maybe just outside of it, but pretty big difference between the 490 at $7 and the 500, nice round number at $1,000. And there is actually more open interest in the 490, which is interesting. But if we look at volume, I assume we've got more volume on the 500 strike. There you go. So sticking with that round number helps reduce the bid-ask spread and keep the markets more active there. So went with the 500 strike, sold that option in the 2-day cycle. And then I bought the 500 strike out in the 9-day. So this is another way where you can get super small relative to the notional value of the stock price, relative to IV, is just doing these near-term calendars where you're long the 9-day, short the 2-day. These are pretty binary trades in the sense that if Western Digital rips 100 points, both of these options are likely going to go to zero. Maybe the 9-day holds on to a little bit of value, but maybe it's $1, maybe it's 50 cents, something like that. So I'm expecting to see losses on the upside if Western Digital does rally. But if it doesn't, we do have a nice risk graph here that we can analyze to the downside. So looking at the analysis mode, I've got just this trade pulled up here, just the trade where I'm long the 500 strike put, short the 500 strike put in the 2-day cycle. And this is really what I like to see with these calendar spreads. Paying $2,000 in the 9-day, collecting $1,000 in the 2-day. I like to reduce my cost basis by about 50% or more if I can help it, because it just gives you a wider net to be successful. If I was only collecting like $500 on this short option against this $2,000 option, that would mean my net debit would be somewhere around $1,500. And look how narrow the profit graph gets when I change this, make this adjustment. Boom. So you can see the less you pay overall to buy a long option against the current value of the long option. So if you're collecting 50% of that value, 60%, 70%, you just have way more ability to make money on that trade because all you need is your long option to be worth or have extrinsic value that exceeds your debit paid. So If I'm only collecting $5 for the short, that would bring me to a $15 debit, much more narrow trade here. But with a $9 debit, you can see much wider break evens, much more max profit to the downside. And if you make that assessment even further, let's say I was able to collect $1,500 for the short relative to the long. Now you got even wider break evens, even more max profit. So my baseline here for calendar spreads is collect about half of the value that you're paying for the option, and it gives you a nice window to be successful. I was filled at $9 exactly. So if we analyze this, we can see evaluating at Friday's date. So if we go to tomorrow, you can see you still have a nice profit potential if we kick it out one day, but we do have to crush implied volatility here by a pretty substantial amount. These back months in the 23-day, 30-day, 55-day, 60-day here, like these are all under 100%. So I expect this 9-day cycle to drop to about 100%, maybe a little bit less, maybe a little bit more. So we're going to need to see a nice vol crush in the 0-day, or the 2-day, I should say. But we also are going to have to account for a decent vol crush in the option that I'm long. I think 19% bringing us down from 120% to 100% is pretty fair. Maybe we see a little bit more, maybe we see a little bit less. But at the end of the day, if we're at Friday's expiration and I've got a 19% vol crush in the long option, I still have plenty of wiggle room here to be successful on a downside move. So currently trading at 550. This is telling me that I'll still have a theoretical profit of about $100. If we push this to Friday, you get a 19% vol crush in the long option. And that makes a lot of sense. This long option with 9 days to go at 100% implied volatility is still going to hold on to plenty of extrinsic value. And again, I just need the long option to have more than $900 of extrinsic value for this thing to work out. And right now it's got $2,000 of extrinsic value. So any kind of downside move is going to be good for this position. Obviously, I don't want this thing to drop 150 points because that would mean we are losing extrinsic value in the long option to the downside. Since calendar spreads are pure extrinsic value trades, my long put gains intrinsic value, but my short put gains intrinsic value on a down move in an equivalent manner. So no intrinsic value profit potential. It's all extrinsic value, which is why I've got my theoretical profit potential at around $1,000. If you crush the IV, we hold to Friday, and we get the move down to 500, this $9 debit could turn into a $2,000 trade or a $1,000 net profit. So that's what I'm looking at for WDC. Now, what happens if it rallies? I think this is interesting. So generally speaking, $900 is still expensive for a calendar spread, but not necessarily expensive for a $550 product that has over 100% implied volatility in many options expiration cycles. But I still have a little bit of wiggle room here. So what could be interesting is, let's say Western Digital rallies a little bit, or even like stays right where it's at. I think it's going to make some kind of move with an implied move of 60 points here over the next 2 days. But let's say we chop around here, and let's say there's a bigger vol crush in the long option in the 9-day. Maybe I'm looking at like a $100 loss. Or let's say if it rallies 20, 30 points and I'm looking at a bigger loss. What I could consider doing is flying this off. So I could go out and take into account that my $9 debit is already on the table. I've already reduced cost basis on this long option at 500, but there is a world where these options are still trading for $200, $300, $400, the 500 strike or the 490, 480, et cetera, et cetera. If there's a world where these are trading for $200, $300 still, I could fly this off. So I could get rid of my 2-day options, and I could convert this to a 10-point wide butterfly or a 15-point wide butterfly where I'm selling 2 of the 480s, for example. Let's go 20 points wide. Let's say I can sell 2 of the 480s and then buy one of the 460s. And let's say I'm able to collect, even if it's just $1 on this trade. If I'm able to collect $1 to butterfly this off, what I'd be left with is ultimately a 500, 480, 460 butterfly that I would pay, or I'd have a net debit of $8 on that if I had the ability to collect $1, fly it off, give myself a shot at getting some more profitability. not going to be the best profit curve here if we look at expiration. I mean, it's going to be super narrow, but I mean, that's what you could do if you wanted to reduce basis a little bit. Of course, if we have a scenario where I can pick up more than $1, and let's say I can pick up, $3 or $4 on that adjustment, now I would be at a basis of, $6 if I collect $3, and we're looking a lot better in terms of the profit window where I can make some money on this trade. There's also a world where Western Digital rips higher and these options are trading, like the long option by itself, the 9-day is trading for, $200-$300 by itself. Maybe I just hold on to it and see what happens. It would be an effective hedge if I assume that Western Digital moves down in a world where the rest of the market is moving down too. So all in all, there is something we can do in our back pocket here. We could butterfly it off. You could turn it into a vertical spread if you wanted to. You could go 20 points wide with a debit of $7, something like that. Let's say you could sell an option for $2. You get into this. I need to change this from a ratio spread to a vertical spread. Let's do that. But let's say I have this on for like an $8 debit. Let's say I could sell an option for $1. Either way, you still give yourself some room to profit to the downside if there is a reversal. So that's where my head's at. I think WDC, although it is a expensive calendar spread, I'm still checking the boxes for the things that I usually look for with calendar spreads in reducing my cost basis by 50% or more with the sale of a short option against the long, and giving myself another out if there is a chop sideways, or maybe if this thing rallies, maybe I can convert it to a butterfly. Maybe I can convert it to a vertical spread. Or if this long option is only trading for, $1 or $2, I'll probably just leave it because I know that WDC has the propensity to move. If you look at a chart of recent price action, you can see this thing has gone up and down 100 points pretty regularly over the last couple of weeks here. So that's ultimately where I'm thinking in terms of the WDC trade of the day, but I'm intrigued to see what happens. I mean, if they report a massive capex, I think it's hard for them to see a rally. We only saw a handful of names report a big capex, but they had profit to back it up, like Microsoft, for example. AMD was one of those stocks that reported a huge capex. It was almost 3 times the expectation, and you saw the stock sell off 6%. So I'm expecting something similar with WDC. I'm expecting something similar with SanDisk, but as we say, earnings can be crazy. You can see a big capex number, and maybe it's less than the market expected in terms of the multiple of the capex, and you see the stock rally. So because of that, I'm always going to stick with defined risk trades for the most part in these products, especially $550 product, $1,300 product. Like, obviously, I'm going to be defined risk in there. But I still like the trade in terms of the risk I've got outlaid. My plan, if things go haywire, if WDC rallies, I can butterfly it off. I can turn it into a vertical spread and just reduce cost basis and see what happens over the next week. Or just leave that long option on, because at the end of the day, I have already reduced cost basis by about 50% with the sale of the 2-day option against the 9-day. Unfortunately, there's no semi-weekly expirations where you've got the Monday, Wednesday, Friday in WDC. There's not enough activity for them to open those up like you might see in some of the other Mag 7 stocks, but still. The ability to reduce basis by 50% on the initial trade entry, which I've already done, and the ability to verticalize this or butterfly this off if we do end up chopping or getting a rally in WDC. But it's all going to depend on the vol crush here. This 119% is probably going to drop to 100% if I were to guess, because all of these expirations back here are already at 90, mid-90s, even in the 80s back here. So you're going to see a vol crush in September. You're going to see a vol crush in October. These are probably going to drop down to the low 90s. So I think August is, fair to say that this will still stay elevated above September. So if I think that September is going to drop to the low 90s, maybe high 80s, I think it's fair to say that August drops to 100%, maybe a little bit more, maybe a little less. But that's what I'm playing for in the 9-day versus the 2-day. And a quick recap here, WDC bought the 500 strike put in the 9-day cycle. That's August 14th. That's next Friday. And I sold the same option, 500 strike put, in the 2-day expiration. Max loss is $900. That was the debit I paid. theoretical max profit is about $1,000, and that was calculated on holding this trade to Friday and crushing implied volatility in the 9-day cycle by about 20%, bringing that 119% IV down to 100% IV. So let me know what you think in the YouTube chat, in the comments, but that's the trade of the day. And again, if everything goes to plan, we'll close this on the open tomorrow. We'll have a nice winner in WDC if we get a sell-off towards 500. But if not, like I talked about, butterfly it off or verticalize it. But we got another trade for you coming up right now. Here's E.
What's going on, guys? Welcome back to another trade of the day. We have a few options. We got a lot of volatility in the market today. But one thing I just can't stress enough is how disappointing this SpaceX IPO is. Maybe we get a little bit more of a rally into the end of the year. They beat earnings, right? Good earnings, but the market is still gapping down with the continued sell-off to the downside. So that's really a testament to how a binary event, even if we have good news, we don't know for sure how the overall market is going to respond to that news. And I was listening to Jim Dalton again not too long ago. He was one of the creators of Market Profile, but I was listening to him again the other day, and he was even talking about the same point. And I remember just thinking like, well, you would think you would have an advantage if you know what the release is going to be. Like if you know we're going to be beating earnings, you would think that would give you an advantage for the trade that you're going to place the next day. But I feel like this is a really good example of how you can have good news. You could even know that the earnings beat is coming, but we don't know how the market is going to respond to that earnings, even if it's good. So with that being said, SpaceX down a little bit more on the day over here. It was recovering really well yesterday. I almost thought, I was like, yo, we might be able to sneak out a max profit on SpaceX. Like this thing was recovering pretty well over the last couple of days on Monday and Tuesday. And then we got slapped right back down to the lows. So we still have 16 days left to expiration. A lot can happen in a little over 2 weeks. So we're going to be patient with it. And if Elon wants to sneak us out a green trade, I would appreciate that. But had my eye on SpaceX. If you are just joining us this week on some of the trades of the day that we posted this week, another one that we did yesterday was I sold another out of the money put spread on USO. This is whenever USO continued to sell off to the downside, where we put in another leg to the downside, which I thought that was now more attractive to maybe sell some premium, give ourselves a little bit of breathing room, see if this can recover a little bit more on the daily chart. But we're still getting some more downside movement on oil right now. We're going to be patient with that. We put that one on yesterday. And I know I was talking about this micro crude oil position as well. And this was another trade where I actually ended up cutting this one for about a $330-something loss. Should have cut it for about a $150 loss, but I hesitated on the trigger for cutting the trade whenever we had the sell-off in the pre-market yesterday. But last night, we were able to get repositioned near the lows, and I'll show you where that entry is at right now. Right now, we're risking about 11 to 12 bucks on this specific trade. We've had a lot of volatility in the market. This position has been up over 200 bucks at one point. We have $11 of risk. So at the end of the day, I don't really mind what happens, but it would be really nice to be able to recover a little bit of that drawdown that we took on the micro crude oil from yesterday. And it really just emphasizes the fact how risk management is really where your money is going to be made, right? Because we're up over 200% or up over $200 on the overall position. And we would have been green on the week on oil if I would have cut that trade. It was like $120, $150 in that range. If I would have managed that risk a little bit better, oil would be in the green overall this week. So right now we're trying to claw our way back out of that a little bit. We were able to scalp some of the micro NASDAQ today from the volatility at its highs. We were able to top tick that one. Not that we're always able to get a top tick, but it's always satisfying whenever we can get a move in the market with very small risk on the trade. So we might talk about that one a little bit later, but that's also financing a little bit of the oil trades that we did throughout this week. One of the first trades of the day that I did was on Google. This is where we sold in Iron Condor. We ended up selling off to the downside, and I ended up rolling that call side down a little bit so we can collect an additional credit. So that's what we're doing over there. If you look at the order chains over here, we're up just a little bit on that, right? $7. If anybody wants to go out to eat, let me know. Actually, never mind. It just updated. We're up $64, I guess, on the overall trade. We collected a total of $280 worth of credit. So we're going to be patient with this one. I always dog on how the Iron Condor is one of the most boring positions that you can have on in the portfolio. But when you really let time do its thing, theta can really work in your favor. So that's what we're trying to do on this one. I'm not looking to hold this one all the way to expiration. It's below that 21 days rule of thumb that we kind of have to manage this trade. So we have 16 days left. And we're going to keep an eye on it, right? If we got to take this off the table for 50, 60, 70, $80, we'll go ahead and do that. It was a post-earnings trade, so I'm really not expecting too much from Google, but it would be really nice to see a little bit of a pullback because after we gap down off of the earnings, we've only seen green since then. And I mean, this pullback in the overall market on Google is really helping this overall trade because, again, we had 1, 2, 3, 4, 5, 6, 7, 8 consecutive days to the upside after getting that gap down from the initial earnings. So this pullback is helping us a little bit. We might be able to fall back into that range, but the more we do sell off, we're going to look to take some profits on Google. Micron was another position that we put on for a trade of the day. We have some short delta on in Micron. I believe SanDisk is going to be reporting earnings here soon. And something Gus and I always stress is how whenever another underlying that's within the same sector or that's heavily correlated has earnings, it almost feels like you have a micro earnings or you feel those ripple effects into the other assets. And I'm in Micron right now, so I think SanDisk has its earnings. So I'm going to be mindful of that. Let's see if we can go to the options chain, see exactly when that earnings is going to be. And it's going to be after the bell, August 5th, which is today. It's a good reminder. My sister's birthday is in 10 days, so somebody might have to remind me of that too. I got a couple other friends' birthdays within 10 days. These earnings always do a good job of keeping us on track with the dates and where we're at right now. But we're at August 5th. We got earnings after the bell on SanDisk. So I'm going to keep on this Micron position. I'm hoping we see a little bit more downside. I think it would be pretty crazy for us to have a very major leg up to the upside, considering where NASDAQ is at right now and considering where the S&P 500 is at. So I'm going to be leaning bearish on these earnings. I'm not going to put on an earnings trade right now on SanDisk. You're going to have to ask Dr. Jim about what he might be doing in here, but I'm not going to do anything in SanDisk because I have exposure to that industry right now via Micron, but I'm hoping to see a little bit of a downside slide. I know we've finally seen a downtrend in some of these memory names. And I was making the point earlier today. I mean, nobody's having a worse week than Leopold because we've only chugged to the upside after that portfolio got liquidated in some of those memory names and, the overall market. But maybe this can send us back down to those lows. And then I think even he would feel a little bit more comfortable with getting liquidated if we head to further prices to the downside. But I mean, with that being said, we got SanDisk earnings after the bell. We're in Micron right now. TLT is one of the bonds position that we have on. We're up about $27. Zebra trade, zero extrinsic. I forget what Zebra stands for. Shout out to Liz and Jenny for pioneering that on the show, though. But I got a Zebra trade on, right? Zero extrinsic, Zebra. Zero extrinsic. Yo, Liz is going to have to help me with that one. I forgot what the Zebra stands for, but it's a zero extrinsic value trade. So as time goes on, we don't have to worry about that theta decay. We're not going to get eaten up if we move sideways, if we go nowhere, right? It's kind of a synthetic stock position where we have about 98 positive delta on this right now. So if TLT were to go up 1 full point, we would make about $98 per point. So if we go down 1 point, right, we're going to be down about $98. So that's another way we can kind of get some very directional exposure to one of these markets. And TLT is not too volatile, so I'm a little bit more comfortable to do a Zebra and something like that. It's also a cheaper underlying, but we got the Zebra on in TLT. And then like I mentioned, as we gotten started here, I sold an out-of-the-money put spread over here on oil. Maybe we can catch a little bit of a pop. We do also have the micro crude oil position that we have on right now. It's working. It's in the money for us. So that's working out pretty well. And that's kind of financing this $8 down day that we have on USO itself. But because both of those positions are leaning to the long side, I want to keep an eye on it, right? I'm not gonna overstay my welcome when it comes down to the micro crude oil futures. When it comes to the out-of-the-money put spread that we sold on USO, I might give that one a little bit more time to cook just because it is a vertical spread. It's defined risk, $5 wide. We collected $1.78 on it. So I'm not going to hold it to a max loser, but it's one that I will give a little bit more breathing room. But when it comes down to some of the futures contract, and that's what I was emphasizing in the beginning here, I think it's so important to stay true to your risk because when you're trading futures, it's undefined risk, right? You're going to be in the position until you exit the trade. So you have to be the one to frame up the risk and reward, right? Out of the money vertical spreads are so nice because that max profit and that max loss is built and baked into those trades for us already. So we already know the worst outcome. We already know our max profit. We already know all those data points, so we can sit comfortable throughout those trades. But with futures, you're the one that has to frame up the risk and reward. If you don't want to be disciplined to it, then the market might teach you a lesson there. But I mean, you can even use me as an example of how I let my risk run a little bit longer yesterday into the pre-market, longer than it should have. We would have been out of the hole already, but now we got to give this thing a little bit more room to run to be able to recoup a little bit of that. So when it comes down to framing up the risk and reward on your own trades, it's going to come down to discipline. It's going to come down to discipline. It's going to come down to having a level head whenever emotions are involved and not being afraid or just being willing to take the loss and be able to reposition for the next opportunity. Sometimes we trade as if the market doesn't give us an opportunity almost on a weekly basis. So emphasizing that there with the futures products. But for trade of the day, let's get to the good stuff. Trade of the day, I'm actually looking at Apple today. So we had earnings not too long ago on Apple. Apple gapped down a little bit. We're consolidating at its lows. I want to get on a little bit more short delta here. We're not down too much on the day. We're almost flat on the day, down about 8 cents, 7 cents on the day, just barely even a fraction of a percent red on the day. So we're pretty much break even. We're flat. But Apple's been one of those sneaky underlyings that has been continuously chugging to the upside, right? Like Microsoft was so beaten down at its lows, and then we finally got a pop. It's like, all right, you've been beaten down for a little bit. You kind of drifted into that irrelevant kind of territory in terms of what underlyings people were looking at. And then on the back end of things, Apple's just steadily chugging higher like nobody's business. We had the earnings, seen a little bit of a gap down. The gap wasn't too aggressive either. It's about 20 points. And I mean, 20 points is 20 points, right? I'm not discounting the fact that that's still a decent move in the market, but considering where Apple has been this year, that gap down isn't too aggressive. So I would love to see a little bit more downside on Apple. And with that being said, we're going to go ahead and look to see what we can do over here. Maybe look at the 16 days. We'll go a little bit further out, maybe 44 days. It's been a while since I had one of those like 45 DTE trades where we kind of just let it sit in the portfolio and cook a little bit and then kind of manage the credits as we go. But that's what we're going to do on this one. Let's see what we can collect. If we look at the 315, buying the 320, that's going to give us $1.93. I know we're a little bit close to the strikes, but the fact that we're 44 days out makes me a little bit more comfortable, and especially considering the fact that we're still trading near these highs on Apple. So I'm comfortable to do that. We're going to collect almost $2 worth of credit, which is about 30 cents more than a third of the width. So we're going to be able to reduce that max loss a little bit more because we're collecting a little bit more credit. Define risk, $5 wide, selling the 315, buying the 320s. Buying power is only going to be about 307, so that's not bad. And for these defined risk trades, the buying power on your trade is going to be the same as your max loss when it comes down to selling these out of the money vertical spreads. And the more credit you can collect, the more it's going to reduce that risk. That's why I kind of like this one a little bit more, even though I know I'm a little bit close to the strikes, right? It's a 60% pop. It's a 68, 69% P50. I mean, we could slide it out a little bit more. That's going to give us $1.60. We are, getting closer to that expected move for the 44-day cycle in September 18th, right? We can collect maybe 30 to 40 cents less of credit to give ourselves an extra $5 of runway. We can look at where the high is at on Apple right now. The high of Apple was trading at 344, 345, give or take. Let's say the low of the gap is 330 on Apple. Go back to the options chain. We were looking to sell the 315, 320. Just get an idea where that 315 is at on the actual chart. So, I'm not the biggest like gaps got to fill kind of guy trader. I know we did a little bit of analysis with Sahil, I think at the beginning of last year, where we were kind of calculating some of these gaps and the probability of these gaps being filled. So not that I necessarily want to see this gap being filled, but because we're going to give ourselves a little bit more time, I'm actually comfortable getting a little bit closer to at the money. Like I know we can go out to the 320 maybe, sell the 320, buy the 325, give ourselves a little bit more room. I would maybe do that if I didn't have as much time on these contracts. But because we do have 44 days, I don't mind positioning to the downside into September. So I think that's actually what we're going to go with. I'm going to collect the additional credit at 315, 320, go a little bit more aggressive. I know the pop here is 65% now, P50, 73%. Right, I know that looks attractive. It increases our buying power and it increases our max loss just a little bit. But it's not too different for me to not, want to get this trade in there. So we're actually going to see if we can send this one through. Shout out to Apple, 44 days left to expiration. We'll see if we can get a fill on that. We're going to adjust this. I'm not going to give it too much. Looks like these markets are a little bit wide. We're at $1.97. Market was just trading. Now it's trading at $2. I would love to get a fill. What is this pricing me in at right now? We're trying to get filled at, it says mid-price 2. We're trying to get filled at 198. We're going to let this cook just for like 60 seconds to see if we can get filled at 198 together. Sometimes I can be so impatient and I'll give up like $10. And I mean, it's like Errol's over here pinching pennies. He doesn't want to give up an extra few cents. But hey, let's just let it cook for a quick second. Maybe we get a little bit of a rebound. Maybe you can fill that order. It says the mid price right now is $2. Limit order is in for $1.98 of credit. We've been talking for another 15 seconds. You got to give me 45 more seconds. Let me figure out if we're going to get this one filled. But with that being said, I want to jump over here real quick just to talk a little bit more about our NASDAQ trades that we took today. We were able to short and get in some of these positions near 30,000, 337 on the day. And I wanted to buy some puts up here as well. Like the puts is something where if I get swept out, I'm not usually using as tight stop losses on the puts. But man, I really wanted to get that in the morning. But the market was so volatile. Like if I go to this 15-second chart just to show you guys, this is what I like to enter my trades on. And it's not that I'm always trading on the 15-second, but the 15-second, if you're a scalper, it gives you a little bit more precision in terms of where you might want to risk. So we were looking to get short here. We shorted a one contract over here. We got stopped out 30,062. I really should have left the stop in here at the highs, but I was being a little bit stingy because it's been so extremely volatile. And then we added one more contract near these highs. It was nice to see this initial rejection off this value area high at 30,057. That's what gave us more confidence to hold on to this trade all the way down to the lows at 29,896. And lastly, I know we were just talking about the micro crude oil. This is another position that's sliding back on us a little bit more. Let me go to the 5-minute chart real quick, get a better perception on what's going on. These were the drawings that we had up on the screen whenever we were talking last. So don't mind those. But as you can see right now, we got our stop loss in at about 74.22. Oil is selling off as we speak. We were up a little bit over $200 on this trade. But we wanted to give it a little bit more room to run. And maybe we can get another opportunity to reposition lower. And that sounds attractive because we're going to manage our trade very tight on this, right? We got about $11 worth of risk. So I don't mind getting stopped out because I still have a little bit of a bull bias, would love to reposition lower. But with that being said, guys, Apple is going to be trade of the day, sold an out of the money call spread, 44 days left till expiration. We got more coming for you. We got Gus right on the other line to break down his trade of the day. I appreciate your guys' time. Let's check out what Gus got going on.
Howdy, everybody. Thanks for joining me in Studio D. I've been relegated to this studio. Errol stole the other one from me. I have a very exciting trade for you guys today. It's I'm getting a little bit creative. Excited to dive into my thought process and talk about this one. I'm gonna get neutral ConocoPhillips into earnings tomorrow. They report earnings before the bell tomorrow, and I'm choosing neutrality for a slew of reasons, which I'll outline here shortly. And I'm even getting a little bit more aggressive than some may argue is responsible, particularly with expiration just headed into the end of the week this week. I'm going a little bit inside one standard deviation. I'm really expecting a nothing burger. We can throw that trade card up on screen now if we want to go details, and then we can dive over to the platform. Yes, here we go. Yes, I'm attacking Conoco. I've gone a short iron condor. I am selling the inside 112, 119 strike, buying the outside 111, 120 strike, looking for Conoco to finish between 112 and 119 at close this coming Friday. Great art card here. Shout out Luis. We love Luis for putting these together. We can jump straight into the Tasty platform here, though, and talk about this in a little bit more depth. So here's where I'm at on ConocoPhillips. Okay, I thought about this. There's so many factors happening in the oil space right now, right? That's obviously no secret. We've seen prices move up, down, spin in circles, and go sideways over the last couple of weeks. And obviously Conoco has closely tracked along with the price of oil, as we've seen with any other oil company. Donald Trump was just yelling at Exxon yesterday for their alleged overcharging on oil through this entire process. But pretty much any underlying in the entire oil industry is going to have about the same chart since the beginning of March, since this slide into April. Now, with Conoco, I sat and I thought and I said, okay, well, first and foremost, this pretty much just looks like a chart for your preferred oil vehicle. If we look at a chart for CL, it's pretty much the same thing. It's just more pronounced in the direct oil market. But we're seeing this exact same chart action, just bigger swings when you're talking about actual oil itself, the product, not a specific underlying. So we're mirroring that chart. So then I'm thinking, okay, well, we know that this entire time, for the vast majority of this last quarter that Conoco is going to be reporting, this war was going on. Oil prices were climbing. Conoco was able to charge a little bit more. All of these are obviously bullish variables. Conoco is sinking into today, down 2% intraday today. So my initial thought was, let's just go up inside and assume that this 2% down move today is going to be enough compression that we can at least surprise a little bit with earnings and just take a little step up. I was going to do something centered right around moneyness to slightly out of the money and look for an up inside move. Now, as I was thinking that, I just could not shake the feeling. I was like, this is the normie play. This is the normiest way I could possibly think about oil right now is Iran war, oil price up, oil earnings good. So then I thought, okay, the biggest contrarian thing I could possibly do would be to get short. If I were to get short here, that would be to say the market has sufficiently and perhaps to too much of an extent priced in the increase in the oil prices that we've been seeing this entire time. And we're going to actually see that things come back down. Maybe Conoco issues some bad forward guidance. They say something like, we had a great quarter, but tensions seem to be easing. We expect prices to cool, and things are going to get worse. That could also very well happen, and I think will happen. So then I started thinking, okay, well, if we're in a world where I know they just did great this previous quarter, I think that they might say slightly negative things about the future. Is it possible that nothing happens? And the more that I thought about that, the more that I thought that's probably correct. We've seen other oil companies report this quarter already, this earnings cycle. So all of that information has already been sufficiently priced into Conoco's price, if you trust that markets are efficient, which I certainly do. We obviously have all available information priced into the price of oil, which Conoco closely tracks alongside. So for me to expect any move out of Conoco would actually be to say that I think the market is making a mistake here. I think that there is some inefficiency in play, and there could be some kind of surprise. And with oil, which has perhaps been the single most trending product over the last 2 months, I just don't know if that's possible. I think that we're talking about the most efficient product that we have in the market right now. We've seen, with the giant swings that we've seen in CL, or again, USO, or you pick your preferred vehicle, but with these swings that we've seen in CL, these are all news-driven things. The second that new information becomes available, the market reacts quickly and efficiently to fully price it in. That is the efficient market hypothesis to a T. So if I believe that everything is already priced in, and I believe that this quarter is going to be good, but the future is probably not going to look so good, I'm left with no choice but neutrality. And that's where I've landed on here today, is neutrality from the 112 to the 119 range. I'm giving myself basically $3.50 to the upside, but only, well, I suppose, yeah, it's pretty much exactly $3.50 to the downside now. At the time when I put this on, we were about 50 cents lower. I was giving myself just a little bit more upside protection than downside protection, but now we've pretty much just middled the range, which, you know what? I have the trade on already. I will take that. We can take a look at this on the options chain itself. Here's what we're looking at. I got filled 38. You can get a fill at 41 right now, so actually a little better than I did. I took 2 of these myself, obviously scale based on the size of your portfolio and how much risk you're willing to take. But at the core, these are $59 of buying power, notional, for $41 in credit. That's pretty good. That's fairly close to 1-to-1, considering that my wider strikes, my long strikes, are at the expected move, or at 1 standard deviation, which I use interchangeably with the expected move. I really shouldn't. That's not technically correct, but that's usually the way that I choose to go about things. So I'm able to get my long strikes right at the 1 standard deviation move. And this is a big old range that Conoco has to play around with here in the middle. If we actually look at this on the charts, pop back over here, 119 is, right in this level here, basically the high of day for today. And then 112 is considerably down here as well. That would be a 2 or 3 week low. So I basically have from, yes, today's high to a 3-week low is the range that I could choose to play. I feel pretty good about that. I think that this is plenty of room, and I feel that it's generous that I'm being afforded anything close to a 1-to-1 risk profile in this trade, especially considering how close we are to how short-dated this is, I should say. This is expiring on Friday, 2 DTE, obviously isolating the binary event. Obviously, premiums are more attractive right now because of the binary event and the elevated volatility that arises as a result of that. But I'm able to take good advantage of this here. And I just, like I said earlier, I mean, this thesis ultimately comes down to the fact that I think the oil market and the underlying companies within it, Conoco, Exxon, BP, Shell, you pick your favorite, I think that this is the most efficient segment of the market that we have right now. I think that there is nowhere. I mean, perhaps there's an argument to be made that it's true with tech, but even tech, you could, I float around valuations a lot. I was going to make fun of people who use valuations, but I guess I talk too much about valuations to make fun of anybody. But if you talk to somebody who really cares about valuations, they'll say, oh yeah, well, tech, is it totally efficient? It could still be mispriced. We're trying to price in future information that we don't have yet, yada, yada, yada. Oil is much more concise asset, a much more, precise vehicle. It's the price of oil is highly efficient. All available information is baked in, and guess what? A barrel of oil does not have a PE ratio. And then you zoom out, and I think that has been properly baked into all these underlying companies as well. So I just think that there couldn't be too much information that Conoco could present that the other oil companies who have already reported have not presented already, and as soon as they presented that information, it would be baked into Conoco's price sufficiently. And I just don't see how we could surprise so much that this stock takes you know, what do I have to give here? A 3% move, basically. I could go 3% in either direction. I feel that this market and this sector is efficient enough that I'm confident diving into this with 3% of wiggle room. I think that this sector, you know, we could be 1 or 2% wrong, even 2.5% wrong, but I'm shocked if we're somehow 5% wrong on pricing in what's exactly about to happen with Conoco. We have reps on it already. All eyes in the world are on oil, and this feels like a good spot to dive in here and get neutral. And that's sort of the thought exercise that you have to do, and people so often, and myself included, and especially, in fact, get so hyper-focused on directionality that you forget that neutrality is also an option. And in any situation, and particularly right now with oil, given the efficiencies that I've just outlined, but in any situation where you say, this company has earnings coming up, and there's these 3 factors that are super bullish, there's these 3 factors that are super bearish, which side of that wins? Always keep in mind that you can choose to just go neutral and think that those factors are going to cancel each other out. And I always say, you know, I'm not an earnings trader by any stretch of the imagination. In fact, I almost never trade earnings. I like to sit on the sidelines and jump in and fade the moves after they happen. But this is just a weird and highly specific situation where I feel that the information is so available to everyone that I'm confident jumping in here. Now, let me float this for you. I am taking on risk into the end of the week that something could happen with this Iran situation, which I've outlined as I believe to be very probable. I've harped on that a lot. I think that relations could deteriorate. Iran could say something that's bearish for our markets. Trump could say something that's overly bullish for the oil market or just markets in general. There are external factors that could still hurt this. And to me, that's the only way that I get seriously hurt. I think that perhaps, you know, we could get tested. Perhaps it takes exactly the 1 standard deviation move, and then I need a little bit of lucky plinko into the end of the week to get us right back into the middle of this iron condor. I think that's a very real situation. I'm shocked if we take some 6, 7, 8, 10% move with just Conoco's earnings. However, there is great risk of a 6, 7, 8, 10% move into the end of the week because of things outside of Conoco's control and that are completely unknown to us right now. So, you know, as those things transpire, we'll see. But that's really the only place that I'm feeling risk. And I you know, obviously there is risk present in this trade. I'm not going to stand here and say that this is a risk-free guaranteed winner. I lose trades all the time. Just exited my last losing iron condor in SPX today, as I just discussed on risk and reward. This could go sideways on me. But if there's ever a spot to be neutral into earnings, I feel that it is the spot where I feel the market is most efficient, the information is most widely available, and we already have a few reps. I'm shocked if the market is greater than 5% wrong on this. And that's essentially the wiggle room that we have out to the expected move coming back in. So I'm content to jump in on this one here. As a brief aside, trades from earlier this week are panning out swimmingly. Palantir that we put on yesterday is going exactly as I said. Do you guys recall me saying I think Palantir has a 2% down day tomorrow, and that's all that we need? And then also Rocket Lab continues to print as well, with plenty of time left on that one. So still winning the majority of the trades of the day so far, despite the loser in SPX. And one can only hope that we will see this come. Yeah, we can only hope that we will see ConocoPhillips do nothing and create another winner for us here. So that concludes my trade of the day for today. Thank you so much for taking the time to watch. Good luck to anybody who tails. May Conoco treat us well tomorrow morning. I will be back on air at 3 p.m. Central Standard Time today with Chris Vecchio for overtime. Be sure to come hang out with us. There's the trade for you one more time on the screen for anybody who'd like to get involved. I will post this in the follow feed as soon as I sit back down at my desk after getting up out of the studio. Thank you for watching. I'll see you guys in a couple hours.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, is not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
It's time to trade smart post PDT rule elimination, and Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Putting on strategies, that's easy. Taking off strategies, that's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Why do you want high IV rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's going on, everybody? Welcome back to the live. We have a volatile market here, but we do have a guest on the other line. We have Forrest Knight. He has joined us a couple times already, but I have never got to actually go back and forth with him, so I'm excited to do that. So we can go ahead and bring in Forrest. Forrest, what's going on, brother? You got me?
How's it going? I got you loud and clear.
Good, good. How we been this week? It's been pretty crazy so far. We had a pretty crazy Monday, a pretty crazy Tuesday. How are we holding up so far? How we doing?
Yeah, volatile week, a lot of opportunity. So I think it's great for us as speculators, right? But it kind of depends on how you trade. But yeah, it's been a great week.
Yeah, no, I hear you 100%. You've been looking at any earnings, not necessarily trading them, but I know SpaceX reported yesterday they beat earnings and we still ended up seeing a little bit more downside. So they haven't had the hottest IPO, I guess you could say, yet. And we've seen some other pretty crazy moves with earnings, you know, FOMC. Do you kind of trade some of those binary events, or you kind of just, let me see how the market responds to this, and then I'll see how I might want to trade it? What kind of approach do you kind of take to those things?
I'd say they definitely are huge factors in the market. So I tend to take a weekly perspective. So in a week, I care about how many important economic events there are. So I'm not necessarily trading earnings. And to be very, very clear, like I don't trade earnings in particular. But if a week is packed with like FOMC, CPI, and there's earnings, I expect maybe like larger magnitude on the weekly candle. And so out of the weekly, every single day, my daily plan, all of that's going to account for that. So absolutely matters. And then absolutely, especially, I primarily trade futures, by the way. Those major like players, whether it's SpaceX, AMD, NVIDIA, large tech companies or any large company in general is going to drive big moves in the indices as well.
I got you. Yeah, I know we've seen a lot of volatility in those indices there. I think I had peeped that you like volume profile, right? I use a volume profile for most of my scalps, usually Nasdaq, S&P 500, auction market theory, market profile, all that good stuff. Would you say that's a
Yep.
pretty similar style in which you kind of view the market through?
I'd say you described how I trade to a T. So yeah, I mean, the only other thing I would layer in there is trend. So very, very light technicals. Are we going up? Are we going down? Are we going sideways? But yeah, auction market theory trader at my core. And then the way that I rationalize that is with the volume profile. And really, I think of the volume profile as where are people's basis, right? As a trader, I know what my basis is. That's just my entry for anybody who doesn't know what that word means. I went long at, let's say, 29,575. Cool. So all of my decisions are going to be based off of where I entered the market, and the volume profile tells us where everybody else entered the market. And based off of that, we could determine where the major inflection points are going to be.
So a little bit more context to the trade to kind of at least be able to, I guess, put into context all the data, all the trading activity that we're getting in the market right now. But I mean, with that being said, we can go ahead and jump into this to the platform here, take a look at what's been going on in the market, and then after that, we can jump over to TradingView and maybe even pull up the volume profile a little bit. I know TradingView also has a TPO. I don't like to use TradingView for the TPO as much, but I think it's pretty solid. So we'll have to check it out here in a second. But I mean, with that being said, Q's up near the highs. This is one of the few times we've seen such a large divergence between NASDAQ and the S&P 500. Have you found that interesting, right? S&P is at all-time highs, NASDAQ kind of trailing behind, showing that divergence a little bit more. What were your thoughts on that?
Yeah, it's actually really important. So because they're both indices, and another way to think of an index is that they're very efficient. A lot of people actually don't trade these for this reason, by the way. I'm on the opposite side of the fence, obviously. But because they're efficient, I think they're predictable. And so when they're diverged or out of sync, it gives us a lot of intuition about what is likely to occur next. So if you're looking at, QQQ, ES, NQ, the S&P 500, SPX, whatever the index is, because ES is at all-time highs, another way to explain that is that we're in pure price discovery mode, right? We are at prices that have never been touched before, which means there's no volume up there. Nobody really has a position up there, right? Like they literally don't. We just got there for the first time. But there's this other index where that's not the case. And if you look at NQ, especially on the macro VP, we're actually at like in the edge of a really large node on the volume profile. If you look at like the visible range going back a few weeks. So what that means is that NQ is kind of in this on the macro equilibrium state, whereas, the S&P 500 is in pure price discovery mode. So what we're likely to see is basically what we're seeing today. We had a huge run up on the first, from settlement open Sunday to today. And now we're seeing some consolidation because NQ kind of got sucked into that whirlpool that is that major node there. And I suspect that ES might come off a little bit while NQ catches up. But the next few days, we really got to see this other index kind of get into that same area, all-time highs as well. I don't think it's going to be a straight line up there. To be honest, I think we're going to see a little bit of maybe an N-shaped continuation or something like that.
You bring up a really good point about, kind of framing that context around what the market might be trying to do right now. You just touched on how S&P 500 is at all-time highs. NASDAQ is not. You just touched on how we're trading at prices that we've never seen before. So where is fair value? Where are buyers and sellers going to find that level of fair value? And it seems like we continue to float to the upside at ranges we've never been before, so we can figure out, where that new level of fair value might be, that continued price discovery that you kind of just touched on. And then like you just said, NASDAQ's a little bit of a different story. We're trading below those all-time highs right now. So I've actually found NASDAQ, and I'm curious for you again, because I know depending on the type of trader you are, you might like a different market better. Do you like NASDAQ better right now, or do you like ES, right? ES, I don't gravitate to as much, but the longs are a lot, quote unquote, easier, but it all comes down to the personality. There's not really a right or wrong answer, but what do you notice in your personality there, Forrest?
So the way that I trade is I always have them up side by side. And I think of ES as the dog and NASDAQ as the tail.
Okay.
So it's inherently more volatile, which I think people struggle with, but I 100% agree. It's much easier to have a solid read on what's going to occur if you just focus on the S&P 500.
No,
NASDAQ is going to trail. It's going to be a lot more volatile, but in general, because they're both indices, there's not a one-to-one correlation. They're very strongly correlated. So you can get more juice, right? Even though they're both linear products, right? You get X amount of dollars per point. You're going to make more on the same move in a day trading the NASDAQ versus trading the same thesis on the S&P 500. So most of my trades, 99% of my trades are on the NASDAQ, but I will actually do my analysis on the S&P 500, ES, or both of them.
Yeah.
And again, those divergences, like you said earlier, understanding those divergences or where they diverge is really, really important as a trader, because again, they're both highly efficient products, right?
Right. No, 100%. I think you make a really good point there. I know we have some of these memory names selling off here, helping a little bit of the downside pressure we've been seeing in NASDAQ there. Do you have any 2 cents on some of these memory names, some of these tech names? Not that we trade them as much, right? Like I'll trade the names as well, but my go-tos are still kind of the indices like we kind of just touched on as well. But it is always kind of interesting to see the stories play out. And I mean, the run that these memory names went on over the course of this last year so far, I mean, can be understated, right? I mean, I think we saw Micron trading at, below $100 not too long ago. And then, I mean, like a euphoric type rally all the way to highs at about 1,251. I think SanDisk touched over 2,000. So not that these are the prime products that, some people trade, but what is your overall thoughts on, the memory names and the memory space and just conversation to do with that topic as a whole? You find it interesting?
I'll say this. Yeah. I mean, I'm a tech guy. We all, use computers. You can see it as 2 ways. One, they're propping up the market. So maybe they're a little overvalued.
Yeah.
If you want to talk more fundamental analysis, we don't do that too much as traders.
No.
But fundamentally, these things
let's get into the fundamentals. We got to go back sometimes.
They've appreciated an astronomical amount, like maybe too much. Now, it's up for the market to decide what that is, but it would not be unreasonable for them to pull back quite a bit, quite a lot. And if they're propping up, if that's one of the legs of the market, you chop that leg out, well, what's going to happen? I mean, if you look at NQ and ES on like the monthly chart, even though it's a very, steep slope line, if we start to see those pullbacks and these stocks have been carrying the market, there's a trend line on the monthly where we can come way back, even down to like, it sounds crazy, 20,000.
Don't say that.
Still maintain our uptrend. We could come down to 20,000 and still be in a monthly uptrend, right? That would be the higher low. So I think people really need to have that context. One, because that's a massive trading opportunity, right? It's a great investing opportunity. But if I could go long at 20,000, I mean, heck, that's amazing. Yeah, there it is right there, right? Look at those lows. You could have a higher low right at 20,000 off that trend line on the monthly. Yeah. So to answer your point, I think, the massive appreciation, AI, stocks really holding up the market. There's a global race going on right now for, I think, just across the world for people to have the best AI products, which is propping up that industry. And it's all an ecosystem. Cool. Yeah. Is that going to go on forever? Maybe not. But the fact that these charts are super vertical, means that they can come down just as vertical. It's funny. And we should not be surprised.
Yeah, no, and I mean, it's funny because we get so conditioned. And when I say we, I just mean all market participants. We get a little bit of a down day and it feels so aggressive. And it's like, let's zoom out a little bit. We're still in a major uptrend, and that sell-off that we had seen at the end of the last week was barely a drop in the bucket. So you bring up a great point there, but we are going to come to a close here for us. I appreciate you taking the time to come hang out for a little bit and talk about markets. It's always a great time. But with that being said, we'll see what SanDisk does in earnings, and I think it'll be interesting to see how this divergence plays out between ES and NASDAQ, but we appreciate your time for us.
Thank you for having me, and watch for the weekly close.
Absolutely. Let's do it. All right, guys, with that being said, we're going to go to a quick break here. Thanks for tuning in. Got a lot of volatility, got a lot more amazing content coming up next. And with that being said, we'll catch you guys here in a quick minute. Don't go anywhere. Stay tuned. We'll see you guys in a second.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We're back. You're watching Tastylive. I'm Chris Vecchio. He's Glenn Frybarger. We're here for a quick 15 minutes, 13 minutes we'll call it, a little FX update, what we like to call the Forex Focus. Glenn, markets here, broadly speaking, are relatively static today. The dollar is falling off a little bit here. I think we can go right to the charts. Dixie approaching its lowest close that we've seen since mid-June. You have some interesting information to share with us, though. If I could get his audio.
You
2
got
days
me,
in a row
Chris?
they're doing, yeah, 2 days in a row. They just don't want us talking.
That's all right. It would probably make for a more entertaining show if we just talked over each other and said exactly the opposite without knowing it. It's a fun idea. But no, you said dollar's fallen off a little bit, but I'm actually surprised at how much it's holding in compared to what, everything kind of going against it right now, and the magnitude of the move. We're still not seeing much volatility in the dollar space right now, which for some people, good thing, for some, bad. It is what it is. But I look no further than, this Australian dollar, which is, back at its recent highs, but this not running away is the surprise of the day for me.
Why?
The chart looks constructive. You have a strong metals move. You have risk sentiment, wavering, but nothing on a macro level really holding down equities. That's all kind of more of the earnings play. So this one I would have expected, on today to be a green day, sure, but only up 10 pips. That's the surprise to me. Yeah, I mean, is there something inherently I'm missing? A growth picture from Australia hasn't been, the strongest, but not falling apart by any means. Um, uh, it's true, but not much to look at here in terms of intraday trading for the dollar. But I did want to cut over to some slides. We talked about this on Monday. Uh, Yeah. Today, looking at the carry trade beyond the yen and looking at a certain Swiss franc to see if that might be the more worthwhile trade if you are interested in a carry trade. Carry trade, of course, speaking to in the spot market, when you hold a position overnight, you can either be debited or credited a difference, an amount that approximately equates to the interest rate differential between the two currencies, the one funding and one year long. So the 1 year long, you're getting that yield from. The one you're selling inherently when you trade these pairs, you are funding with. And funding with a currency that has around a 0% interest rate can often lead to sustainably collecting that credit overnight. And the yen has been the fan favorite for years now, dare I say decades, has been the the funding currency with its ultra low rates. But that might be coming not necessarily to an end. Will Japan be neck and neck with the US here in terms of how high their interest rate goes? Maybe not, but narrowing for sure. And with this week's intervention, not only from Japan, but from the US participating as well, not wanting Japan to sell more of our treasuries to finance their yen buys, it looks like the gap is starting to narrow here for using the yen as a funding currency, BOJ at 1%, and not looking like they could be done there. So that already merits some hesitation for people getting into this long dollar yen as a carry trade vehicle. On the next slide, we can go into where else we're looking. Switzerland. A lot of these problems that I just articulated not showing up when you look at Switzerland domestically and their currency. As a result, we've had not only the Swiss National Bank keeping rates at zero, not scared to go into the negatives as Japan once did. And on top of that, earlier this year, we had the SMB say that if their currency gets too strong, we could, we being the Swiss National Bank, step in to make sure our currency is not too strong. So intervention the other way that would benefit a potential carry trader in this scenario. But that's all just words. Let's go to the next slide and cover what the math says. And this is where it gets super interesting, because when we compare, here I'm looking, I get this swap credit from the TastyFX platform, either in your TastyTrade app or on the native TastyFX platform. You'll see quoted in pips, the USD JPY, that yen pair, wins out ahead of the Swiss franc. But when you start to factor in the pieces that actually matter to us as US traders, it turns out that the dollar Swiss franc comes out ahead. Here we've covered, or we're comparing one lot position, so a notional size of $100,000. And when you take into account the spot price, the biggest driver here, when you convert it all to US dollars, you're actually getting, this was taken yesterday's credit, you're getting almost double the per night dollar credited to your account as you'd get in this Japanese yen. And then on top of that, leverage, margin, a double-sided sword for sure. But here in the US, the margin rate on Swiss franc also can be in a US trader's favor, commanding only 3% as opposed to 5% currently. And then the last piece I want to cover.
Which makes sense, by the way. You should be expected to put up more margin for a position that's going to be more volatile. And given how the yen's been trading, it's obviously more volatile. So
exactly right. And you bring up the piece that most people who don't carry trade say, first and foremost, yeah, that's all good and well, but is it picking up pennies in front of a steamroller? Let's go to the next slide, because what Chris is saying is more volatility can lead to greater price swings. And when we think about this credit we're collecting, price action on the underlying is absolutely a key driver, and you could have an adverse move that erases all the credit you've collected from this carry trade. And now when we compare the two charts here, dollar Swiss franc and dollar yen, for that carry trade, you'd be going long in both of these pairs. And of course, past performance, not indicative of any future returns. But when you're looking at which of these two to go long, historically, we're coming off of 40-year highs in this dollar yen, whereas this dollar Swiss franc, very cheap relative to historic price action. So these things ever changing, but if you're looking to get long either of these pairs for the purposes of carry trading, just wanted to call out that when you consider all the variables, dollar franc might gain some popularity not only in the US but across the globe as the funding currency of choice.
So I'm looking at a little macro dashboard I keep together here. Headline inflation in Japan is 1.7%. For the most recent reading for Switzerland, it's 0.4% year over year. Japanese real GDP is 0.5%. Swiss is 0.4%. So Japan has lower inflation, lower growth. It also has a higher unemployment rate. They do theirs on a quarterly basis. Q1 gave us a 5.2% unemployment rate for Switzerland, 2.5% for Japan. So just on those three macro variables alone, like what will a central bank do? A Swiss central bank is going to see low inflation and higher relative unemployment and modest growth. They're going to think that they can keep rates low. The current policy rate is 0%. The real rate is actually, the policy rate is a negative 0.4% in real terms, which is not as low as it is for Japan. But when you look at Japan's mix, you could see why on the margins you're thinking that they could be a little bit more hawkish. So yeah, the Swiss franc to me is really interesting. The other day we were talking about a dollar Swiss trade. I actually took myself out of it because I wanted to do something else and didn't like how the market was behaving. We had that nice little bounce off of the 50. It's still not invalid, but I just wanted to poke around and do something elsewhere given how the dollar was moving. And so I'm not upset because the dollar has come off the past two sessions, but the fact that it is still stabilizing here, like rate differentials being everything, the US real policy rate right now is plus 0.1%. So Fed funds rate, adjusted for inflation, that's a real advantage it has over Switzerland right now. So I'm continuing to poke around in the dollar Swiss realm. Dixie itself is continuing to hold up here off the uptrend from the January and those May lows. So the next few days are going to be instrumental here.
Big time.
Is this just a temporary pullback before we make our way towards new highs, or was what we just saw in July the best that we're going to have for the rest of the year? Effectively is the way I'm looking at this, as kind of a, binomial outcome right now. But hey, we're going to have to leave it there. Glenn, thanks for the update. Switzerland, again, really low rates. It's the new carry trade currency. That's what Glenn's saying, at least.
Thanks, Chris.
We'll be back in a few minutes' time. We have more great programming coming up next, of course. Live trading continues here on Tastylive.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. there's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario, or something that would give us pot odds to stay in.
Get live trade ideas,
Technical analysis,
earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
only at Tastylive.
Only on Tastylive.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Good afternoon. I'm Tom Preston. 1 p.m. on Wednesday afternoon. Let's get trading here for the next half an hour. Okay, so let's just check the S&Ps. Yeah, up 431. They came back a little bit today. Had a little rally. Before we go on, let's see if we can do. Yeah, we always like to do, or I like to do, one of these unbalanced butterflies going into within these 0 DTEs. Let's check them out. Let me clear this out, what I have. Buy the 35, sell 2 of these, and buy 1 of these to start. So this is probably 30 cents for this butterfly. Drag it down a strike, 25-cent credit. Let's do this one. Let's do, did I do that right? Yeah. Let's do, uncheck. So, rats, I screwed it up. Buying the 35, sell 2 of the 30s. Bink. Yeah. First day with the new hands, folks. Take this down 1, and then go back into here and buy 1 of the 20s for a, let's say, 25-cent credit. Let's see if I get 25 cents for this. Buy 1, sell 2, buy 1. Maximizes value if we get down to 77.30 by the end of the day. Let's ship it. Nothing done. May have to wait for that a little bit. If we get a sell-off, remember, that is short a 77.20, 77.25 put spread in there, filled. And we got a teeny tiny sell-off, or they just took pity on me and gave me a fill in my little butterfly here. Anyway, that's the SPX butterfly. Let's check the VIX really quickly. VIX is down below the 16 handle again. Yeah, it's just, the market is just going nowhere fast today, and that just kills the VIX. That just kills the VIX. And remember, the SPX options don't have to trade to influence the VIX's price. Is that correct? VIX's? Yeah, VIX's price. I was talking about this with Chris Vecchio yesterday on Last Call. And why would we see the market up and the VIX up? That's because traders are bidding up the prices of out of the money calls, out of the money puts. Whether they're traded or not doesn't matter. When the bid ask spreads go, or when the bid ask is raised up and increases the theoretical value of those out of the money SPX options, that jacks the VIX up. So that's what was happening yesterday. Let's get into some of the things I'm looking at today. Disney is up 3.69% today. They came out with earnings. I guess they did pretty well by all accounts. Let's look at a chart for what it's worth. These are the charts I was looking at earlier with the futures. They had a nice little rally. They're off their highs. Okay, fine. Trading at 101.78. Let's see if we can do a short-term trade in Disney. Let's see what the markets are. Markets aren't bad in here. The 100 puts 40.47. It's Disney. It's not SPX. So in 99 puts 20 bid at 26. Not bad. 6 cents wide is a little bit wider than I'd like to see, but that's what they're giving us. The stock's at 101.80, so right around say 102, down $2, up $2. The 100 puts are 47. The 104 calls are 40. Given that it's 20 cents below, 102, that's going to be a little bit depressed. Let's go out. If we sell these, what do we get? So $1,800 for a max profit, $80. That's not high enough. Let's turn this into an iron condor. 56 cents for this. Not as much. I'd like, I like to get 2/3 of the width of the strikes, and 2/3 of width of the strikes for this is 98 to 100, $2. 104 to 106, $2. So this, I would like to get 65 cents for it, but with 2 days to go, I'm not going to get that. Let's just route this at 56 cents, unless anybody has any strong opinions about this thing going up or down. Any opinions on, anybody have an opinion on Disney? If not, I'm shipping this thing. Submit. Let's move on. Watch list. So here's the deal. Let's check out SpaceX. SpaceX, I'm dead. SpaceX, I'm long some call spread much higher. Bought a call spread thinking it might have a rally, and apparently SpaceX in their first earnings announcement last night, they they're spending a lot of money. Okay, that's no great surprise. So they crushed it, despite Elon Musk jumping up and down and saying, hey, everybody should be bullish on this thing. So I agreed with Elon. Thought it might rally. It didn't. So I'm getting killed on that. Did a one lot. It stinks, and I still have a day or so to go. But what the news was in SpaceX, apparently from what I hear, is that they're going to start using NVIDIA, I think exclusively, they're going to buy NVIDIA chips to run whatever they do at SpaceX. So that's pushing NVIDIA up. And if you look at the Mag 7 stocks, of all these stocks, Apple down 0.24, Meta down 0.77. They're all down. Google down 342, with the exception of NVIDIA. So let's just see. I've had some pretty good luck trading NVIDIA. I have loaded up here with 9 days to go, the 215, 217 half put spread, $2.50 wide, collects a 90-cent credit. Again, third of the width of the strike. Third of the width of the strikes between that would be about 85 or so. Just take 2.5 divided by 3. About 85 or so. 90 cents exceeds that. If I knock the... am I getting... Yeah, I don't know. The credit's pretty close for this 7 days as opposed to 9 days. Let's take it back. 73. And all I'm doing is using this expiration button to reduce the days to expiration on the trade. So 2 days to go, 62 cents. That's not enough. I'm going to go out to this one here with 5 days. And we'll see how it goes. I know you're asking, hey, Tom, what's the skew doing? Stocks at 220.67, right? Basically 220. So down 2.5 points, up 2.5 points. The 217 half puts are 310. The 225 calls are 380. Skews pointing to the upside. Let's sell a put spread in NVIDIA and go along for the ride. 85 cents. Submit. Fill. Take a fill on NVIDIA. Let's go to the watch list. Let's go back to my little cherry bomb. And what I do is, so I created this watch list, cherry bomb, just because, that's what we're calling this segment for now. And if you want to create a watch list of your own, just click on that plus button and create watch list. Create a watch list name, super duper stocks, whatever you want to call it, and then add in symbols as you want. So I'm going to add. I want to talk about UNG for a second. So I've just added UNG to the list. Okay. So UNG. Somebody had a question on the chat a couple days ago. About what I was doing with my 10 put in UNG, and I shorted a put with 16 days. I short this put for about 31 cents. So the market UNG has obviously dropped. It rallied up a little bit today. It was higher than it was. I was just breaking even. Now I'm down a little bit of money. Let's sell, I don't know, 2 days. I hate doing this. I really don't like doing this. Selling calls against it. I'm not going to do that. Let's go out to with 2 days. Let's go out to 7 days, see what we get for the 10s. I mean, we could sell the, kind of defeats the purpose selling the 10 call against it. I'm not going to do anything for UNG. I'm just going to hold on to that and see if it continues to rally. Alternatively, I could roll this out, basically lose about 8 cents on that, roll this out to the 9.5 puts and reestablish at the 9.5 strike if I thought UNG was going to rally. I'm going to deal with that later. Let's go into the watch list for some new trades. What did we do? We talked about Disney. Love. So Southwest Airlines. I was looking at some, obviously, with a drop in crude oil. Crude oil is down 64 cents right now. It's pushing up the prices of airlines. Airlines love cheap fuel, and understandably. So this is Love. Has a nice little rally in here. Love's, of all the airlines, and you can argue back and forth about which one you want to trade, but of all the airlines, Love has some of the most liquid options. Their earnings are coming out on September 3rd. They're not bad. The markets are okay in here. $49, the skew is pointed to the upside. Okay. If I sold the 47 puts, 23 days to go, let's say, 82% probability of making half the max profit of 104, so about $52. And I wouldn't hit a bid here. I would try to get like 110 for this put. $1.10 versus $776 of capital. Not bad. And you could do this naked put out here. You could go out to the expected move here. Let's see what we get if we knock this down to a fewer number of days. And the only reason I like to go for a fewer number of days is so we can get a resolution to the trade. The markets are too wide. Look, it's 838. No, thank you. Let's bump this up. Take this down here. Let's do this one. What do I have? So let's minimize this. 16 days. I'm going to push this out to here. I'm going to push this out to you. The 45s. I like this one. $55 max profit. 88% probability of making about $28 on that versus $580 of buying power. You could turn this into a vertical. You're not going to get a great credit for it. I'm just going to try. I'm going to just do a naked short put in here at 59. Let's try 60. Let's see if somebody bites. Let's see if somebody wants to play. BW, Daniel Mattia, BWXT. Let's take a look at it. BWXT. And yeah, I'm short an Iron Condor and AMD. That is freaking me out with a sell-off today. Again, do earnings really matter? I put that out to the crowd. Do earnings matter? We come out with earnings, the stocks beat, like Google. I guess Google did pretty well, delivered decent numbers, stocks down. What do you want? BWXT, I don't know what they do. Don't really care. It's all about whether it's liquid. So the stock's about 170 bucks, down 10, up 10. Skew is pointed to the upside. Let's just sell. I don't know. Hey, just because he brings it up, I'm not getting a great credit for this. 5 points wide. I'd like to get what about $1.60? I'm not getting it. Let's push this out to here. So if I go out to 44 days on this, I don't love the liquidity in here. I don't love it. So as Daniel, again, I don't know anything about BWXT, so I'm gonna pass on this. Let's go in to the watch list. Let's go into Occidental. Oxy should be doing pretty well. Their earnings are today. I believe their earnings are today. This afternoon. I think they're after the close. I know some of the stocks came out this morning, but if we look at this, markets are pretty tight in here. This is pretty tight. Stocks at 54.29, right around here, down $2, up $2. So the skew is just. How about if we sell this? How about we do an Iron Condor? Yink, yink. 49 cents. It's not bad. I mean, for 2 days, let's push this out to, yeah, this is a little bit closer. Let's go out to our expected move. Come on. It's right there. Yeah, let's do this one for 53 cents. Anybody want to look at a chart? Oxy chart. It's kind of noodling around. I think the problem with companies like Occidental and all that is they're suffering because the price of oil is down, but they are stocks, they are equities. Who knows what's going to happen to this? Let's ship it at, markets are not bad. Let's ship it and see what happens. 53 cents, fire away. Filled, 53 cents. So let's look at AMD quick. I am short the 477 half 480 put spread. I covered the short call spread. I screwed up. That's why I have this little extra short call spread up here. I'm going to let that go. I'm willing to take the risk in AMD. These puts were threatened. The stock just crapped out last night, opened up much lower, and was right there. I forget what the low was. The low is 478, so it was below my short put strike. And hey, it's a defined risk trade, so I hung on. I'm just going to hang on to this and see how it treats me through the afternoon. That's just a bet. So that's what's going on for me in AMD. UNG Uber, Google, let's see. Let's do Uber. Uber, I guess, had earnings. They did not, I don't think they did well. I don't think people liked Uber. It's down 6.71%. I have loaded up here a short call vertical. The stock's down from when I was looking at it earlier. Skews 76 bucks. Let's clear this out. 76 bucks, up $2, down $2. It skews to the upside a little bit. Skew is to the upside. Could we do? An iron condor, 40 cents. Yeah, let's try it. I don't know. Anybody have any opinions about Uber? Uber? Bullish, bearish? Yeah, not seeing anything. Let's fire this one. Let's do 40 cents. Ship it. Bing, 40 cents, 2 days. All right, let's go into prediction markets because I'm thinking these are kind of fun. I did a couple of prediction markets earlier today. Bet on the Bitcoin hourly, and what else did I do? I did the Nasdaq hourly, and it's kind of fun. And so, like I was talking about yesterday, one of the reasons you may want to do Bitcoin or excuse me, prediction markets is that not only are you betting on the event and not the event's impact on a stock or the overall market, you can bet on just the event itself. So I'm going to go 1 hour. So at 2 p.m., so in about, what time is it now? 1:20. So about 40 minutes. What do we think, folks? Bitcoin above 64.60, and right now it's 64.77. Bullish or bearish on Bitcoin? So these things are all probability based. So this is, so you mean a prediction is illegal, I guess. What they are is just it's cumulative buying and selling that drives the price of this, which is the probability of making money. So if I bet a yes on this, I pay 84 cents. The max value it's going to be is 100. So I'd make $19-20 right now. So that's the way it works. Yeah, let's stay on the lawsuit bandwagon. Could be. It depends on how much their lobbyists can pay the politicians. So I'm going to just do bullish on this. Above, let's do 600. Let's just buy. And the way you do it is just set this $100. So I can make, I'm going to risk 99 it to make 21. Let's ship it, see what happens, submit order, and there are fees involved. You pay a couple of bucks here, I'll just show you that. If you do get a click on it and then review price prediction, and the fees are like $2.72, so it's not free, right? That's a commission to do it, and you can get out of this stuff. Let's go into another one. Let's do copper daily, crude oil hourly. Let's do WTI hourly. So WTI 73.33. I've been burned buying and I want to show you something. I've been burned buying crude oil. So let's bet no if it's going to be above 75.29. I'm going to say no. So if I bet no, and I bet $100, so I'm betting that it will not be above 75.29 in an hour. Less than an hour. So let's ship this off, submit order. And you can do this all day. And so that's a no bet. Okay. So I can bet yes, something is going to occur, or no, that thing is not going to occur. That's how it works. Why not just buy some Bitcoin? Yeah, I could buy Bitcoin. The difference is the payout is known in a very short amount of time. That's why you might use a prediction market like this. But yeah, you could go buy Bitcoin. You could buy Bitcoin as a scalp. I'll buy, $100 worth of Bitcoin, sell it in an hour. Yeah, you could do the same thing. You could absolutely do that. Anyway, this stuff is bouncing around. Let's go back to our watch list. Let's go into Google. So Google getting whacked. Where's my little Google? So Google getting crushed today, down 3.86%. They have earnings coming out on September 4th. Who knows? There's some story about Google. It's one of the biggest. I don't even know. Sorry, wrong tab. I don't even know if the Mag 7 matter anymore, but it's down the most of that Mag 7. Just how NVIDIA is the leader, the single rally here. Google's down 3.81%, the biggest drop of all those 7 stocks. Of course, they're different businesses, but they're semi-related in a way, all these high-tech things. So could we do a contrarian bet on Google? Stocks at 363, right in between here. So down $2.50, up $2.50. The skew, I don't know. The skew is pointed to the downside, I think. Yeah, we might be arguing with the broader market. In this $2.50, let's see if we get 60 cents for this. Yeah, let's do this one. I'm just bullish on Google because why not? I don't think there's any premium left in the 2-day options. Maybe. Do this one. Yeah, let's do this one. 2 days, 357.5, 360, put spread, 85 cents, ship it, boom. Working. How's our SPX doing? SPX, 749. We are long this. Where's my butterfly? Where's my stuff? Activity. Nah, I got to dig through the trades. SPX here. So what I need is SPX at 77.30 at expiration. So we're $14 away. All right. I got to sign off. Production team is saying, hey, TP, you've gone on enough with this trading stuff. Yeah, so in Gian Zero, lead AI guy left Google. That's why. Whatever, it's still stock's down. They look for anything that could justify the stock dropping. That's how I think news works. Anyway, folks, this is just my own trading. This is my approach. If you decide to do this, that's on you. These are not trade recommendations. If you do decide to trade these things, please do not take any more risk than you are comfortable with.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex. now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Wednesday edition of what it is that we are trying to do. I'm so glad that you guys are here because it is only because of you all that we can do what we do. Welcome to the Expected Move Butterfly Victory Lap edition of the program. Man, we nailed that AMD Butterfly. We nailed that AMD Butterfly like you can only dream of. And so if you're watching over on the Tastylive network, I would actually bounce on over to YouTube because you can communicate with your brethren who are also watching the show. And you guys can comment on the first butterfly that I've hit in over 10 years on the show. You can communicate with the Bulls, you can communicate with the Bears, and you can maybe just commiserate with everybody because this market is a crazy one to trade. And of course, your questions and your comments and your stories and your jokes, put them in the chat because I want to hear them. The algo is craving that information so it can use it against us at a later date. So Laura, bring us in. Guys, take a look at what's going on. EMI S&P's unched on the day. Risk-free instrument, also known as the NASDAQ futures, down 120 on the day. You got the Boomers up 384. You got the Russell 3000 down 10. And so a little bit of a mixed market. Got bonds up a little bit. You got notes up a little bit. You got oil down 50 cents. You got UB40 up a little bit. You got, look at the shifties. Man, nothing like 170 points to the upside to just kind of clear the old sinuses. I mean, there's a little something for all my gold bugs out there. And yeah, gold up 130. What is silver doing? Is it back to 120? Hang on. Oh, I can't use my, oh no. Oh, there we go. It's like I can't use my drawing tools, but I can. Silver is, oh wait, that's not right. I was like 83. No, okay, 63. Okay, 62 and some change. Okay, that's a pretty big move, though, out of silver. And so, man, the metals are excited. The Dow's excited. The British pound is up. The euro is up. Volatility futures are down 50 cents. Spot volatility, the old VIX, that guy is down 85 cents, down to 1565. But, man, none of that compares. It all pales in comparison to the victory lap that we are about to take on this AMD Butterfly. So take a look at this guy. You can see, I mean, we've got ammunition to fight back against the P&L Day Bros, the P&L Open Bros. Again, the first time in From Theory to Practice history that this has indeed happened. But AMD, if I open up the Butterfly here, I mean, this is it, man. Even I can't screw this one up. Like, I mean, if I keep yammering on, which of course I'm going to do, was there ever a doubt? I don't even think I can screw this up. Like, I really, truly don't. If you look at the butterfly, right? Look at that butterfly. It is beautiful. The short strike on this butterfly, as we draw a series of concentric circles, the circle on that butterfly, let's get another one. So if you go like really deep in there, you get that little guy right there, that 485 strike. That's what you want to hit. Now, again, I'm no Julia Spina, but AMD at 486 and we want it at 485. That's a pretty good outcome. Like, that's a pretty good ending price for us, I think. Now, again, this is a $500 stock. And so it's like, man, like we've kind of threaded the needle inside of the needle at this point, I think. And so as a result, we're getting paid quite handsomely on this butterfly. Like you can see, we bought this guy for $498. It's currently marking at $22.71. I can't even count how many BEUs that is, but it's a lot. Like that's going to be breakfast, lunch, dinner, bonefish for days and days and days and weeks and weeks and weeks. And so when we look at this butterfly, man, it was perfect. It was perfect. They overshot the mark a little bit last night, like on the number came out Advanced Money Destroyer came out and said, look, we're still destroying money everywhere. Like, it is a global phenomenon. It is a galactic phenomenon at this point, and the stock got crushed. And so because of because of that, our butterfly was looking good. Now, it did overshoot to the downside last night a little bit. And so I was a little bit concerned. I mean, I spent at least 15, maybe 17 seconds on this guy, and I'm like, I don't know, man. That looks like maybe it overshot the mark a little bit. But if we take a look at like a 15-minute. Yeah, like you can see right there, like there's obviously your number. It's pretty clear. There's your gap fill for all the gap fill bros and bro sets that might be out there. But you can see, yeah, they overshot it down there, down to about 465 or so. And so it looked like, man, as long as it stays above 457 or 455, whatever that bottom short, or whatever the bottom long strike is for a butterfly, then we'd be in a good spot, of course. But, I was still thinking, this is another situation where, you have a butterfly on and it's not just a directional move. Like, you're not doing vertical spreads anymore. Like, you're not doing kind of these binary plays. You also have to get the magnitude of the move right. Like, you can't be too right and you can't be too wrong. Like, you kind of have to really middle it in a pretty big way. And so for our purposes here, we got a little rebound back in AMD, and it has since basically settled right into the center of our butterfly. Now, another thing that's great about the butterflies, before I take AMD off, we're probably rounding second, I say right about now. If you look at SpaceX, so we did a butterfly on this guy too, and this one didn't work, right? This guy absolutely did not work. You can see right now, I mean, we could actually get 58 cents for it. Man, I might actually do that. I assumed it would be worth nothing, but it's actually not. It's worth 59 cents right now. But either way, we paid 371 for it. It's kind of like, all right, if you've got two butterflies cooking and you're like, okay, like I'd love to win on both, of course. I mean, that goes without saying. But if you happen to just win on one, especially with AMD, remember, this is one that expires today because it had, the Monday, Wednesday, Friday expiration. So we took advantage of that by choosing that Wednesday expiration. With SpaceX, the reason why it still has value left is because it's a Friday expiration. And so remember, right? It's gimmies and gotchas. It's always gimmies and gotchas. That's literally the only thing you need to remember. You don't need anything else. You don't need deltas. You don't need thetas. You don't need gammas. You certainly don't need rhos. All you need are gimmies and gotchas. That's it. Forever and always the end. When you think about a butterfly going Monday or Tuesday into Friday, if you get the move that you want, then you don't get paid as nicely. You don't get paid as handsomely. So that's the gotcha, of course. But the gimme, as we can see right here with SpaceX, if you don't get the move that you want, if it goes in the other direction, then it can usually cling on to a little bit of value. And because of that, you have a couple of options available to you at your disposal. You can hang on to the trade and play it to the end of the week. That's, of course, totally fine. I mean, that's essentially what you're signing up for when you put the trade on to begin with anyway. And so that's fine. Or you can just, cash it out. Say, hey, you know what? I actually had a nice trade on my other butterfly, or I didn't have a nice trade on my other butterfly, whatever. And I just want to kind of, salvage some type of, sunk cost out of this butterfly a little bit. And, I'm willing to just be done with the trade and save a little bit of something. So when I think about SpaceX and AMD, it's always really important to remember that, you only need one of them to be a winner, which is so unique for us because remember, we're selling premium most of the time, right? So if I'm selling premium most of the time, then what am I doing? I'm risking 2 to make 1. I'm risking $1.50 to make $1. I'm risking 3 to make $1.25, whatever it might be. Like that's the price of admission. That's the cost of admission for high probability. I'm okay paying that. I'm totally fine paying that. But this is a different dynamic because now it's like, man, I can hit 50% and still come out ahead. Like I can win one, lose one, and still come out, really far ahead if you happen to get a really nice move like we were so lucky to get on AMD. I mean, I didn't know what was going to happen, and you didn't know what was going to happen, and nobody knew what was going to happen other than the fact that it's Advanced Money Destroyer for a reason, guys. It is for a reason. And so again, you don't have to overthink it. You probably shouldn't underthink it. But if you just apply the appropriate amount of thought, it will lead you where you're trying to go. So SpaceX did not work. We're going to take this guy off just because I kind of want to save my 65 cents. I'm kind of surprised and delighted by the fact that we can save a little bit of money on this SpaceX butterfly. So let's do that first. So there you go. There's SpaceX. And then I do want to go back into AMD, of course. I want to close out of AMD. And then, I mean, Autumn thought we had other plans tonight. I think we actually do literally have other plans tonight, but those plans are going to change. Like we had other things going on tonight with like friends and like other things going on, but that was before AMD. That was before we nailed this butterfly. And so now it's like, man, we can go to Bonefish and you can get the 9-ounce fillet. Like, you don't have to get the 6-ounce fillet tonight. We're going to go with the 9-ounce guy for you. And so the kids are obviously going to split some meals. But yeah, it should be good. And so let's go ahead and let's go ahead. We actually do that, by the way. They don't even split meals. Like, we actually, so my wife and I, so a lot of times, like on the weekend and stuff, like, obviously date night, Friday night, Saturday night, whatever. I mean, we do the same thing that every couple, it's a global phenomenon. It's another galactic phenomenon. Everybody does the exact same thing, right? We all kind of concentrate on the Nash equilibrium, which is, takeout Friday night or Saturday night, or obviously the best answer is both. And so with small kids, though, man, they're expensive. And I'll tell you a little secret, they keep eating. Like, I keep feeding them and they just keep eating. It's crazy. Like, it's the craziest thing I've ever experienced. And so I just stopped feeding them. And so like at night when we go out, like when we get like takeout or whatever, I don't even buy stuff for my kids. I'm like, just give them a bowl of oatmeal. Give them that 30-cent bowl of oatmeal. I'm like, I can't keep up with these kids, man. Like, I can't afford to keep buying them, Fresh Kitchen and Bonefish and, El Porton for my Memphis crowd out there. It's like, I can't afford that stuff, man. And so we don't even feed them when we go out to dinner, which is kind of nice. I mean, they get a little hangry about it, but it's okay. And so let's go ahead now. Let's go into AMD. I think we're done digressing at this point. Let's go ahead and, let's do a full closure here. If you happen to have any Banana Natty left, which we're already 10 minutes into the show, you're probably on number 2. And so I would go ahead, don't pour it out, like take a couple sips. Take a couple sips for the AMD trade, and boom, there you go. Let's see what happens here if we can get filled. And, man, let's do it. So if we go to, no takers at 2273. Let's try, I see you guys in the chat, and I appreciate you guys, man. Look at BBB Fine is here. Griffin Jones is here. Griffin email earlier. Super encouraging and inspiring, man. That's awesome. Great job out of Griffin. I'll tell you guys, you guys don't know this. You might know this if you've been in the chat for a while. But Griffin Jones is a straight gangsta. Like, don't ever let him fool you. Don't ever let him lead you to believe something other than that. But I know the truth, man. He's back there getting some real work done. And so that's awesome stuff. All right, let's see here. 2262, 2258. Man, these markets, man. Like, I don't even think Vinny Batiste is doing it anymore. Isn't he like a manager at Dairy Queen or something? He doesn't have time for these AMD pits anymore. 2255. Wow, this is not good. I mean, I know it's a four-legged strategy. I know it's AMD, but even still, I mean, why do we even have a mid price at this point? It's like, when is this number going to help me? I feel like this number is not helping me. I feel like I should just pick a number at random, and I feel like we'd have a better chance at getting filled. That's how it feels some of the times. Other times, it's like lightning fast fills, and everything is amazing. But yeah, so we're not getting filled on the mid price. 2250. I mean, in fairness, it is AMD. It's a four-legged strategy, and so obviously, you've got to deal with all that. But man, this is like, I feel the BEUs like they're evaporating. Right now, we've got a lot to work with, but I don't know how many nights we're going to be able to do the 9-ouncer. Like, maybe tonight and maybe tomorrow night, but then I think come Friday, like when we get into the Bonefish rush, no, it's going to have to be a 6-ouncer, I think. Let's do a 2245. Wow, this is going to be the whole show. I mean, Laura has sent me some surprises and delights. I want to get to you guys on surprises and delights, but we're not going to get to any of that because we've got to get this AMD, trade filled, and it's just not cooperating. So let's see here. Let's do 2242. Man. Wow, I don't know what's going on out there, guys. Are you guys trading? I mean, obviously everybody's trading AMD today. Like, everybody's unwinding trades and maybe doing new trades. I'm like, am I going in the right direction? We got filled. Look at that. 2238. Look at that. I think we gave up like 20 cents to somebody out there. So you're welcome, whoever was on the other side of that trade. But okay, let's take a look at what else is going on. Yeah, let's see. SpaceX. Yeah, we did SpaceX. And now we look at, Apple was our short put spread. There's nothing to do there. The diamonds was our long put vertical spread. There's nothing to do there other than the fact that, so if we take a look at the short option here on this diagonal spread, you can see that, we sold this guy for $5. It's currently marking for 36 cents, which makes total sense, right? Because now the market is super, it's super high. It's rallied significantly from where it was when we put this guy on. So obviously both of these options are going to dry up, pretty significantly. But you can notice that the long option in the back month is still clinging on to a decent amount of value. Now, because of the significance of the move, you can see that we've obviously lost more on the long option than we gained on the short option, because the long option was working from a much higher base. And so that would explain why we're down a few dollars on the trade. But keep in mind, we still have 44 days to go until September expiration. So there's a very long time until September expiration. So I'm not super concerned about that long option. There's a lot of things that we can do between now and then. And I think the first thing that we should consider doing is let's go ahead and let's take our 515 put right here. And what if we just roll this guy like into this September weekly? And again, with diagonals, there's a lot of things you can do. You can make the spread wider. You can make the spread more narrow. Like there's a lot of creative and innovative things that you could apply to this strategy. But I think most of the time, one of the best, most effective, and also simplest methods of adjustment is just take that short option and just roll it out to a weekly option between where you are now and where the long option is set to expire. So the long option is set to expire in September monthly, which is September 18. So if I roll out to September 4th, then that still gives me, I basically create like a little mini diagonal for myself. Like I had the maxi diagonal, now I've got the mini diagonal. And then of course we'll move to the micro diagonal after that, and we'll kind of see where that guy takes us. But when it comes to rolling out this short option, I like doing this as opposed to getting super creative, because you can see this is that's a pretty economically significant bit of premium improvement that we're able to pick up. It looks like we're going to be able to pick up about 90 cents on the trade. Now we only paid, what did we pay for this diagonal? Like $5 or $6, I think. I mean, it wasn't that much, I don't believe. Let me clear this for a second, just so I can see. Yeah, we paid $7 for it. Right. So it wasn't super insignificant. I mean, nothing is insignificant, of course. It all matters, clearly. But when it comes to $7 versus like $3 or $4, $7 is a little bit more significant. And so this is approximately 2% of the account, or maybe a little bit less than 2% of the account. And so because of that, rolling this guy out for 90 cents or so is not a bad place to be, because that takes $1 off of the overall basis and essentially leaves us with the same trade that we had on. And it gives us at least one more rolling opportunity to move the short option into the back month with the long option. Because remember, like, what is the final destination of a diagonal spread? The final destination of a diagonal spread is going to be a vertical spread. Right? So either it works in one of the early cycles, or it works early on, or whatever, and you take it off at some profit, that's great. If it doesn't work, you can keep moving that short option until it finally lands in the same cycle as the long option. That is the final stop on the train tracks. That is the final destination. I think they're on final destination 8 or 9 or 10 by now. And so if we're thinking about final destination, 11, like for the context of what we're working with here today, then we move this guy out to the vertical spread in the back month, where it kind of cozies up right next to that long option. And then we just end up with a vertical spread in the back month. That's really, if we get to that point, it's no different than any long vertical spread where you need the guy to go fully in the money. If it doesn't do that, then you end up losing what you paid for it. And so for me, I really think that just rolling out the short option into the September 4th weekly, yeah, I think it's a solid option. Let's go ahead and try and do it for 88 cents, and we'll see. It got filled right away. See, there you go. See, that time we had some good markets. So look at the boomers, man. Like every time you count them out, they just go build something. Like every time you count them out, they just go do something positively for society. Now, it is a little bit of a stick in the mud, the fact that they refuse to use the self-checkout at the grocery store. That tends to be a little bit of an obstacle for the rest of us that have caught up with modern times. But still, I'm not hating on the boomers too much, because we all have to draw the line at some technology when we get to a certain age. And so let's go ahead. Let me see where you guys, actually, let me see what Laura's got for me on some surprises and delights. Nice. Okay. Okay, beautiful. Laura, surprise and delight part 1. Okay, excellent. From point B, what is going on there at point B? Point B says, can you explain how covered calls work As you approach to expiration, the strike is breached and you're losing on the short call. Do you pay for the loss on the call at expiration? Or is it just the stocks are taken away from you and the negative loss on the call is not your responsibility? Is that correct? Okay. This is a great question. And I think what can be really helpful to do there, point B, is whenever you're looking at a covered call and you're trying to understand what's going on, never look at the legs individually. Like you have to look at them individually to understand the mechanics. And we'll get to that here in a second. But when you're thinking about, okay, how am I doing on the position? You have to net them together. You have to net the long stock and the short call together as one because they are a package deal. They are one flesh. They are man and woman. They are married, never to be separated. And so I really think it can be extremely problematic to separate, the long stock from the short call, because now all of a sudden, like people will look at a covered call and like they'll see the stock rallying and the short call is getting totally rinsed. And they're like, man, what's happening to my position? Like it's losing a bunch of money. It's this, that, the other thing. It's like, no, it's actually not doing that at all. It's making money. Now, it's not making as much as you would have made if you didn't have the short call on. But again, you didn't know what was going to happen. I didn't know what was going to happen. Nobody knew what was going to happen. I mean, Johnny Pools 47's got out locked down on X, but he's the only one. Like he is the only one. For us mere mortals, us peasants and plebes, we don't know what's going to happen. So we have to look at these things together. That's the first thing to keep in mind. But the second thing, so what happens at expiration? So essentially at expiration, if you take an in the money cover call to expiration, then you're going to be in a situation where, you have the long shares and you have the short call at whatever strike. So let's just say you have, long shares and you have a short call at 105 and you have long shares that you bought at 100, right? So I sell the call at 105 with a strike of 105. Let's say I sell the call for $2. Right. Again, I know I'm kind of hand waving and verbally taking you forward through the forest. And so, if you're only listening to the audio only version of the show today, then this is no different than what, you guys experience every single day where you really can't see anything. It's just my sultry voice. Now we're all on the same playing field. I have a stock I buy for 100. I sell a 105 call. I pick up $2 for it. Let's say the stock rallies to 110. What happens at expiration? Essentially, the short call is assigned, right? You are short shares from the short call. You're short shares at the strike price of 105, but you bought shares at 100. So that's no different than buying the shares for 100. They go to 105 at some point in the future. Don't forget about what the current stock price is. It's kind of irrelevant other than the fact that it's in the money. You buy the shares at 100, you sell them at 105, you make $5. This ends up being the exact same thing, except you were assigned on a short call, so you shorted shares at 105, and then it got reconciled with the shares that were already in your account that you happen to buy for 100, but you still end up with a $5 differential. The difference here being you also get that $2 premium that you picked up from selling the call in the first place. So you end up plus $7 in the end. Now, again, the stock's at 110. You would have been better off had you not done that, but you didn't know that, and I didn't know that. And so, but that's how it works mechanically at expiration if you take a covered call all the way through expiration. So hopefully that helps. Thank you there, point B. Part 2 from DMC, my man DMC. What is going on? I appreciate you so very much. Question, I tried selling an Iron Condor on SpaceX September 18th, 75, 80, 160, 165. Limit order at a 103 credit. I ended up legging into it separately for $1.10. Why is it so much harder to do it as a single trade? That's an outstanding question. And it's actually there, Daniel. It's exactly what you saw that was happening with me with AMD. Right? Whenever you do a multi-leg strategy, Iron Condor, Butterfly, Jade Lizard, Spiked Lizard, Big Lizard, basically anything from the lizard family would work here. Every time that you add another leg to the strategy, you have another bid-ask spread differential that you have to navigate and you have to negotiate. That's going to make it more challenging to get filled on that strategy at all, and definitely more challenging to get filled at a fair price. And so this is why we keep preaching and preaching and preaching liquidity, liquidity, liquidity. Because again, we like to have the optionality of doing multi-leg strategies. I mean, I know I do, and I think you do too, whether it be an Iron Condor or Butterfly, whatever it is, it doesn't matter. I don't want to be just relegated to just selling puts all the time. Although that may not be that bad actually, but still, I want to have some maneuverability when it comes to doing strategies that have multiple legs. Well, if I'm trading something that's even pretty liquid, which SpaceX is okay, it's not amazing, it's okay. As long as it's pretty liquid, then I'll be able to get some type of decent fill in there. But once you drop off from like primo liquidity, and now you're dealing with like, something that's maybe like a 3-star on the Tasty liquidity meter. Now you've got multiple legs, you've got your iron condors, your butterflies, whatever. It's going to be a lot more challenging to get a decent fill on those trades. And so that's why you ended up finding a better fill, an easier fill when you actually legged into it. And sometimes that's what you have to do. Sometimes that's the only way to do it. And then part 3. Oh wait, I skipped 2 and I went to 3. Oh my gosh, look at me. Thank you there, Laura. Let's go back to number 2 though. Number 2 is Joel James. You guys can't see this, but I can see this internally. My man, Joel James, Dr. Jim. What's going on there, Joel? The VIX is pretty lowish, but QQQ has highish IV rank. Does one metric beat the other? So is today a good or bad day to trade QQQ, assuming you're going to sell puts calls? Today's a great day to trade QQQ. And this is a reminder that the VIX is market-wide volatility, whether you're looking at VIX or even VIX futures. I mean, some people like to look at one over the other. I do think that VIX futures are probably more relevant in today's market, but I'm kind of beholden to the fact that there's a lot of nostalgia attached to the VIX for me personally, because I did my first ever research project as a PhD student on the VIX, and I told this story many, many times before on the show, so I won't force you guys to struggle through it again here today. But that was my first ever research project, and so I still look at the VIX. It's just kind of like a habit of mine, and so it may be archaic, it may be irrelevant, but it still is. It's my baby, and so I can't just throw it out with the bathwater that easily, whatever that means. And so if I go to the VIX though, that's going to measure market volatility. It's going to specifically measure the VIX of SPX options, and so that's S&P 500. The NASDAQ and the S&P 500 are obviously closely related. There's a ton of overlap. I mean, that Venn diagram, it looks, if from afar, it looks like it's the same circle, right? But if you get up close, it's like, okay, they look a little different. Case in point today, EMA S&P is up 3, NASDAQ down 120, right? And so, they are definitely different instruments and different entities. And so this is why I like looking at market volatility, VIX, volatility futures, whatever, just to give me a broad overview. Just give me a broad swath of what's going on in the overall market. And then I want to get in with more of a laser-like focus on that specific index or that specific stock. I'm looking at that IV. I'm looking at that IV rank. That's going to show me what opportunities might exist for that specific stock. And so, yes, I absolutely think, looking at QQQ is the way to do it. And so, thank you there, Laura. Wow, that's really, really good. Let's go ahead and, man, let me see. Can I surprise and delight somebody in the middle myself? I mean, I think I can. I see, I see BBB Fine saying that he's a boomer and he uses a self-checkout. Well, good job out of you, man. That is a good job out of you. And so, awesome stuff. I appreciate you, my friend. I know that you know that I do. And so you're a good man. But let's go all the way back to the beginning. Let me see if I can get to some of these surprising delights that Laura sent my way. I see Ryan is in the house talking about some Microsoft OpenAI revenue. All the revenue apparently is coming from OpenAI. I mean, I'm not surprised. Are you surprised? I mean, that makes sense, I guess. Ashfin is in the house. What's going on there, Ashfin? Up and down is here. What is going on there? Up and down. Sergio, greetings, Doc Bonefish called. Your private room is ready. They just need to know what time to valet the Schultz family. Yes. I will let them know. And the great thing about Bonefish is, I mean, there's not just one, of course, but maybe one of the best things is private room, regular seat, booth, table. It's all wide open. Like you go anytime, any day, it's take your pick. And so that's the great thing. I mean, obviously I want to reserve the private room just because, it's got a little status behind it. But yeah, we'll let them know there, Sergio. So thank you there, my friend. We're gonna have to find a new Schultz wagon though, because man, Autumn's been on me about this van. I mean, she is. I'm taking so much heat. Like I didn't take any heat on AMD. Didn't really take any heat on SpaceX. It's whatever. It's defined risk. It's like whatever. I am taking an unbelievable amount of heat on this van situation. And so we've got the Pathfinder. We only have one car because I obviously drowned the Civic last summer. That guy sunk into the ocean. That was one of our side streets in about 18 inches of water. And so that guy's gone. So we've been doing the one car deal for about a year. And I'm actually shocked we've made it this far. But I mean, I'm here most of the day. I mean, I've got a lot of training stuff in the garage and I still go to the gym for machines and stuff. But I do a lot of my stuff here, which is great. And so Autumn's carting the kids around and whatever. And she's like, we got to get this van. We got to get this van. We got to get this van. So you guys help me out, actually. Help me out. If for no other reason than to simply pump the algo. We're trying to decide between a Honda Odyssey or a Chrysler Pacifica. You guys got to help me out with this. What do you guys think? I need to know, do you guys actually have any experience with either one, a Chrysler Pacifica or a Honda Odyssey? Now, again, we're in the circle of families, and it's like, all of the families are basically doing the same thing. And so half of them have Odysseys and half of them have Pacificas. And I'll tell you what, like, you think like Republicans and Democrats like get after each other? Man, the Pacifica Odyssey feud, it gets nasty. Like, it gets downright nasty. Like, they are planting their heels in the sand because it is St. Petersburg, Florida. And I'm shocked. I am shocked at the language that goes back and forth, at the insults that go back and forth. And so I don't really know who to believe. I'm like, who's giving me objective information and who is just married to the idea of their vehicle more so than, oh, look at Ben. Ben's a Pacifica guy. Okay. All right, so we got a Pacifica. It says it's not close. Yeah, the Odyssey people, they're going to take a lot of issue with what you just said there, my friend. A lot of issue with what you just said. But let me know in the chat. So I got one vote for Pacifica. Let me know in the chat one versus the other. I would really, really like to know that. And so, but let me go back to the beginning here. N1C is in the house. What's going on there, N1C? I appreciate you there, my friend. Let's see. Sam L's in the house. What's going on there, Sam L? Or Daniel is here. Hello, Dr. Jim. There's XYZ earnings. Do you have any thoughts tonight? Interesting. XYZ. Let me take a look here. XYZ is always so funny to me because being a finance professor, XYZ, that was our go-to. That was our fail-safe. I mean, I did it for years and years and years. As a PhD student, I taught classes. Then obviously as a professor, I taught classes. And this was our go-to example, right? Hypothetical example, XYZ stock. Now it's a real company. Right? You got your XYZ, you got your ABC. Now XYZ is a real company. You can't even use it anymore. ABC, okay, ABC is still up for the up for grabs. But XYZ is taken, man. So now you're left with ABC as your first example. And then obviously the only other one that you can use is BEU. So ABC and BEU, these are our two new hypothetical examples. For all my finance academics that might be watching the show, I wouldn't imagine you guys would watch a show like this one, but should you happen to stumble upon this show by misclicking or something in the future, then here you go, ABC and BEU. There you have it. But XYZ, this is the Jack Dorsey deal, is it not? His new little venture? Yeah, let's take a look. Wednesday and a Friday butterfly? I mean, it doesn't sound like the worst idea I've ever had. I wouldn't necessarily classify it as the best idea I've ever had. It's, it's somewhere in the middle, I think. When I think about block, I think about, well, actually, I'm thinking about the XYZ status change. The status change. I mean, think about it, right? For the longest time, XYZ was just caged. XYZ was just, it was imprisoned within the walls of the ivory tower of hypothetical examples in finance classrooms across the globe. But now, as of a few years ago, when Jack Dorsey, took over the company, whatever, it's now broken free. It's broken free from its chains of academia. It's out there on the rough and tough streets of practicum. And so now I'm like, man, I don't know. How can you not be bullish? How can you not be bullish? I mean, this thing is out there. It's fending for itself. It's out there in the wild. And so, I mean, I'm going to play this thing to the upside. And I really don't see any way this could possibly not work. I mean, I'm probably 30 to 31% sure we'll get something out of this guy. But man, 84, 91, 80, 84, 91, 98 for $1.28. I mean, come on, man. Come on, man. That's couch cushion stuff. I mean, $1.28, $1.28 in actual dollars is $128 in option dollars. And so maybe it's a little bit more than the couch cushion stuff. But still, in the grand scheme of like what we might typically risk on other positions, it's definitely on the lower end of the spectrum. And so, man, I don't know there, Orgdenu. I'm kind of thinking, yeah, 84, 91, 98. Let's do it again. Can we do it again? I don't know. Now, I don't have another earnings trade for tomorrow. I don't know if there are any others. This was the only one that was kind of loosely on my radar. And then Orgdenu, you reminded me, so thank you. I don't know that we'll do another one. So this is going to be our only shot tomorrow. This is going to be our only chance for a winner. But I like it. I like it a lot. $1.30, $1.35. Let's see if we can do it. $1.39. Here we go again, man, with the mid-price jumps. Man, these multiple leg strategies. So again, Daniel, DMZ, here it is again, right? I mean, it's the same thing. It's exactly what you experienced on Condor. And yeah, like before I go to replace and send this order, you can just see replace and review and send or whatever. When you look at the markets here, you can just glance at them and you can see they're not super tight, right? So if like this is happening to you and you're getting a little frustrated and you're like, hey, what's going on? Why is this happening? You can just take a quick glance at the actual markets themselves and it will tell you a lot. Like it will tell you like what's going on with those individual markets and what you're trying to get done. And so yeah, it's a little wide, man. That's crazy. And so I thought they were just giving it away at $1.38 or whatever, but now at $1.47. All right, so we got improved at $1.46. Okay, so there you go. So there's your market in XYZ. And yeah, so there's a butterfly to the upside. And so there we go. Up and down is in the house. What's going on there? Up and down. What is up? Point B is I want to actually scroll down really quick. We got any Pacifica Odyssey info? I see a lot of Hondas coming through. People say Honda's more reliable. Up and down says a Ford Explorer. Man, that's a media block. Come on, man. We're trying to have a serious conversation here. Like, I'm trying to get real information, man. Like, this is, like, playtime is over. Like, joke time is over. Like, there's a lot riding on this decision. I can't mess this up. Right? My man's talking Ford Explorer. Somebody's going to throw a Dodge Neon in the chat. And so I see a lot of Hondas coming through. Joel James says, don't do it. I got to do it, man. I have to do it. Like, my hands are tied. My hands are tied. Like you kind of think, that, when you miss the mark on a butterfly and hits max loss, there's nothing you can do. That's exactly how I feel. That's exactly how I feel. And so because of that, there's no way out, man. Like this is Rocky IV. There is no way out. And so unfortunately, the minivan is the only solution. Like I've looked at all the roads. I've mapped them out. I've looked for alternative routes. I've checked contingency plans. All roads lead to minivan. That's it. Trust me, I've thought about this a lot. They all lead to some type of minivan. Point B, let's see. Both stocks actually got hit after earnings, so somebody's about to have a very interesting breakdown. There you go. You got my breakdown for better or worse. Sam L. Doc, again, Mr. Croissant stole your morning show. I know he did, but that's an uptick for you guys. That's an uptick for you guys. You guys have very exciting things coming on down the chutes with, with Jam and I don't know if I should call him Jam or Chem. I think his name is Chem, but he's Jam Croissant online and on X and all that kind of stuff. And so sometimes I call him Jam and sometimes I call him Chem. And he's a great guy and he's super, super sharp. BBB fine. Let's see. Hey, Dr. Jim, too bad about SpaceX earnings. That's okay. I rolled your 821, 175, 160 put spread out and down, okay, to a 918, 130, 115. 2x. Okay, so now you have two spreads on. For an extra $600 credit, now I have $12.50 on the $15 wide put spreads. Okay, but you doubled up, it looks like, right? Because that's the only way you're going to be able to finagle something like that for a credit. And so you did bring in a credit, but you actually increased your risk on the trade, which is fine as long as you understand what you're doing and you understand what you're signing up for there, which I know you do, Billy, but I'm kind of speaking to everybody out there. It's like people might look at that and they're just starting out like, how'd that even happen? Like, how do you make that work? And well, Billy doubled up on his risk, which I don't have a problem with that necessarily, as long as you understand what you're signing up for. Like, what am I getting myself into? Am I aware that I have now taken on more risk with the strategy? And so that is the key. Let's see. Sam L, the real rivalry isn't VIX HQ in the market. It's Doc versus Mr. Croissant. Yeah, I have a feeling I'm going to lose that one. In a big, big way. Brian Racketon is in the house. What's going on there, Brian? Or Daniel, I followed the Doc on AMD, but fade him on SpaceX out of principle. Well, that man, you actually, oh, that's right. I saw you post that last night there, or Daniel. You were bearish on AMD and SpaceX. And so good job, man. I mean, that's, I thought I was going to Bonefish for a while, man. You are going to be there. You are going to have a table there, my friend. You are definitely going to have a table there. And so let's see. N1C is in the house. All-time highs, war pays. Apparently it does. And there's point B with the covered calls. We got to that one, so that's good. And then let's see. BBB fine. AMD was fast to take my money on the butterfly, but they won't pay up to let me out. The greedy market makers. I mean, maybe Dr. Wood was right. Remember, I've told you guys this story before too, but we've got an extra 30 seconds. When I was in one of my very first classes at the University of Memphis, starting my doctoral program, super overwhelmed, super like drinking from a fire hose, like what's happening? Like I can't do any of this stuff. The math is too hard. Like the equations are too crazy. Like I can't do any of it. And somehow I muddled through by basically just kind of evading and escaping for 4.5 years. But but in my first class, Dr. Wood said, he said we were going through bid-ask spread differentials and we were going through like market maker models and all kinds of like pricing things and whatever. And I was like, this is insane. And he was like, and he actually said, he made an offhanded comment that I never forgot. I'm glad I remembered it because now, I mean, I've been working with market makers now for the last 10 years of my career. He said that market makers have a license to steal. And I was like, all right, I better write that down. That could be on the exam, blah, blah, blah. And then I, took the exam, 2 months later, and there it was, fill in the blank. Market makers have a license to fill in the blank. I was like, I got it because I wrote it down. And so I remember that. And then I go to work with, market makers and, Tom, Tony, Liz, whatever, right? It's been amazing. And it's just a very, very, very different perspective. Very different perspective. But now it's like we're seeing these mid-price jumps. It's like, I don't know, man. Maybe they're not stealing, but maybe they're just borrowing and not giving back. Like maybe that, like maybe we shouldn't call it stealing, like outright theft, but maybe it's a loan where only one party knows about said loan. Like maybe that's what we should start calling this. Oh man, that's really, that's funny. And so, but be fine. I'm right there with you. I'm right there with you there, my friend. I'm right there with you. Ranch, I'm taking Jermal's bullish hood trade. All the right specs. Thanks, Jermal. There you go. Jermal is a good one to follow. Don't fade. You need to be following. 1030 is in the house. Do you think SPX will come back up by tomorrow? I mean, come back up. I mean, it's already up, right? I mean, if you're talking about the little bit of the drop, that is this even really a drop? I guess. I mean, if I was looking for a directional play here, I would not be playing for that. I'd be playing for bloop, that guy right there. That's what I'd be playing for. I'm not playing for the, the bladat to the upside. We're playing for the bloop to the downside, right down in there. And so that puts you somewhere around 7,500, maybe maybe like 7,510 to make it look like, we really tried. And so I would say that, yeah, you gotta play it to the downside here, which again, I got it. It's never going back down. This time is different. I understand. I mean, I'm on the internet too, but yeah, that's how I would play it. Ryan LP is here. What is up there, my friend? Joel James is here. What is up? Another surprise and delight that we made it back to. Wow, we only have a couple minutes left. Can I make it back to the third one? I don't know, man. Laura kind of keeps me on my toes. N1C is here. Butterflies are hard to close. You can do each spread separately, but you got to calculate the prices you feel. That's correct. Right. You buy one, sell the other, so you can watch the spread. That's also correct. Ryan LP, thank you there, my friend. The other Ryan ZN. I got Ryan LP. I got Ryan ZN, which are both like, alpha characters, which might be difficult to remember. But wow, nice trade, Doc. Thank you there, my friend. I appreciate you. BBB, fine. AMD. Let's see. I did a $20 wide butterfly in for 265, out for 1,500. Thanks, Dr. Jim. Going to Bonefish Happy Hour. Bonefish Happy Hour. That's where it's at. Go get you a Miller Lite on draft, man. Like, don't let the haters take away your fun. Don't let the haters steal your joy. Like, you can do it. You can 100% do it. And so, point B, good afternoon to Laura. Yes, good afternoon to Laura. She's doing a fantastic job back there. Let's see. DMZ is here. Ranch is here. SPX is a total dog. It is a total dog, really? Down 30 basis points off of all-time highs? Man. Guys. We got to give it a little breathing room, right? Give the bloops a chance to breathe. Because, yeah, wow. That's really funny. Let's see. Ranch is here. Point B. Griffin Jones is in the house. What is going on there, Griffin Jones? I see you, my friend. I'm like out of time, though. But I see Adam Armfield is here. Who else is here? I see B. Balgo is here. Man, I appreciate you. Flipper is here. Man, look at you. Luminous Bit is here. P.E. Leonard is here. Man, I appreciate you guys so very much. Man, Jim, Dandy Field is here. E-Media is here. I appreciate you guys, man. I got to run and get you guys over to Tim Knight. But thank you guys so very much. If you guys want to shoot me an email, if I can help in any way, please do so. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
We built Tasty Trade's web platform for today's traders. See it,
click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Hello everybody, Tim Knight here. Happy Wednesday to you. We finally have a little red on our screen, first time in a week. You'll surely recall that Wednesday at the close was sort of the nadir, or nadir, not sure how it's pronounced, N-A-D-I-R, the bottom of the sell-off we had seen. And since then, it's been a merciless push higher until today, with tech stocks at least. On an intraday basis, there have been lifetime highs all over the place. But as of right now, we've got, generally speaking, a strong open and a weakish looking close. Let's just dive into the charts. Those do a better job than I can describing what's going on. So here we have the spider, and it's pretty simple to describe what's going on. We were range bound for all of May, all of June, all of July, and finally, yesterday, we escaped that range for the first time. And as you might guess, it was an explosive move higher. Quadruple digits on the Indu, quadruple digits on the NASDAQ composite. Today, as you can see with the red bar, we are getting some selling. We are up barely right now, 0.07%. So lifetime high on an intraday basis. And like I said this morning, we could fall a lot and still be completely bullishly configured. The only wart that's going to possibly appear on this bullish scenario would be if we re-enter that rectangle, if we have a failed bullish breakout. I have not stayed completely on top of the Iran news, but my sense is that, some kind of deal is effectively done, which I won't go into in terms of my reaction to the nature of the deal, but as a trader, what I'm glad to say is that it would be really good to have it behind us. But we had it behind us with a memorandum of understanding, and that was what lasted 2 or 3 weeks, and it became irrelevant. So I'd love it to be done forever, but you would be completely forgiven by doubting that. But it really mucks things up with respect to trading, because I always have to worry about the next surprise. But at the moment, it seems like we are approaching another resolution that'll last for some indeterminate amount of time, and we can focus on things besides Iran and the Strait of Hormuz. The diamonds have had 5 green bars in a row. They still have a net gain for the day, and it seems almost certain that it'll retain that. We've pushed higher than this broken trend line, but this is not a safe position to be in. It could easily retrace a portion of this pop. A little bit of a shooting star pattern there. Things are very stretched to the upside. For myself, I bottomed out commitment-wise at 14% yesterday, worked that up to 50% at the close yesterday, and as of now, I'm back up to around like 80, no, 75. So still cautious, but getting back in there step by step. The small caps IWM also had an intraday lifetime high, but they have a net loss right now. So they've already given back some of that big blast higher yesterday. And overseas, emerging markets, that pop has been strong. We've sealed up this price gap. Kind of a mess of a chart here, not particularly tradable to my eyes. Although one particular country, as you know, that I'm a little obsessed with is China. So my FXI puts March 2027, $37 puts. The FXI itself is down a little more than 0.5%. Nice. First red bar in like 10 days. So I appreciate that. And if I'm looking for a much more substantial drop between now and way out in March, which will feel like about 20 years or so, I suspect, with what's going to happen between now and then. So plenty of time. Now, let's take a moment to talk about SpaceX, because that was a big deal last night. And there are some interesting things going on. So on Monday, we had a nice fat green bar. And yesterday, we had a nice fat green bar. And they came out with a report. Revenue is $1 billion higher than expected. Net loss much smaller than expected. Good news. And the market reacted accordingly. It immediately bid it up even higher. And it got to around 131 or so. And just for context, the stock peaked at 230 approximately 3 days after its the third day of its offering. So we're still massively below that peak, but it was healing Monday, Tuesday. That first reaction to the earnings report did not last. And by the time we opened today, all of yesterday's gains were gone, and we are now trading well within Monday's bar and not far away from lifetime lows. So the only good news you can kind of say for the moment is, well, and this is thin gruel, is well, at least it's not at new lifetime lows. That's the only good thing you can say. I would add, though, that the selling hasn't even started, because tomorrow, I believe, the first block of shares, and I think I read it was like 1 billion shares, is a lot. 20% of the entire company's capitalization shares come free to trade. And it remains to be seen what the result will be, because it comes down to this. How will all those folks, insiders, early investors, etc., how will those who have been trapped and foreclosed from selling behave after they're allowed to sell? And the two extremes are obviously, oh my God, thank God I'm turning this into cash now, or not at these prices, I'm waiting. This is a long-term hold, or at least I'm not going to sell this cheaply. And of course, there'll be all measure within that continuum of decisions. But where's the bulk of people do? What will they do? We'll know soon. Because if we see volume start to really pick up and it just kind of remelts slower, then you will see those double digits before the week is out. I'll say it again. I don't want that. Bear though I may be, this is the one stock I want to do well. So I'm not cheerleading the demise of this thing. But don't be surprised if we're in the double digits for this weekend. And we could be shocked. You know what? That 20% that gets unlocked, the people may just cross their arms and be like, I'm holding on to some for a decade. And we could rally, because the supposition that there's going to be a lot of selling is already built into the price. The fear of that is already built into the price. You could see a big rally, paradoxically, because of the unlock. So interesting to watch, but that's the reaction so far. Great earnings and just a belch in terms of the ultimate reaction. The other item that came out yesterday was AMD, and they fell immediately. AMD is down almost $32, over 6%. As I mentioned this morning, the topping pattern is still pretty as a picture, but is not complete. It needs to get below the low we saw last Wednesday to complete that pattern. And if it does, look out below. As it is now, it's just range bound. just banging around the same range it's been since, people were cleaning up after Easter Sunday. So there we have it. On that same topic, South Korea, EWY, the topping pattern here is still kind of in place. It's not beautiful, but it's not completely trashed like a lot of others have been. We're down just a touch on this, but that topping pattern is still intact. SMH, weirdly, is actually up a little today, even with AMD being down, and even with South Korea being down a little bit. SMH is up about 1/3%, mostly because of NVIDIA. SpaceX made a big stink about their NVIDIA relationship, so that's really goosed the stock higher. NVIDIA's far and away the biggest semiconductor outfit, so naturally that's bleeding over to SMH. But I've drawn these lines here, and ask your local first grade student what they see. It's a descending channel. It's just working its way lower. So don't let this week's worth of rally seduce you into thinking that suddenly it's a brand new bull market of semiconductors. It's a bounce. If it's the last bounce and it's up from here, who knows? But this is a descending channel and will continue to be so until it's not. Precious metals are getting a much needed relief rally. They are big. GLD up over 4%. Big rally there. Take note of that right triangle. This is, yay precious metals. I actually just did a video yesterday, which they'll release today or tomorrow, about my thesis that I've talked about for the past year or so, that over the long haul, I'm a huge precious metals fan, and I think they're going to knock the socks off of equities. However, for the short term, I think this is a transitory rally, and we will bonk our heads against the bottom of that right triangle after this rally's done. But if it's like, okay, I don't care about next week or tomorrow, I care about the next 10 years, okay, fine, buy it now if you want. Ultimately, I think it'll be a lot higher. It's just not a fantastic price. Silver SLV up just about the same percentage-wise, which is unusual. It's usually kind of a outsized move, but same deal, same right triangle, and same ceiling that I think it's going to conk its head against. Naturally, miners, GDX, are enjoying this. They're up good and strong, 7.5% pop with the GDX. XME is also up, though more modestly, a bit more than 4%. And as I mentioned this morning to the fellows, it's not a terrible short if you're looking to short metals. It's certainly much, I wouldn't touch GDX, but XME with a stop just above that gap, it's not a bad trade. Crude oil, with this chitter chatter about a deal, has been beaten down strong over the past 8 or 9 trading sessions. We're the lowest we've been since this pop on July 30, which I guess maybe the MOU unraveled during that time. But the weakness of oil certainly indicates to me that maybe this deal is gonna stick. Energy itself, by way of XLE energy stocks, have a bearish engulfing pattern here, 1 3/4% drop today, repelled from this descending trend line, and so those could get knocked down. I would not base any oil trades based upon speculation about geopolitical events, though. I still find the whole energy sector not worth bothering with, so I'm not going near it. As I said, it's a welcome bit of red on the screen today in sharp contrast to the past 4 days. A couple of shorts I got that are behaving themselves nicely. ALAB, Astera Labs. This is down almost 10%, having peaked yesterday. Pins, which I think had earnings last night, Pinterest. This is a really cool one. Let's back away. Look at this. Look at that price gap. There's the gap, a substantial gap, and we get nice and close. Look at that. I think that's to the penny, right on the money. So that was the peak yesterday, and then we took a tumble today on that, not quite 9%. Also continue to hold my January Meta puts, and today we opened quite strong, but we did sell off. We're barely up right now, and it's all fine unless we exceed this price gap. But I got into those, I think 2 days ago. A little bit of profit so far on those. So far so good. Tonight is storage night, digital storage night. There's a couple of big storage providers that are doing their earnings. They have been exceptionally strong stocks, And they are as follows. SanDisk is one, SNDK. And this one has a pretty decent topping pattern defined by everything above that horizontal line. This stock just set the world on fire from April of last year to April of this year. Went up, I think, thousands of %. But as it is now, we've had a nice top hammer out, and this line will be worth watching. The other one is WDC, Western Digital, which is not nearly as clean a pattern. And right now it's down 2.7%, but kind of the same idea. Just a sensationally strong stock from April 2025 to this spring. And it's been kind of topping out ever since then. But as you can see, much sloppier pattern with that. So just to wrap up with a couple of the big equity futures here, ES, which not surprisingly looks a lot like the spider. We've got a shooting star up here. We've had an intraday high. And like I say, we could have a big down day, and unless it pierces into that rectangle, it does not change the bullish setup of this market. To do so, we would have to have a failed bullish breakout. So it hasn't happened yet. We're still sky high, and there's plenty of room for relaxation there. And the NQ has been tremendously strong. It has cut through this whole range of overhead supply with weirdly little effort, basically yesterday. We do have a bit of a reversal in our hands at the moment. It is down a little, about 1/3%. Having peaked at this line, there's a lot less overhead supply here than there was down here. So it would not take much to conquer this, but for the moment at least, it seems to be a little out of breath. So I'll leave you with that, bottom of the hour exactly, and I'll see you here tomorrow. Good luck to you. Bye-bye.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools, and place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us. We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
We are back. Final 30 minutes of the trading day here. You're watching Tastylive. This is Last Call. I'm Chris Vecchio. He's Tom Preston, TP. TP, nothing has changed in this market since Liz and I did confirm and send this morning. We are trading at 77.70 or so, as it's felt like for the past 4 hours now.
It's dead. It's so I mean, look, I put on an hour ago. I put on a broken wing butterfly, unbalanced butterfly, in the SPX. My short strike is at 77.30. So if I can get a $9 sell-off in the next 27 minutes, I would greatly appreciate it. If people can get in there and start jumping on top of the SPX to drive it down $9, or excuse me, yeah, $9, I'd appreciate it. So it's the least they could do for me.
They owe it to you, TP. No doubt about it. We had a really odd market kind of move today this morning. I'm sure you caught this too, but when stocks were up near their highs, the VIX was pumping. And then all of a sudden, when stocks started pulling back, the VIX started pulling back in. Is this kind of clear evidence that the market maybe yesterday was being driven by a lot of call buying in the option space?
Yeah, that's basically it. And what I wanted, you and I talked about this yesterday, and I just want to clarify something, is that the VIX looks at prices, not trades. So it's, even though there's a lot of buying, for example, it's the markets, it's the bid-ask prices that the market makers put out that determines the value of the VIX. So even if there wasn't actual call buying, even though there was, even if there was an actual call buying or actual put buying, the increased prices as the market makers expect demand increases the VIX. And that's it just seems, so beyond that though, Chris, and I think this leads exactly into your point. It seems like there are a lot of retail investors or traders who want to, they just are afraid of missing out on what's a huge rally. So they're buying out of the money calls. They're, hey, at least they're using options. But this, I think, is a retail-driven rally.
Well, speaking of retail-driven, a lot of the names at the top of the leaderboard today happen to be some of those semiconductor stocks. AMD is obviously in here after its pullback following its earnings report that we had yesterday, TP. We're back to 483 or so ultimately a 6.7% decline. Definitely off the lows, but still not faring that well. I suppose the stock of the day then would be SanDisk, which is off 3% here. We have earnings here after hours right now, 58.8 IVR, but still a toasty 208% raw volatility on the two DTEs here. This is a big stock, though. This isn't like your typical $100 stock.
And
how do you approach this?
I'm actually up in SanDisk through just by trading in not a huge amount. SanDisk is not one of my big winners for this year so far. I am very, very cautious with it. I'm not trading anything in SanDisk tonight around earnings. That stock can move $500. It's maybe not 500, but it can move a few $100s. And if you look at the expected move for the 2-day option, it takes it all the way down. Oh, geez, I got to add some strikes to my platform here.
It takes it down to 1225, it looks like.
Chris, hang on. I have to add more strike prices so I can see the puts. 1225. So if I just sold that put spread, for example, take a 90-cent credit, okay, go all the way to the call side, which is around 1550, and bought the 1555s. Yeah, okay. 5-point spread, 5-point in between long short strikes. I collect about, well, it used to be $1.09 to $1.80 credit. I mean, I guess I could do that. But I don't think it would have any trouble moving $200 overnight. I'm not going to trade SanDisk tonight. Maybe tomorrow after the number comes out. But a couple of things. Here's the trades I actually did.
Wait, just take a step back then and ruminate on that for a quick second here.
Yeah, go ahead.
TV, we've seen this happen so many times in the past 2 weeks, where one of these AI infrastructure names moves well beyond the expected move.
Oh, yeah. Right.
So
right.
I mean,
Amazon, Microsoft, Meta, all of them.
Palantir, right, earlier this week.
You.
So I would not discount the possibility. Caterpillar downstream, it initially came out of the gate, 10, 11% higher? It didn't settle that high for the day.
Yep.
But it still came out of the gate 10, 11% higher. So seeing this move beyond either of its expected moves, to me, seems like the easy thing to bet right now.
Yeah, well, I mean, if you wanted to flip that around and turn that sell into a buy, where you're just buying far out of the money verticals, betting on a huge move either way, you'd spend about $190, $200 to do that. I don't love that trade. I don't, but that's something you could certainly do. And yeah, you will probably lose money on that trade. But if SanDisk surprises everybody, and like you said, Chris, it delivers an outlier move beyond the expected move, yeah, that could be a good trade.
TP, what have you been trading today in this market where it's been really flat, and the volumes today, 1.2 is not nothing, but it's still soft.
I closed my SMR short put. I was short the 8.5 put with a couple of days expiration. SMR, I think they come out tonight with earnings. I took that off for a 50-cent profit. I sold a put in Love. I sold the 20, that has earnings coming out in August, but I sold it in the August expiration with 23 days. I sold the 45 put for 60 cents. I figured if I've been wrong on oil for so long, Chris, betting that it's going to bounce. No, it doesn't. It goes right through my short puts. It kills me. So Love's options are, pretty liquid. Maybe the most liquid, and I hesitate to say most, but one of the more liquid ones of the airline stocks. Even Jets, the ETF that tracks airline stocks, the options aren't great. So I just went to Love. I've traded Love a lot. So what else did I do? I closed. I sold an Iron Condor in Oxy, OXY.
They have earnings today too.
So today, yeah. So I sold an Iron Condor in there. I sold the 49, 51, 58, 60 with 9 days. 9 days.
Oh, 9 days, sorry.
Yeah, that's okay. You just extend it out there. Where's my Oxy? Yeah, the 49, 51 puts and the 58, 60 calls. That's exactly right. I did that for 53 cents. So that, we'll see how it goes. I mean, it's an oil company, so it has exposure to the price of oil and equities. So, who knows what's going to happen. I'm just betting that's going to be range bound for the next few days. Sold a put spread in NVIDIA, mainly as a contrarian bet on space. No, actually, it's not contrarian bet. It's just a bet on SpaceX. SpaceX got crushed today. I just cannot make a buck in SpaceX, but they did come out and say they would buy NVIDIA chips to run its stuff, SpaceX's stuff. So I just sold a put spread in NVIDIA. Sold the 7 days, the August, expiring on August 12th, next week. Sold the 215, 217 half put spread for 85 cents. And I did a trade in Uber, sold an Iron Condor in Uber. Uber got crushed today. Uber reported this morning, I think. Got crushed, and I just think, maybe it'll just kind of noodle around for the next couple of days. I told you about Disney. I sold a 2-day Iron Condor.
Trying to find some life here.
Yeah, it's it rallied up. Apparently, it had good numbers last night or this morning, and then it's been coming back a little bit. I sold with 2 days. Again, the 98 100 put spread. So I bought the 98 puts, sold the 100 puts, sold the 104 calls, bought the 106 calls. Do I know anything about Disney? Nope. But it's just a trade. I took it 55 cents of credit for that, a little less than I like to get for that, Chris. But, hey, earnings are out. Volatility came in a little bit. and I'll take a 55-cent credit just as a bet that Disney isn't going to go anywhere fast. And I took some trades off, bought back a put spread in Micron, rolled up some short put spreads in gold because I had an Iron Condor GLD.
Yeah.
And was getting smacked on my calls. Those are in the money now. So I've been rolling up the put side.
Gold here is turning out with a fantastic day. 43.13 right now. Open outcry close is 43.05, but that's still marked for 3.88% higher here.
Yeah.
Right now, really resilient market, TP, and I've been sitting long for a few weeks now. I think now this is week 2 or 3 in a long position, just waiting. This whole beach ball underwater. How come all the macro variables that usually weigh on it aren't anymore? So, right, oil keeps going up and yields keep going up and gold is just hanging out. That's not usual. So either it's going to break down or break out higher. And I'm a little bit of a gold bug over the past year plus. So
why not? And I just did an Iron Condor, so I'm just defending that.
Yeah.
But yeah, what's surprising is, and I know you talked to the woman at what was it about did the segment at noon or 12:30 talking.
Katie Stockton over at Fair Lead Strategies.
Talking about the difference between gold and Bitcoin, for example. Gold is rallying. Bitcoin really hasn't done anything today. And the only thing I did in Bitcoin was, let me go to my prediction markets. Oops. Sorry. Bitcoin, yeah. So I made a whopping total of $58 trading prediction markets in Bitcoin. So just Bitcoin above 64,599 and above 64,199. That's it.
Yeah, no, I don't have anything going on in crypto myself right now, but it's certainly, Bitcoin up, you have gold up. You're getting actually a little bit of a bounce in some of these anti-dollar sort of things right now. The dollar's not having a great day, basically off of against everything except for the euro right now. With respect to what's happening in gold and silver, TP, I mean, I see lots of nice little things. I see lots of former swing highs in the downtrend being broken to the upside here along the way. So the market's chewing through supply. You see the same thing in silver. You're seeing something similar in copper, which copper here, by the way, this was another one of those beach ball things. It's right back to its all-time highs in this market. Not a lot of people like to trade copper or futures, so to speak, because HG is a big product and it's not the most liquid thing in the world. But a lot of folks are looking at FCX. TP, you brought up FCX the last time that we spoke about copper here.
Yeah.
And you're seeing this now move up to the top set of its recent trading range. So the metals and everything metals related isn't working. But you mentioned Oxy earlier. Oxy's an oil E&P company, right? This is not a refiner. There has been a clear difference between what's been making money and what's not making money. And quite frankly, a lot of these E&P companies, they haven't been able to facilitate, transport their product, get it out of the ground, and they view geopolitical events as temporary issues, not permanent reshapings. So they don't really make the investments. They're not drilling more wells as a result of the Iran war. They're just, biding their time while they can do it. Oxy looks a lot like CL, which looks a lot like, Chevron. We can go to CVX. Right. Or we could go to XLE, broadly speaking here. It does not look like one of the refiners that would be in crack, like a PSX or an MPC. So when I look at Oxy, I have this working here. Hopefully I can get filled. It's going to be something small, 55, 56, short call spread right now. It's only, I have it sitting for 30 cents a credit. Maybe we get filled for 27. Okay, so we're in. We'll remove the other one here, cancel that order. But either way, TP, the way that this market has traded, we haven't seen much substantial upside benefit in some of these E&P names. So I'm not really a short call spread kind of guy, but it fits.
But and the other point is too, Chris, is like you said at the start of this, talking about SanDisk, that yes, we've seen some huge moves these outlier moves because of earnings, but also just contrarian moves. I don't know what number matters anymore. You could give me the report now for any one of these stocks coming out tonight, and I couldn't tell you whether the stock's going to go up or down. I couldn't do that. You know, is it their actual earnings, their revenues, their projections for growth, blah blah blah, the spending that they're doing on AI, yada yada yada. I have no idea. So even if Oxy comes out with awesome numbers or horrible numbers, I'm just betting neutral on it for a couple of days.
TP, there's some things that popped on my screen today that, you know, kind of fit the criteria for maybe we're in a steady uptrend. And I didn't get filled initially on J&J earlier, so I took it off, but it's continuing to move up. It fell into that little 1 month moving average, 50-day moving average zone, which played before here in middle of July and got a bounce and pulled back in, but we still haven't cleared out those lows. So I'm looking around like 250 here, 240.
Yeah.
There's only 10-point wide strikes, though, which is kind of upsetting at the 44 days to expiration. If you go in at 37, you're not seeing a lot of volume or open interest. You have to go to 16 days, and okay, maybe there's something there, but now I'm not able to trade necessarily around the level that I want to trade at.
So, yeah, I'm already short. I put this on 2 weeks ago. I short in J&J. I'm short the 247.5, 250 put spread. So I bought the 247.5, sold the 250 within the six. They now have 16 days.
I'm joining you in that exact expiration for the same exact strikes, 250.
Yeah. So what did you get for that, Chris?
I pulled in, I think
58 cents. Okay. Yeah, that's fine. That's fine. It's a little cheap, but that's okay. Hey, I break that rule all the time myself. And so I collected 85 cents mainly because it was 2 weeks ago. So that's a great illustration, Chris, that 2 weeks of premium, that was a roughly, a 30-day option, 31-day option when I put it on. It went from 85 down to 58. So about 27 cents.
27 cents.
That's decay in action.
You know, UNH is another one of these charts that kind of fits the criteria today. In fact, it's just back above its 1 week, but it's still below its 1 month, and it's bouncing from its 50. So what are we looking at here at 16 days? We can play underneath today's low. Do we want to call today's low? 397 and 80, so 397 and a half, 395, getting 59 cents of credit there. Not a ton, but something to dabble with. The criteria is met. TP,
Which one is it, Chris? The 97, 95, 97?
95, 97 and a half. Just to dip the toe in, wet the beak.
I'm going to pull that up to... I'm going to do the 402 half 405 with 16 days. I'm going to get that 88 cent credit. I don't think I'm going to get filled. Watch me get filled.
We shall see. Yeah, TP. I mean, there's some names that I'm trying to pick at here, but this list that I had a few weeks back that was like, oh, there are 15, 20 names on this that are in pullbacks, but in still broader uptrends. This list today right now, just to show how we're no longer in pullback mode, we're in just momentum mode right now. Eli Lilly, UNH, AbbVie, Apple, and Chevron. 5 companies. Oh, sorry. Actually, as of just a moment ago, Novartis just popped onto the screener here. So I suppose that's something we could take a look at too. Novartis looks like it's trying to round out to May. I was in this earlier, got bumped out. I like a longer term view on this, but the 140, 145, it's a little light right now at 97 cents. So I'm hoping to get a little bit more there. But this is also this has been on and off my radar for the past few weeks. And it's rounding up, right? If you're short put spreads, TP, this kind of action where it's not really jumping higher, but it's certainly not going lower, that can work.
Yeah, that's ideal. If they suck volatility out and time passes, that works. So, Chris, I want to take a look at NDX versus the S&Ps. So the NASDAQ 100. I did a quick test today. This was what time is it now? 2:51, about half an hour ago. Of the 100 stocks in the NASDAQ 100, only 37 of them were up. I remember yesterday about 68%, 68 of them were up. So today, 37 are up. Compare that to the S&P 500, where 234 stocks are up. So not quite half, but a lot closer than the NASDAQ. And that's just showing that the NASDAQ is down 0.48%, down $142. And the S&Ps, where are you? SPX. S&Ps are up $1.83 or $1.53. up 0.02, basically unchanged.
Yeah, the breadth has been holding up. It's been a lot of money sloshing around in the market. I would point to something like the Russell, for example, which, it another time in recent months pulled back to its 50, finds a bounce, cycles into a new high. Excuse me. When the small caps are holding up TP, when the equal weights are holding up, even on a day like today where you're getting kind of chop and grind and just window dressing, if you will,
right.
There's no substantial dislocation that's occurred right now in these markets, even though we have come off the highs.
No, I don't see it. And just kind of looking at the heat maps right now in the S&P 500, the big name in the S&Ps is NVIDIA. That is the biggest, greenest blob on the heat map. A lot of just, Google's a big red one. AMD is a big red one.
Do you see why Google lost all this money today?
Yeah, because what? Because a couple of AI people quit or something like that? Is that what it was?
One guy.
Yeah, one guy. All right. See, I don't buy that. It's okay, whatever. The way I think it works, Chris, and there are lots of examples, lots of counter examples to this, but I think what it is, stock drops, it just drops. And they go scrambling around looking for a reason that would be bearish on the stock. Oh, geez, this top AI guy quit. The stock's down. Oh, give me a break. Like there are 1,000 people at Google that probably can't do the same job. Okay, I don't buy that. Did I get a trade off? And I have so many trades today. Do I have a position in Google? I do. So I sold with 2 days. And it's looking ugly. I'll tell you right now, it is looking ugly. I sold the 357.5, 360 put spread with 2 days to go. I just
what are
love
those strikes again?
2-day options. The strikes, I bought the 357.5 and sold the 360 puts.
Okay.
The 60, that's a call. So puts right there. Right there. You're getting $1.13. I sold mine for 85 cents. So you can get it way better now. If you drag that down to the 55, 57, drag it down some strikes, it gets you the same price. So I sold that put spread, then the market dropped. So
Hey, that happens sometime. I'm going to take a little bit of a longer view here, TP, because this is, I'm with you. I find it a little funny that this is how the market's responding. 340 seems like a nice number for me to operate around. So 340, 335, 325 actually. $2.05 on a credit here, but it's Google after all. And I have faith in what they're trying to accomplish there, despite their Google search machine being an utter mess right now.
Well,
for 5 cents, I can put on a Super Bowl here, TP.
Yeah, I mean, for 5 cent debit, sure. Yeah, why not? I mean, I would like those things for credits, but 5 cent debit, that's not bad. The point is, if you're generally bullish on the U.S. economy, these big stocks like Google or NVIDIA or even AMD or Apple or Amazon or any one of these stocks, they're going to go up over time. And even if, the 44-day trade doesn't work out for Chris, and I'm speaking for Chris, roll it out to a further expiration. Just keep at it. And yeah, it doesn't mean that you're going to make money on the trade, but it's just if you have a general bullishness for these types of names, yeah, these are the trades to do. Sell put spreads, do Super Bowls, whatever. You do defined risk trades and keep at it.
All of that is good advice. However, in the MAGS ETF at 16 days, I can buy the 71 call right now for just 60 cents.
Yeah, I mean, the problem with Chris
closing only right now.
Yeah, that's fine. I mean, the closing, and the point is you're paying $3 a theta on that. I mean, to each his own, right? But
more than willing.
I like to keep time on my side. I like positive theta. My portfolio, can I see my theta? It's somewhere on there. My eyes aren't any good anymore. But that's where my P&L comes from. Not being right on stocks.
TP, we have just over 2 minutes left to go in the trading day here. Best performing sector ETF on my monitor today is going to be GDX, which if you had that lotto ticket punched, 7.5% higher right now. GDXJ likewise is up in the same territory, about 7.5% higher as well. And I mean, line drawn, that looks like a pretty clean break from the way I sit. TP, some of the home builders here have started to bounce back recently as rates have come in at the long end of the curve. What do you make of this move higher here? And dare I say, the last time that we saw the ZB go back to its 1 month average here on July 29th, I tried getting filled on a long put spread, and I didn't. So now that we're back there today, what should we be doing? We get a second bite of this apple?
I did. So I bought a put spread in, where is it? IYR. So I bought the 105, 106 put spread. It now has 16 days. That was just a long vertical because I couldn't get any decent credits for selling stuff in there. I'm just bearish on home builders. I think interest rates is going to make it hard for people to buy houses. You have exposure to the real estate market, Chris, and so I just think it's harder. I'm bearish on this stuff. ITB, I don't see a lot of trading in there, but if you wanted to get short ZB here, I would be with you. So I would go just the regulars. What do I get for the 11-12s? Yeah.
I'm liking this, TP. I think, we're if we're going to bounce away from resistance, as one might do, then some convexity wouldn't hurt. I like the 109, 108s here. You're paying 14 on that debit there, but I'm more than okay with that. I know the market's probably going to be a little bit thinner here going into the close, and maybe it doesn't get filled right now, but tomorrow, or at least at some portion of the day, there was a bounce back in bonds. They collapsed last week. Oil's near cycle lows, closer than the highs. If it's going to be range-bound TP, we have another weekend coming up around the corner. Who's to say that oil doesn't want to have some of its own time in the sun? But ES today, it's going to finish down 18 points here. NASDAQ gives some up 0.8%, lower. We have some wonderful, and there's that ZB trade. We have some wonderfully important earnings coming up here after hours. Western Digital, SanDisk, eBay, TP. We didn't talk eBay. How could we forget eBay? But we're going to have to wait until overtime, because overtime's coming up next. Gus Downing in, TP out. We'll see everyone after the break.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Stocks were up, but then they fizzle all day long. It's still Wednesday, August 5th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's Gus Downing in Chicago. We're here to take you through the next 30 minutes, or 28, as we wind down this trading day here. Gus, the market was up on its highs, all-time highs, for the S&P at least, when the session started. But the market gave some back over the course of the day. We did have this John Dean fellow leaving Google, which apparently is worth about $200 million in market cap for a single employee exiting the company. Not the first or second or third time that a single employee leaving Google has caused the company to lose 3, 4, 5% in a day, but here we are. It happened again. Broadly speaking, though, Gus, volatility is in as stocks come off today. So more evidence that maybe some call buying yesterday was driving yesterday's market, with vol expanding alongside stocks moving to new highs. But here we are, SanDisk earnings, Western Digital, eBay, AppLovin. There's a whole bunch of them that are coming out after hours. Let's just start there. I mean, how did this market treat you today, and what are you thinking about for some of these earnings as we look at a NASDAQ nearing a 1% loss in the after hour?
Yeah, treating me pretty well today. I did rotate out of my neutral position on SPX, which I'm sure will come right back over the next 2 weeks now and finish exactly where I would have needed it. But no, I did go ahead and liquidate that as the upside momentum seems to sustain. And I feel this was kind of the day that I expected today. It's tough to put in another decisive leg higher when you're already this elevated. I don't necessarily think that this slight down day means that the run is over by any stretch. I think it's just natural for the market to want to take a breath here at the top. Pleased with the short dated shorts that I put on yesterday, particularly the one in Palantir, as that sunk down nicely for me. Feel like I got some real solid cushion to take towards Friday.
Can I give us some earnings here?
Absolutely,
Can I give us some earnings here? Western Digital's out 356 versus 330. Revs you beat as well, 3.747 billion versus 3.7. So not that significant of a beat. EPS up 109%, revs up 44%. I haven't seen guidance yet, but the market clearly disgusted with these earnings. Anything else meaningful here? Axon, which they make those, I think, tasers and cameras for police equipment. They came in at $1.88 versus $1.84. They also beat on revs 904.4 million versus 876.5 million. EPS is still down, but they are guiding a little bit higher here. And then, have we seen SanDisk yet? Which I have not seen cross my screen. Southbound, Merkle Libre, Symbotic. No. Okay, so that's where we stand right now. Western Digital 470 here. After hours, no good for me, Mr. Gus, with my 500, 510 short put spread.
Yeah, that is no good at all. This is I'm intrigued by this. I don't have any action on in either of these memory names going off today, but SanDisk and Western Digital both. I would have had slight long bias had you put a gun to my head and made me trade. I would have chosen to get long. This feels like after the rundown that we've seen, this feels like the time where they could surprise. We know these memory companies certainly have the propensity and the demand schedules to surprise from time to time. So I am surprised to see Western Digital just dying here after the report, and interested to see how SanDisk comes in. We rarely see much convergence or divergence rather between these memory companies, so I would expect SanDisk to be relatively aligned with Western Digital and perhaps perform the same, but you never know.
We were going into today's earnings for Western Digital with a $95 expected move. Roughly speaking, we could head down to about $430, $435 or so. 2 days to expiration out now. It looks like $78 priced in, so still in that $450 area. Technically, we are still working on an inside move to relative to where we were priced, Gus. So all is not lost, and we've seen how these things have moved after hours. So if it drops another $50 or bounces right back, I don't think anyone should be shocked on their bingo card here. I'm still waiting to see those SanDisk earnings, though. I have yet to see them pop across my screen. We do have AppLovin, which this is going to be a fun report. And you know what? SanDisk just came out here, too. So we're going to go to that first, where SanDisk is likewise down. They have $39.25 in EPS, versus $34.52 expected. Gus, their EPS is up 13,434% year over year. Pretty good. Revenues $8.965 billion versus $8.39 billion. That's up 372% year over year. We were at a close of 1351. We're down to 1226 right now in this market. Taking a look at the expected move for today, it was down to about 1150 or so. So thus far, staying in there, hanging in there right now. But the NASDAQ net effect now down to session lows, basically 1.06% here after hours.
Yeah, I'm looking to take a stab at SanDisk if we retest this 1,000 level. Especially after this move down today, I'm gonna do it. I'm ready to get hurt again. Oh God, tell me about AppLovin. What do we got going here?
AppLovin is 376 versus 375 on their EPS. Revenues miss 1.924 billion versus 1.94 billion expected. So while EPS and revenues are up, share prices are in here at 325. Gus, I covered this in a signal versus noise video ahead of today's earnings report because this stock is crazy. Just for comparison here, let me just pull up the exact number that I had written down earlier because it kind of just draws the underscore underneath it. Where did you go, of course? Just by float comparison wise, taking a look at AMD versus AppLovin, for example. AMD has 1.63 billion shares available in the market. AppLovin is closer to... I know this isn't great TV, so you're going to have to bear with me here. AppLovin has 306 million shares outstanding against what was a $133 billion market cap prior to today's 20% loss. But that, as I explained in the video, it's that small float and that shrinking float. The float has shrunk by about 21.4% over the past year or so. They've bought back, management's bought back 76.6 million shares. When you have a company with a shrinking float, with this kind of stock price, it just caters to a wild swing. So some of these recent earnings reports here, I didn't have a trade on this. I have no desire to trade something where its history is frequently moving outside the expected move. It seems like a total roll of dice. If you were trading to the expected move, by the way, for the 2 days to expiration, that carried you down to, where are we right now? It was $106 in either direction. Gus, you know where we are?
Be 106.
Starting to get beyond that. We're getting beyond that expected move. We're getting outside that expected move. And so previous earnings reports here, Q1 26, it was up 6.4%, but then was down 3.3% after week. Q4 25, stock dropped 19.7% the next day and was still down 11.5% a week later. But you can go back through history here. Q2 25, up 12% the next day. Q1 25, up 12% the next day. Q4, up 24% the next day. Q3 24, up 46% the next day. So I just wanted to stay away from this thing because it just has had the tendency to blow out, and here you are sitting down $110 from where we closed.
Vanity. Yeah, AppLovin certainly, I think, checks the boxes for a company that I could see getting completely squeezed out in the age of AI, honestly, as AI improves and as social media platforms are able to do their own advertising matchmaking, so to speak. It feels like AppLovin could run out of room in the market there if they don't really, keep their finger on the pulse and keep their own AI integration strong.
Unfortunately, however, it does mean for the folks and the trades that we were covering in the Signal versus Noise video, those August 21st 410 calls that were purchased for $3.37 million, Gus, I don't know if those are going to hit.
It would take something. It would take something serious at this point.
Not every trade works, as we have seen here from AMD today. It's down after hours. What a bummer. I was in the short Iron Condor in this yesterday, and I decided to get out of the short call spread side, of course, because it went from, when you're looking at something that's like $5 wide, you're in at $2 and change on credit, and it shrinks to 30 cents. What are you doing there? You're at 85% max profit. Just get out of Dodge with 2 days to go. Your gamer risk is so high. Liz pointed out today that given the market pricing, I could also go in there and sell another call spread in here so that I could effectively prevent myself from bearing any more downside. So technically, I am still back into an Iron Condor position now, 475, 480 with a 495, 497 and a half call spread on the upside. I'm not content with the price action here after hours, of course, but either way, I feel locked in because this has drifted lower over the course of the day, closer to that 480 short strike. And that means this short call spread side is actually making a little bit of money here along the way. So trying to clean up a position, not that was broken or messy, because I did make money on one of the legs, but seeing if I can extract a little bit more out with a few more days to go.
Yeah, that's the power of options. So many abilities so much ability to monetize every little thing. I like it. And yeah, it's a way to try to squeeze a little bit more out of a half winner, turn it into a 3/4 winner.
Right, exactly. There's more work that can be done. There's always more work that can be done.
What is this?
Hey, a little bit. a little bit more earnings here. A few of the fun names now are out. eBay, $1.60 versus $1.51 expected. So it beats by 6%. Revs also beat by 4%. Stock here closes at 111.14. It's currently 110 after hours. We have Zillow. Have you checked yours estimate lately? I know I have, and it's part of the reason why I'm screaming at everyone around me in my local personal life that we need to build more housing around here. I don't know how people in their 30s who are forming families can afford to buy a starter home for $1.5 million. It's absolutely outrageous.
Yeah, I don't know if I'll ever buy a house, but that's kind of beside the point. Continue.
Yeah, that's not right. 52 cents. When I'm saying that's not right, as in like you're wrong, as in like that's not a good situation.
Yeah, morally not right. I'd follow.
52 cents versus 45 cents expected. We closed here at 36.08. We're down to 35. The expected move here, this is looking a little interesting. The expected move is sitting out at the 16 days to expiration. So if you were trading the expected move here, Gus, even though it's down, you're maybe doing okay with this right now because there's no 2-day strike. There's no 9-day strike. There's only a 16-day strike. And then finally, DoorDash, which I will say I just do not use those anymore because I'm not paying a 20% premium to save myself a 3-minute trip to the grocery store. They missed 46 cents versus 47 expected. So EPS down 29% year over year. Share prices here closed at 207. We're down to 197 right now. The 2-day expected move brought us down to about 187.5. So we're still inside of it right now as you make our way through this. But at NASDAQ here, off by 0.8%. The S&P off by less than 0.1%. Western Digital is bouncing back a little bit, 478, and SanDisk here has bounced back to 13.15, so a cool $120 off the low there, Mr. Gus.
Yeah. Quick recovery. I don't know what kind of guidance they're issuing this. And this was sort of my thesis for being long SanDisk is the guidance, because that's where I think they could really surprise. If they come out and say we have 2x the backlog that you expect, that would do very good things for them. And the demand is just incredible and hard to quantify in this sector right now.
You don't just get a 10% bounce here after hours. Saying it's $120 off the low. It hit 1,200. It's up $120 off the low. That's a 10% bounce in the past 3 minutes, 5 minutes. Okay. SanDisk, their revenue. You say the guidance here. Let's find that guidance. They're looking at guidance of 10.3 to 10.8 billion versus 10.47 billion expected. And their Q1 adjusted EPS of $44 to $46 a share versus the street consensus of $43.01. So their guidance, right? The street estimate is within their guidance, but within it's in the lower part of the range, so that's good. The EPS range is a little bit higher, so okay. Now that the guidance is out, it makes sense that the share price has bounced back. It's going to be like this for a lot of these companies. Outside the expected move, now back in it. It's a slinky, man. I didn't play in SanDisk today. I don't have the stomach for it.
Yeah,
not in the mood today.
Yeah, I certainly didn't either. I joke on air all the time, but it's just true. I am a rug for SanDisk. I mean, whatever I think will happen always goes the opposite way on SanDisk, and that extends right to me thinking that it would move up off earnings today. We're erasing some of those losses, but I don't know about up at the open tomorrow. So I can't officially say I'm 0 for 5 on my SanDisk trades. I didn't back this one with any conviction, but I am 0 for 4 on financial SanDisk trades and 0 for 1 on SanDisk predictions. No skin in the game.
You didn't lose any money. That's what matters.
It's true.
Okay, so then what's the plan for the second half of the week here, Gus? I'm looking through the earnings calendar right now on my screen. It does start to wind down a little bit. We have ConocoPhillips tomorrow. That's in the morning.
I have a neutral. I sold an Iron Condor and ConocoPhillips. You can tell me what you think about this line of logic, but my logic is that I think oil is like the most efficient sector we possibly have in the market right now. Everything, we price in everything immediately right away. We already had a couple other petroleum companies report earnings. All that's already accurately priced into Conoco. So my thesis is basically just that I don't know that the market in this efficient of a sector could be more than 3% wrong, which is essentially the cushion I'm giving myself is 3% in either direction. So yeah, I'm attacking this one with neutrality, but it is a boring one.
I'm waiting to see those Occidental earnings come out, which they have not yet. If you see them, let me know. Put on a short call spread here. going into the earnings report. Just taking a look at some of these charts, Gus, there's a real clear line in the sand between what companies are able to capture the additional surplus, so to speak, created by the Iran war within the oil markets versus those that are kind of just along for the ride. I go back to the refiners, for example. The refiners are doing a lot better than the folks who are charged with taking the stuff out of the ground, the E&P, the oil field service company. So, you go to like a Chevron, for example, you go to an Occidental, for example, those charts look a lot more similar than, say, like, crack, the ETF. Or we could go to Marathon Petroleum, which looks a lot like crack, or PSX, which, as you can imagine, looks a lot like crack. Those other ones look more like XLE. And so I went in here at the short call spread because these companies they're not taking advantage of this environment. They can't permanently deploy capital to open up new rigs if oil isn't going to stay at $100 a barrel guaranteed. And it's not. And it's already back into the 70s. So their fiscal discipline is obviously good for shareholders because they're not throwing good money after bad. But it also means that they can't promise that the margins and revenues that they've seen in recent months are going to expand in perpetuity into the future. So I like the fundamental breakdown. The technicals don't look great to me, and there was enough vig in there to warrant maybe looking short Oxy here a touch.
Yeah, I certainly see that line of logic. I mean, the guidance can't be, I don't know, I don't want to say can't be good, but it's certainly, there's not a smart petroleum company in the world that is going to guide that they can sustain the revenue they just did in this previous quarter into future quarters. It's obviously a very cyclical game. But at the same time, obviously, they've all done pretty well this previous quarter. And I guess here we are chugging up a little bit on Oxy. We got numbers here?
We do. I mean, they beat nice. $1.06 versus 59 cents. That's what companies do. Whether or not they're able to sustain that moving forward is another story here. Will my short call spread be tested here, 55, 56? I don't know. Doesn't look like it, which is fine. Going to get rid of it tomorrow first thing in the morning. No intention of keeping this. No reason to keep this. So yeah, I have 240 versus 185 expected, 8.327 versus 725 in those revenues. EPS up 515% year over year. Very nice. Revs up 29%. But let's see the guidance when it comes out. Show me the guidance. I feel like Christian Bale and
this is how this is
Psycho.
kind of how this would happen as well. I think this might be emblematic of what we'll see with Conoco as well. But yeah, it's excitement about the big numbers that just went up this quarter. But what can they say in the guidance to keep that elevation or inject more excitement? I don't know that there's much. I feel that the guidance has to be something like, we had a great quarter. Tensions in Iran seem to be easing. We can't be sure it'll be maybe big ranges for revenue moving forward. I pity the accountant somewhere in Occidental Petroleum's bowels right now trying to figure out how to issue proper guidance for the next quarter amid the tensions that we're seeing right now.
Being an oil company would be very difficult in this environment. 54.59 here, so Western Digital nor Oxy may be working out today. Some things work out, some things don't. WDC down at 466 still on the chart, and SanDisk, that is at 1280, and I'd expect that to stay whippy here for the next little bit. And the earnings are basically, I think we're basically done here for today in terms of the big ones that are expected to come out. You mentioned that we have ConocoPhillips tomorrow. There's Airbnb tomorrow after hours. Some of these in the morning are really not even worth discussing. I mean, Warner Brothers, if you're in it, if you're in Datadog, if you're in Chegg, Constellation Energy, you have some things to contend with. But Friday, likewise, Vistra, Take-Two Interactive. I have something going on in Take-Two Interactive. I suppose that applies to me. Where are we at here? 23 days to go. The short 220, 225 put spread. I got that back when we dipped here in the mid portion of July. I don't know. What do you think about Take-Two? Are we gonna get Grand Theft Auto 6 before I die?
Well, that's actually exactly what I was about to bring up. I really don't hate Take-Two as a longer term play and into the end of the year, or potentially even just going for some super long dated covered calls and see if you can't get that GTA excitement. Because I'll tell you what, sometimes it really can be that simple with some of these companies. I know I had a very successful trade last year in P-Sky Paramount when they acquired the UFC because they got the rights to the UFC. They're going to take away pay-per-view. It's this exciting thing. And TKO Group went soaring in the minutes after the announcement. And for some reason, P-Sky lagged behind and then all of a sudden went soaring 2 days later. But and the revenue, it's come back down now. The revenue hasn't even really shown itself yet. but you do get those initial run-ups. So sometimes, yeah, just the GTA 6 hype might be enough to inject some energy into Take-Two. I hate 2K, though, which they also have their hands on, so it's give and take.
Yeah, GTA comes out on November 19th.
Yeah, they've been stuck on that date for a little while now, too. I have growing confidence that's not going to move.
You know, I think I want like a Red Dead Redemption 3 before I want a GTA 6. Red Dead
really?
Redemption 2 was like a hell of a game.
Red Dead is excellent, but I'm certainly more excited for GTA. Just the online elements of GTA are what make it so great to me. The story of Red Dead's definitely better.
Oh God, no! See, that never did it for me. You know why? Because my work hours, Gus, when all those games were out and all the online modes came out, I was still working that 4 a.m. to noon shift, and so when I would play. Like my then girlfriend, now wife, is at work, so it's the middle of the day. I exercise, I get a bite to eat. I'm gonna go home and play video games. I'm stuck with all those kids, 2-3 o'clock in the afternoon that are getting out of school.
Yeah.
It's not like adults that I'm playing with online. It's like I don't want to do this. The
kids are better than you. I say this all the time. I play a lot of Rocket League, and that's the thing. Yeah, you can't. If you see if you're up against somebody with 2012 in their username in Rocket League, pack your bags, buddy. Go ahead and forfeit right now. You're cooked. You gotta play at midnight on weekdays. You gotta get past the bedtime before you start dealing with something you can actually beat.
Yeah, who's this Chris 1989 guy? Who's this unk? Get out of here. All right. So, you mentioned some of these names like Warner Brothers coming up. This thing has been pinned. It's kind of been stuck in a little bit of a hell. Maybe that's the signal here, but the market knows this. As long as it's legislation, or rather I should say its merger is being held up at the moment, then the stock really has nothing to do. But earnings are coming out in 2 days. Is there volatility? Would you even play something like this? Because I have all available strikes listed here. If I just wanted to go to a neat little 6, market makers are not giving you anything beyond 24.5 or 27 right now.
Yeah, and that
you could go further down, but like this, where do you see I just want to bring up the delta as a quick point here. Once you go out to $25, so that's less than $1 away, less than 4%, 8 delta.
Yeah, I mean that sounds about right to me. And I mean, why would Warner Brothers do anything? They've been caught in the middle of two divorced parents this entire time, arguing over who gets custody of Warner Brothers. But when push comes to shove, as it pertains to Warner Brothers specifically, all we know is that somebody's going to acquire them, and the bids are at very similar prices. Paramount's bid is a little bit better, and obviously they're the leading contender at this time. They had to give the big payout to Netflix to get them out of there. But I mean, we're pretty sure that this thing gets acquired at the very least. It's just a matter of who. What reason would there be for Warner Brothers to make any massive swings? I think everybody's just going to have their ears open more for any acquisition news in the earnings report tomorrow than the actual numbers.
TP was right. He said that multiple Google employees laid off today. I didn't see that. So it was Jeff Dean and then Demis Hassabis also stepped down as DeepMind CEO. Wow, 2 employees left.
It's got to feel so good to leave a company and see their valuation tank this much. It's got to be a pat on the back. I say the inverse as well.
But the day of. The day of.
It's true. It's true. Also, I mean, I guess you probably got a fair amount of Google stock. I'm sure you don't really want this to happen. But I always do think it'd be the worst feeling in the world to be a CEO that departs a company and then shares go up, which we do see happen from time to time. It's like, damn, it really was me.
Yeah, really. The market's like, thank God this schmuck's out of here.
Yes, exactly.
Like, this guy has not delivered shareholder returns. Yeah, I mean, listen, if Google fell like 5% next week or in a month, and like Jeff Dean was walking around being like, "See, it fell because of me," be like, "What are you talking about? Yeah. Your announcement was public. Like on August 5th. No, but yeah, this is not the first time this has happened with Google, though. They've lost a few key employees, and the stock is very, very, very sensitive to it. It responds immediately the day of. Gus, I don't believe that any single person is that important.
Oh, no.
And Google's a great company, so I put on a Super Bowl after this fall today, 325, 335, short put spread, 390, 400, long call spread side. What else is there to say?
Yeah, I love it.
I'll buy that dip all day long.
Absolutely. I'm right there with you, and I might look to get long off the open tomorrow. But yeah, it's just anybody, especially when we're not talking about C-suite executives. There's many great minds. Google has more hiring pool than everybody in the world, not named NVIDIA. There's no reason that they're not going to be able to fill these positions. People who are just as capable, and they may poach them from other companies who could look to short as well. But yeah, I think Google lands on their feet just fine. This has to be.
Frank says in all caps, not all caps, the word has is lowercase, but everything else is capitalized. Goog has 240 billion in cash, which I think gets the point across. I'm just curious as why only one word in there was not capitalized, Frank. Please let me know. That, for some reason, that really bothers me. I got to get that out of my system. Gus.
Well, you should take $3,000 of those dollars and come over here for a 3% match. Go on, I'm sorry.
Oh, no, that's good. Top tickers today as we wind down the session. AMD, top of the board. SPY, SanDisk, SpaceX, NVIDIA, Micron, Triple Q's, DTE Energy has been showing up in lots of different places recently. I'm not sure if this is something you trade, but you have a lot of Alphabet, Google, and Goog, Western Digital, Microsoft, Palantir, Apple, Amazon. Those are your top 15 tickers that have been upvoted on Reddit over the past 24 hours. Any of those names jump out to you as like, oh, why are people talking about this? And maybe I already did that with DTE.
I mean, yeah, honestly, no. DTE is kind of the only one that would really jump out on that list. I mean, it's everything else is Max 7 plus Palantir, which obviously is a hot topic right now. Yeah, I don't know. Apple in an interesting spot here. I mean, they were at 5 trillion. I mean, just a week ago, and all of a sudden they're back down at 4.5. Google has passed them again in terms of valuation. If I have been eyeing this to kind of decide whether I think this gap is going to get filled to the upside. I certainly think it's a real possibility, but I need to see a little bit more momentum before I'm inclined to back that with some cash.
Interesting. Apple looks really interesting here. Really interesting. Does the market really think people aren't going to buy smartphones? How else are they going to get their endorphins and their dopamine?
Yeah. My screen time would kill a Victorian child.
I saw my screen time on Sunday morning last week. I'm usually like 14 hours, 15 hours for whatever my phone's doing, because I have stuff playing, whatever. Last week I was at 8 hours of screen time per day on average.
Nice.
What? Am I becoming human again? No, I don't know.
Well, good.
I don't know. I guess I just wasn't using my phone, focused on the market, focused on my kids. Like, that's, I think, a win.
Yeah, I agree. You should. The children obviously take priority. As a childless 24-year-old myself, 14, 15 is, it's certainly table stakes at this point. Sometimes I'll eclipse 16. What happens?
I think tomorrow I am going to put on a bit of a Super Bowl in Apple. Below the 100-day at 296 with the long sitting at 335, just off the expected move. You collect 20 cents of credit, 19 cents of credit there. Something to consider. But we're getting through the bulk of the earnings season here. Nasdaq still down about 1% after those SanDisk and those Western Digital earnings came out. We'll just take a quick peek there before we log off here. 519 was the close. We're down at 467.44. SanDisk, that likewise fell down to 1,200, but it's back to 1303 here after hours from a 1351 close. You're obviously going to pay attention to a lot of this guidance if you're, something that you're trading longer term, whether or not you want to hold these stocks after their earnings. If they were earnings plays, Gus, whatever happens tomorrow, we're getting out because it's 2 days to expiration and no one wants to get assigned. So don't get assigned. I have this nightmare that I'm coming down the pipeline here, Gus, that now that I feel like I might get wheeled into this thing with the 510, 500.
I just got assigned 200 shares of TLT today myself, so I'm fresh off the assignment PTSD.
I'm already wheeling out a trade in SMH. I don't want to do this in WDC, but we'll make the best of it if it comes. Right, Gus? Thanks for joining us again here today. We're finished here. Tastylive programming continues tomorrow morning, 7:30 Central Time, 8:30 Eastern. That's how you quote that. For Gus Downing, I've been Chris Vecchio. We'll see you tomorrow. Good luck trading and hope you have a good night.
Hello, Tasty Nation. Welcome to the show. We've got a crazy day for you with a lot of earnings reports that happened after the close yesterday.